And from the NVIDIA standpoint, that is exactly what has happened. Better than expected Q2 results. It expects the fiscal 28 revenue growth of 70%. Remember, the base is not small. And this is according to CFO Colette Kress. We'll get into some more details of the numbers, but I'll take you through the cliff notes. Analysts were penciling in 44% growth in 2028, and so therefore it's a significant beat to that. The NVIDIA stock jumped 4%. It would ordinarily have gone higher, but remember, it's gained quite considerably over the last 1 year or so in the run up to the numbers, and so therefore it's not an outsized reaction. It is, of course, one of the most not expensive, one of the largest stocks in the world. Iran and Oman, meanwhile, are still working out details of the agreement on Hormuz, and that's according to reports. Meanwhile, Iran's Revolutionary Guard has called for the US to meet its conditions on Hormuz in order to have that strait opened, and only once those conditions are met, which actually harken back to the interim ceasefire. Qatar's Prime Minister, meanwhile, is set to meet with leaders in Tehran. He's set to visit Tehran to relaunch diplomacy, and this is while barbs are flying from either side, Iran and the US. By the way, Hormuz oil flows have dropped to a 3-month low, and this is visible in the oil prices as well. Though Brent crude has actually cooled further, it remains above that $86.50 per barrel mark as things stand right now. Now, in other news, internationally, you had Meta that settled a social media addiction case with California and other states for $16.7 billion. Now, this has repercussions for social media usage around the world, one would think, because a federal case alleged Meta misrepresented extent of child mental health harm caused by its apps, namely Facebook as well as Instagram. And Meta said that the settlement agreement includes payment of around $18 billion. The amount is set to be paid in installments over a 10-year period, and each party waived the right to appeal the final judgment. There's a lot more to discuss in this story, but I will leave it at the fact that the number of the settlement is not as important as the repercussions it could have, not just for Meta and its social media platforms, but the rest of social media in the US and outside of the US as well. Meanwhile, inflation is running a little hot. Key personal consumption expenditure price index has risen 3.7% in July. The consensus estimates had pegged it at 3.6%. And so as a result of which the expectations of a rate hike are hardening or increasing. That's important ahead of the Jackson Hole Symposium, where the Fed chair is expected to make comments. Finally, US equities ended largely unchanged. You had the S&P 500 and the Nasdaq that closed flat with a negative bias, and the Dow dropped about 0.2%. Let's pull up Asia as well and see what's moving. I doubt there'll be too much of a big move. You have the Nikkei that's trading more or less flat, and the Hang Seng down about 0.2%. We have the Kospi, we can pull that up as well. The Kospi is up about 1.8%. This is really expected on account of the results that have been posted by NVIDIA. Let's talk about that in some more detail. Puneet joining in to tell us more about that. Puneet, a beat on expectations and also the expectations going forward.
Well, most certainly, and we've been talking about some money that's come actually off the AI plays going into the software ones, but NVIDIA yet again trying to show that it's here, the AI play is here and it's here to stay as well. If you look at the numbers, and these are some staggering ones as well, $96 billion in terms of revenue growth, 100% growth that they've recorded, and what you will see is that the actual number versus the estimate, there is a very big difference. The actual continues to be higher than the estimate as well. Similar for the adjusted EPS, the data center revenue at $89 billion versus estimates of $85 billion, and the gross margins also at 75% for the company versus 72% earlier. I do want to talk about quarter 3 as well. This is what quarter 2 was. The company is expecting $108 billion in revenue in the next quarter. That's also higher versus the street estimates of about 104. But in terms of the gross margins, that will continue as well. And the guidance almost assumes no revenue coming in from China still at this point of time. That could be additional trigger, but certainly something to watch as well. Now, when you talk about NVIDIA, you have to talk about what the outlook is going forward. Comments from Jensen Huang, who's of course the founder of the company, were very interesting too. He feels that AI has now reached an inflection point. It is doing useful work and the tokens are productive and profitable, and now the compute is the revenue as well, according to him. He's also mentioned that the AI infrastructure build out continues to be in full steam, and those will be a theme that continues going forward as well. I just want to quickly highlight what Alex also mentioned, that at $4.5 to $5 trillion in terms of valuation, when a company comes out and says that they want to do 70% growth, the street will take notice. Of course, we saw only a 4% move, and that's because of the move that we've seen, especially in the last 12 to 18 months. And the margins could see some impact because of the higher memory chip prices. That will be something to watch as well. But the FY28 margins seen at 72 to 73% are still quite high. Finally, for just the Indian names as well, we continue to monitor the India impact as well. The global AI spending is not currently showing any signs of slowdown at this point of time for India. Hyperscalers are continuing. So you have Anantaraj, E2E Networks and Netweb Tech. All those three counters that always come in focus on the back of the AI infrastructure and the hyperscaler deals, and hence those three counters will be back in focus as well. But overall, this could be something to watch on what happens in terms of the impact on the IT stocks in India, because we saw some IT stocks run up because of the AI play being reduced in the US. Could be something to watch if that reversal happens or not, but definitely huge, big earnings beat for NVIDIA as of now.
Okay. NVIDIA President and CEO Jensen Huang had to say something about the demand and supply chain dynamics. Thanks, Puneet, for that. Listen in and then we'll move on.
We just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that.
All right. And at really important days, it's an absolute delight to welcome in Steve Bryce. He's Global Chief Investment Officer at Standard Chartered. Joins in right now, I believe, from Singapore. Steve, would I be correct? Are you in Singapore right now?
Yes, I am. Hi, how are you doing?
Very, very well, Steve. Neeraj here. Good morning, and such a delight to talk to you. It's been such a long time. So great to have you today. We're going to take some bit of your time. And I want to start off, Steve, by asking you, how do you assess the impact that global flows moving into the US towards, both on the debt and the equity side, towards the AI plays, have therefore on markets around the world? Because if people were doubting what AI plays will do, I think NVIDIA yesterday, the commentary more importantly, seems to have quelled some of those doubts.
Yes, certainly. I think there's been quite a bit of skepticism about the outlook for the AI business model, whether we're talking about CapEx plans in remainder of this year going into next year, also the profitability of those that CapEx coming through into corporate earnings. Our read on the NVIDIA earnings from a sort of broader ecosystem perspective is that this still looks very positive for the environment. We've recently revised up our AI CapEx plan or forecasts for this year and next year. So next year was $1 trillion. Obviously this year around 750. When we started the year, we're probably looking around 550 billion. And these look now, based on what came out overnight, maybe a little bit on the conservative side. So if anything, the data is pointing to this boom continuing in the near term. Obviously, that's great for the US economy. It's great for the US stock market. We're also seeing other parts of the market. So software, seeing some positive guidance coming through. That's obviously been through a challenging period this year. So from our perspective, we're still overweight the US economy, US equity market, and also overweight US tech. And we really see no reason to change that view at this time.
Steve, first of all, thanks so much for your patience as we were running through all of that news that came in overnight. My name is Alex. I want your view on monetary policy and whether you think that that's going to have a bearing on this entire trade that you just spoke about. The fact that you had the PCE number that came in at 3.7%, which was a tad bit hotter than expected, and it's also causing those expectations of a rate hike to increase. And so therefore, an increase in the yields from this point, I wonder how much is priced in already, but an increase in the yields from this point could spoil the party for AI funding.
Depends which part of the curve that you're looking at. So let's focus on the short end of the curve, the Fed decision, and obviously through the rest of this year. So markets pricing in around 50 basis points of rate limits going into the next 12 months. Our sense is actually the next move will be a cut, albeit not until Q2 next year. And the rationale for that is we see inflation has peaked in May. Yes, today's data was a little bit disappointing on the disappointing side. But overall, the downtrend for inflation is still in place, absent obviously a very sharp rise in oil prices. And we also saw the weakness coming through in the labour market. So we saw some very strong numbers heading into the Football World Cup. And we've seen some rewind or reversal of that in the latest couple of data points. So I think that's going to be enough to buy the Fed time. Clearly, Walsh doesn't want to raise interest rates. He's fighting a push amongst some areas within the Fed to hike. So you can't rule out that possibility. But I think there's just enough for them to hold on to. And I think that inflation data will reinforce that going forward.
Got it. Steve, what's your sense on what happens in the second half of the year? I presume that talking about 12 to 18 months these days is fraught with risk simply because the world is changing so much. But what happens in the second half in terms of either asset classes or markets and the relative performance to others? If you can maybe talk about that a bit.
Yeah, I guess you've got two elements, right? So if we look at the macro picture we just outlined, I think that's pretty positive for equity markets. So sense is that we do still have that overweight allocation to equities. There is, of course, the risk that we have in the midterm elections that often is joined by some increase in market volatility, but that's very difficult to time and judge exactly how severe or significant any drawdown will be. So our preference is to stay invested through this period while acknowledging that some volatility may come to pass and being prepped for that ahead of time. So yeah, we're overweight global equities. We have an overweight, to gold. So we still think that gold's going to move significantly higher in the coming 6 to 12 months. We've obviously seen quite a lot of volatility there this year, but and the weaker dollar, we see a gradually weakening dollar, sort of feeding into that. We think the U.S. Treasury announcement last week that they will double the purchases of a long end of the curve. We think that's sort of probably not going to have a dramatic effect on yields. We still think, if anything, the yield curve is likely to steepen going forward. But we see the safety valve already coming through the dollar, so gradual depreciation there. And that should support risk assets in general, but also gold as well.
So therefore, Steve, in that context, what's the view on precious metals at this point? Are you, or is the house bullish on gold even from these levels and silver at that? And also, what is the view on emerging markets, considering that all of this capital is getting sucked into the US and these AI plays?
Yeah, so I guess that there's 2 points there. So, I mean, we are bullish on precious metals, so we have that overweight to gold. We prefer to play this through gold rather than silver. Silver obviously has a lot of volatility. It's not that we're bearish on silver, but just from an asset allocation perspective, we see an overweight to gold as being strategically really important and also tactically as well. So in our long-only portfolios, we're moving to a 6% allocation there. Most people have a 2 to 3% allocation, so it's a significant allocation to that. In terms of emerging markets, so we have an overweight both in the bond space and in the equity space. So we see improving fiscal performance and debt servicing capabilities as being good for emerging market US dollar bonds. So this is bonds issued by governments. Around 2/3 of the area of the index or the geography of the index benefit from high oil prices. So that's not a headwind for this asset class. So we still feel that that's going to see strong inflows. And within emerging markets equities, we are overweight Asia ex Japan, and that fits in with the AI tech theme as well, of course, with heavy exposure in Taiwan, which is our preferred market, Korea and China. So from that perspective, we see that this consistent theme of tech outperformance, AI generation, and obviously the semicon space as being very bullish for Asian stocks as well.
Steve, very quickly before we let you go, what about India?
Yeah, so India has obviously been struggling from an absolute return, but very much from a relative return perspective. So that's been pretty disappointing for us. So we're looking at whether we should be cutting our overweight India against that backdrop. There are diversification benefits, obviously, for having India. Obviously, the growth profile from a structural perspective is still very strong, but the AI space is being played out elsewhere. So if you're really focused on AI, then the US and Asia is where that's at.
Yeah, absolutely. Steve, thanks so much as always for taking the time, and look forward to speaking to you sooner next time, and pleasure having you as always.
Nice to be here. Take care.
Okay, all right. So that's Steve Bryson speaking about everything from the NVIDIA results and the AI play to emerging markets and precious metals. Interesting points there, especially with regard to the bullishness on precious metals and specifically on gold, considering that the dollar depreciation is set to continue going forward. But let's talk about what happened in trade yesterday. It was an interesting session because what you saw in the cash window that played out on expiry day, the opposite of that took place. I'll come to that in just a bit. But you had the benchmarks that ended lower, but the broader markets gained. So the texture of the market was a little different than it was in the past. In fact, the broader markets, the small cap index in particular, ended higher. But the flows data first, you had foreign institutional investors that were net buyers of equity to the extent of about 500 crore rupees or thereabouts. Domestic institutions on the other end were also net buyers of equity, but to the extent of 6,425 crore rupees. I know this is a slightly larger amount, but it is likely, and not likely, but it is the fact that these domestic institutional flows have also been influenced by a large number of block deals. We'll get you more details of that over the course of the morning. But a very large number of block deals. I didn't see too many foreign institutional names in the buyers. There were a few sellers, in fact, from the foreign institutional pack, but a lot of domestic mutual funds that bought in those block deals that took place yesterday, as many as 7 having been done by the closing trade. The Nifty 50 dropping as much as 70 points during the cash and ending lower by as much as 0.5% or so. The Nifty 50 remaining above that 24,200 mark. Remember, that's being seen as a strong support. The Nifty Bank has gained as well, supported by both large private sector banks as well as a rally in public sector banks. After a bit of a consolidative move, Bank of Maharashtra in particular was a significant outperformer, gaining 4.8%. The mid-cap index ended flat, small-cap index gaining about 0.6%, and the market breadth edged in favor of the advances. Finally, sectorally, you had metal PSU banks that were top sectoral gainers. IT was the biggest loser, down about 1.5%. That trend may continue today based on what you saw overnight. Consumption, FMCG, realty, auto, all also declined. The question is, what do we do at the start today? Neeraj, we've been consolidative, VIX has been very anemic, and so I don't know whether that's going to be broken out of today.
Yeah, it's very curious. Just when you think that the markets could actually do well, they're giving a start which is not very great, because I personally thought that the falling oil prices would actually give some tailwind to Indian equities. Let's wait and watch if that does happen, or there is a bit of a lag to it. But frankly, the bugbear for Indian markets, you could argue, will be that the rising instances of the blocks which limit upsides and just, I mean, we'll talk about it, but just the quantum of stocks which have a large block deal today is very, very high. 4 or 5, if I'm not wrong, which will have large block deals, and then there are IPOs and the 2 mother IPOs yet to come. The same thing that we spoke about yesterday, but that kind of has a problem. However, the good part is that while that may limit the Nifty upside, small caps will still be very, very active, and you will find your stocks which are gaining 20, 30, 40% from here towards the end of the year as well, based on earnings or flows or otherwise. And I think metals are probably giving an opportunity to go along at every dip. Think of this. Rebar prices have staged a 13.5% recovery from the July 26 trough. It's not even been a month, and we've had rebar prices up 14%. And then, therefore, if you don't believe that steel numbers will go well, then, well, the problem is in your analysis. So keep an eye out for some of the steel names, in particular, ferrous and not necessarily non-ferrous. Sure, non-ferrous like Hindago, etc. may do well, but I'm right now talking about steel, and keep an eye out for some of those. Well, that's the trade setup for the day. Let's take stock of the derivative space. Puneet is joining us to tell us what the Qs are indicating. Well, Nvidia was strong. Our FNQ is looking okay too, Puneet.
Well, similar, sounding like a broken record that, you've seen consistently being in this range all throughout the August series. As we get into the September series, you will be watching out if we can break through from this, and what would be some of the key triggers. Likely to be more sentimental than anything else at this point of time. You'll of course see IT being in focus today on the back of Nvidia earnings, but the Jackson Hole Symposium continues to be one that's watched across the world for any kind of comments as to what could happen with any potential rate hike, if not in September, if in the next one too. That continues to be one of the biggest events that starts today, so you will have that impact over the next couple of days. On terms of the spot market, 24,200 is where we ended. Similar for the Bank Nifty as well, 57,700, and we've consistently highlighted that the 58,000 mark is one that you want to conquer and then move forward. We haven't been able to do that, at least for now. Something to watch going into the September stage. The cash market has been the only positive in the month of August. From the FII perspective, there has been some buying after a really long time, months where there have been sellers in the cash market, some minuscule buying but visible as well. And the index long too, we started off August at 10 to 12%, moved on to 15%, and then came back down yet again in the last 4 weeks. So if September will be different, will be another one that we continue to monitor as well. Now, these are not impressive levels at all. There's still 90% positions in the short side, but it's still something that we monitor if there's any move on the longs. Some moves visible on the open interest distribution though. 24,300 to 500 has seen the big green candlestick come through. Reduction in the put open interest as well. So new positions visibly on the long side for now, but very, very in that range as you continue to watch. So that's the picture for the F&O side as well. You are seeing a lot of action on the small cap side, but hopefully the range will be something to watch based on global factors, sentimentally or otherwise.
Thanks so much, Puneet, for that. As of now, though, you have an indication of a negative start for the benchmark Nifty 50. It is down about 70 points or thereabouts. Let's pull up the implied open just to drive home that point, and then we'll move on to individual stocks. There you go. So 70 points for downtick seen today. Let's see if it changes over the course of the next 40 minutes or so. Let's talk about stocks, and I've got Bharat Electronics on my list. The company announced that it's received additional orders worth 730 crore rupees since the last disclosure on the 10th of August. It generally does this on a fortnightly basis. Macquarie has weighed in on that because there's no real detail on what these orders are. Important update though from Macquarie. They maintained an outperform with a target price of 550. They say that the new order secured a 730 crore rupees, but they're talking about FY27 to date secured new orders of as much as 6,200 crore rupees. This is down 45% from the 11,200 crore in the same period last year. They attribute the decline mainly to the timing of the order bookings. They see 55,000 crore rupees of new orders in FY27. Important to note, the order backlog stood at 72,300 crore rupees at the end of the first quarter, and that, according to Macquarie, provides strong revenue visibility going forward as well. So the order book is strong. The attention will turn to execution and revenue booking. Keep an eye on this one today to find out how it reacts. Pine Labs is the second stock on my list. This is on the back of an initiation of coverage by Investec, and I think there are more people that are now talking about this stock. Investec has initiated with a buy and a target price of 200. It doesn't imply the biggest upside. What are they saying? It's creating value beyond swipe and more than a payment acceptance provider. The leadership in a growing prepaid ecosystem is visible. The mix shift in operating leverage is driving profits. The MDR on UPI is a potential profitability booster. So this is something to watch out for. The stock has been gaining. I wonder how much it's gained in the year to date and then also the 1 month chart, if we can pull those two up for Pine Labs just to see how it's done. Year to date, it's not done too much, down in fact 30%. And in the month so far, let's take a look at the last month or so and see what it's done. It's not done too much. Actually it has 14.5% or thereabouts. All right, Angel One. Now this is one of the stocks in the capital marketplace that is has a few question marks with regard to the initiation of cash, and that's exactly what Investec has pointed out to. They've maintained a buy, but they've cut their target price to 350 from 385. They say that valuations reflect a temporary cash shock. The sharp fall in derivatives activity post implementation of cash is relevant with regard to the earnings. They say that they cut the revenue and net profit estimates by 4% and 9% respectively over the course of FY27 and 29. I don't know if it's a little too early to judge, but at least for now, the volumes and the amount of stocks traded during that cash window is pretty small. For the NSE as well, you're talking about 1,300, 1,500 crore rupees, and it's not very large. And you're hoping that this would increase. It hasn't yet.
Yeah, but maybe early days.
It's early days. That's the point.
I think it'll go up. The vibe that we give for Alex's watch list needs to change. It needs to now have Alex with the beard.
It's too early. It's too early. Maybe it'll change next week. Who knows?
Yeah, who knows? Okay, my top three on my watch list. The first one is Foseco. There are 2 or 3 blocks really. So there is Foseco, and then there is ICICI Pru, and then there is I Finance. But I'm choosing Foseco because it's a large stake sale, 15.27% stake. And remember, the stock was up 8% yesterday. So curious that just ahead of the block deal, the stock was up 8% because there's no visible triggers otherwise. So curious moves, of course. But the floor price is 5773.63, roughly a 5% discount to the current market price. Mild negative, I believe, downside risk of 3 to 8% or thereabouts if the demand is weak. But if the demand is strong, then maybe it's not as bad, because remember, Q1 FY27 revenue and profit after tax for Foseco has strengthened. Company is nearly debt-free, strong ROCE, ROE profile historically, clean balance sheet as well. So maybe it does not see too much of a correction. Let's wait and watch. Juniper Green, their Q1 numbers, revenues were up 81%. EBITDA 89%, the margins therefore at 89.8 versus 85.9 thereabouts. Net profit though up 54%. Healthy number, not as strong as the revenues, and there was a reason for the same, because while the numbers look very solid, the profit after tax growth lagged due to elevated finance costs and depreciation from the expanding asset base. Finance costs for the company roughly doubled to 176 crores from nearly 79 crores. But the good part is that it's the largest quarterly capacity addition in the company's history. The cumulative operational BESS capacity went up to 503 megawatt per hour, and the operational renewable capacity went up to 2409 megawatt P by the quarter end. And they've added some more post that as well. So I think Juniper Green is hitting the right notes. Last but not the least, Rubicon Research. A lot of block deals happening, but I thought the nature of the buyers in this one was very interesting. So GA, of course, sold 8.43 lakh shares to Aranda Investments Pte, and then some more being sold to a clutch of mutual fund buyers, which is HDFC Mutual Fund, ICICI Prudential Mutual Fund, Kotak Mahindra Mutual Fund, and SBI Mutual Fund. Think of it, largely the entire quantum was lapped up by the top 4 or 5 mutual funds. It didn't percolate to the smaller ones also. So it just shows the demand that was there for Rubicon amongst some of the others. Viyash didn't quite have that luck. Rubicon did. So, well, let's see how that one reacts today. Top 3 in my list.
Yeah, okay. So quite a few stocks, and we'll get a few more. But by the way, we started the show today talking about the implications of the floods and the damage in Nepal, and that's a humanitarian angle. There is also an economic fallout, and to a certain extent there are Indian companies that also stand to lose on account of this, and nobody is going to forget about the humanitarian angle, but we thought that it's important to also point out the commercial or economic angle. And to do that, let's go across to Sharad. Sharad?
Well, yes, before that, I just wanted to say a little bit in Nepali, actually, and that's a very interesting take. Nepal को पूरे पब्लिक ना इम्पोर्टेंट बात कहंदा द मोस्ट इम्पोर्टेंट अपॉर्चन और श्रद्धांजलि आपने उधर गर्दई छु. Now that means we are giving peace and a lot of offerings to the Nepalese people, but this is a very important economic segment also which we need to focus on. And let's get the entire picture. The visuals are kind of dangerous, but remember, overall there is a minimal impact on the Indian listed space. Today, keep hydropower and FMCG companies in focus. Today, there might be a knee-jerk reaction coming in. India is Nepal's largest export destination. Looking at the numbers, overall, almost 68% of exports just comes from Nepal to India, and this is a very big number. Also, let's look at the key details about how this trade actually pans out. What is more important? This is the most important thing, hydroelectricity. Also, of course, we have FMCG and consumption names also, but this is a very minor segment to actually look at. Let's look at the imports also, what's happening there. Largely, it's handicraft, so it's not much of an economic impact coming in. But also, let's understand these segments, the fertilizers and the petroleum products. But let's look at the other segment, that's the hydroelectric segment. That is where a lot of tie-ups are happening, especially NHPC and GMR Group. These are the imports also I would like to point out. But let's move on and go ahead to see the other impact also for this Nepal food flood crisis. And this is it. This is the overall export power coming in. Remember, all the power from to Bangladesh actually goes through India as well. So this is very much important. Large conglomerates are having JVs with Nepal government. And this is something which we talk about. But moving ahead, apart from these power linkages, also let's look at the stocks. Stock specific moves, or you could say the reactions which could come in. If you could move ahead faster on this, and we need to show you the stock specific moves, actions, and these are the ones you should have a look at. Bikaji Foods interestingly has a JV with Nepal's Chaudhary Group as well. And also we have the FMCG stocks and the large conglomerates having small group offices here. Also moving ahead, apart from this, largely we have your Dabur ITC, Marico and Imami having this exposure, and even last year Reliance entered through its brand Campa as well. So largely it's a minimal impact, but do look out for NHPC and Imami.
All right, thanks so much, Sharad, for that. Let us know what you think. And in fact, of course, our thoughts and prayers once again with all of the people in Nepal at this moment. We have to slip into a very quick break, but on the other side, we talk about trade strategies ahead of the start of trade today. Stay tuned.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ। इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividend we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
Welcome to India's biggest grassroots innovation movement.
Good morning, you're watching India Market Open, and this is the part of the show where we talk about ideas this morning, and boy are we in need of them. 71 points down on the Nifty implied, and we have Kush Bora and Parag Thakkar in our studios. Gentlemen, good morning to you. Before we start, just a thought that's coming to mind, because a lot of chatter that I am seeing and hearing is, till you don't have this last 15-minute cash volatility sorted out, people are a little cautious about what they want to do in markets all over. This is a bit of a dampener, isn't it?
First up, a very good morning. In all honesty, I thought that after the first week's experience, this might perhaps be relooked. Let me just put it that way.
Impossible.
That's what I feel now, and hence I've been advising viewers ke participate hi mat karo. That's the best way you can go about it. But it is a bit of a dampener. Was it really needed? I am not sure. But what's come out, I think, will still need some tweaks. The best thing is to not participate right now in the cash system. And yeah, it is causing a few jitters, especially on those expiry days. So
Which is one today as well, Sensex expiry.
Okay, so one is that cash is a dampener. You're saying don't participate in the closing session, but then now what do you do in the markets today?
Participate in stocks. We've been giving you so many ideas, and they've been working so well, touchwood.
Index view se shuru
By God's grace.
Avoid karo, by God's grace. Rab di meher hai. No, avoid na. Nifty to baat karke matlab nahi hai. Pichhle 2 hafte se same hi kar raha hai.
You are not going to give a Nifty call only today.
I'm not going to give a Nifty. In fact, yeah, very rightly identified. I was going to start only with Bank Nifty. That's where the action is. That's where you've got some momentum going.
Yeah, I mean, now this is a statement, because okay, I understand Nifty has not really been exciting, but for our technical analyst to just say I'm not even going to bother giving a Nifty call is quite telling.
पैसा बन रहा है क्या? बैंक निफ्टी में नीचे में लिया होता तो कल पार्शियल प्रॉफिट बुक कर सकते थे. You are not making any money on Nifty right now. मतलब वही रेंज 24,200 गिव और टेक 50-100 पॉइंट्स हियर और देयर चले जा रहे हैं. At best what you can do is range play. जब तक 24 प्रोटेक्टेड है तब तक नीचे में बाय करो. 24,200 250 300 के आसपास बेच देना. बट मजा नहीं आ रहा है, राइट? सो एंड इट्स नॉट मेकिंग मनी. दैट्स व्हाट आई मीन बाय मजा नहीं आ रहा है. इट्स नॉट लाइक पर्सनल,
It's not just technicals, it's also long-term portfolios. You're not making money if you hold the Nifty 50.
100%. Let me give you an example. No, the heavyweights aren't doing much. I mean, yesterday, day before, we gave a call on LNT, right? उसमें भी profit booking आ गया. So the large caps are either not moving or moving and seeing selling pressure at higher levels. So then मना करके भी we've spoken enough and more about Nifty. Let's talk about Bank Nifty. Here too, there is momentum but lack of follow through. Remember yesterday we spoke कि अगर चला तो यहाँ से 59,500 60,000 भी जा सकता है. I will take each day as it comes. 58,000 is still a resistance. By the way, in a very long time, I am seeing a straddle on Bank Nifty at a 500 multiple. Usually you get these on 1,000 multiple. So 57,500, that pivotal level that we've been speaking about for 2-3 weeks now maybe, right, has a very strong straddle premium, 1,500 points. So do your maths, right? On up and down, you've got the range. By the way, the PCR on Bank Nifty is 1.16. So again, very close to overheating, not there yet. तो हो सकता है आपको थोड़ा सा selling pressure मिले. If HDFC Bank doesn't really participate, then a big move will be difficult. I mean, ICICI and SBI will have to do the heavy lifting, and there too you're seeing some profit booking. So a range play on Bank Nifty as well. Closer to 57,000, 57,500 you can buy, and then 58,500 you sell. So Bank Nifty, still some excitement. Nifty a very clear avoid.
And stocks, which you started by saying we are giving so many stocks.
You know what? I'm giving just 2 stock ideas today because I have updates. मतलब इतना सारा updates है कि उसमें ज़्यादा time निकल जा रहा है.
तीन दिया था आपने.
Correct. And last week we spoke of what? GNFC, MM Forgings, Gokul Agro, Jaiswal Nico, Phoenix Chemicals, all stocks that moved 5% or higher in a single day, right? A similar follow-up, by the way. First, let's start with the picks. Happy Forgings and Vintage Coffee. I think I spoke about this stock a while back, very briefly, but not as a call, right? So Happy Forgings, by the way, very good momentum. It's got a very strong uptrend. Couple of days of profit booking, that's all that I was looking for. So good entry point, 2280, 2365, these are your targets. 2100 is where you keep that stop loss. Vintage Coffee, I might actually buy and hold it for a much longer, I buy as in viewers can. So for now, you just play the momentum for targets of 170 and 175 with a stop loss at 160. But this is shaping up well, might turn into a medium term call as well with bigger targets. Quick updates, sale. अब तो profit book कर लो. The stock's actually gone into an F&O ban as well. This was the only pick that I had in the metal space, right? So book this. IOL, we discussed this as a call yesterday. Target 1, target 2, all achieved. You might want to book it if you got an entry into it because opening gap up हुआ था. And then Timex, Vishnu Chemicals and Glenmark Pharma. These 3 stocks hit target 1, book partial profits, bump up your trailing stop losses to buy price. And one quick update. DCB Bank. Guess who's smiling? The gentleman to my left. What a call. जिस दिन उन्होंने बोला उस दिन से I think there's been an uptick. So fantastic spot on DCB Bank as well.
Thanks.
By the way,
Finally something.
I think you had,
Cements also we had a rally.
No, but because Kush mentioned sale, I want to take it to Paraguay. Paraguay, rebar prices are up 15% from the July lows. Is this fundamentally a prudent time to sell a steel stock or ride the momentum?
So as I said, I have been holding on to only one steel stock, which is JSW
No, which
Steel.
is fine, which is your portfolio.
But by my sector wise, I would say that, the one after the H2, the steel demand really picks up in India. So the price hikes are very timely. Right, that now from here on you will see increase in demand, so price hikes can be absorbed. And on the other hand, on the input side, coking coal costs have gone up. They are at $260 now. So in order to protect the spreads also, steel companies will have to take some price hikes.
Okay. So therefore the question is that it might not be a good idea to sell steel. Kush is right technically. He's given a call, he's seen the levels, he's booking profits.
Yeah,
fundamentally.
But see, I will agree with him because yesterday if the stock was up 5% and today there is a news that they have increased the price by 1,000 rupees per ton, I would agree.
Take money off the table.
I would also agree with that.
Okay. Okay.
The other big story that I think we should talk about is what's happening with HDFC Bank and a flurry of stories over the last few days. Add to all of this that no decision yet. I think that's really the underlying worry, that whatever it is, as your time comes closer and closer to a sort of a deadline to knowing who will keep running the bank, and you want that continuity. You're wondering why it's taking so long. But even so, here's the latest. HDFC Bank faces a US class action lawsuit over allegations of disguising interest payments to MSRDC as marketing expenses. Nimit joining in with more details. Nimit, what is the class action suit all about?
Yeah, so the class action suit is actually about 3 things. An underlying transaction that we'll discuss for 45 crores, the non-disclosure of that transaction, and then the loss that is alleged to have happened because of that non-disclosure. Now the transaction itself, firstly, very important to note that the lawsuit by a US investor names HDFC Bank's CEO Shashidhar Jagdishan and CFO Srinivasan Vaidyanathan. Now what the transaction is, firstly, the transaction was disguised at a 45 crore payment made to Road Transport Agency in Maharashtra, MSRDC, as a marketing expense. Now what the complaint says that the HDFC offered MSRDC 6.01% interest on a deposit. Now this is about 2.51 percentage points above normal rates. The complaint said that HDFC allegedly routed the extra interest through a marketing spend and a road safety campaign. Now what specifically is said is complaint alleges that senior HDFC officials approved the arrangement despite regulatory and internal policy restrictions, HDFC CEO Shashidhar Jagdishan allegedly participated in discussions and verbally approved the payment arrangement. Now, this is what the complaint says. Now, talking about how this was non-disclosed. This is very important for a class action, right? It's a lawsuit alleged that HDFC concealed the arrangement while telling investors.
Yes. I'm just going to stop you there simply because that the details of this case, which you are recapping, and that's very helpful for viewers, is widely known because this is what HDFC Bank has been looking at very closely. Explain to us why now a bunch of investors have gotten together and filed a suit in the US, and what are the implications of that? Because in a very litigious place like the United States, it's quite common, isn't it, for investors to come together and file a lawsuit. Appreciate you giving the details of the case as it's known, but for the paucity of time, I think we can show that in graphics, and a lot of people are aware of that detail as well.
Yeah, so okay, I'll come to that point. So what that's about is, firstly, class action litigation in America is a routine process. It's led by law firms very often because law firms have a business of this. They make money out of this. So they solicit views and investors who want to then come forward and share information. So this came out about a month ago, where we also reported that a bunch of different law firms are looking at the HDFC non-disclosure case, and finally they seem to have got investors that are interested, and they filed this case. Now, what this case means is that firstly, it will have to be determined by a judge there whether a class action can be put through for this, and then whether a jury trial is required or not. That will be the next stage of this procedure specifically, and if that is put through, then it will have very serious implications, as the examination will be done on merits.
So okay, let me just recap. So a court actually has to accept this and want to put it to trial for this to be a real pain point for HDFC.
It is a pain point, of course, and courts tend to, but it will be a much bigger and very serious pain point if a court then accepts this as a class action.
Got it. Thank you so much, Nimit, for joining in with those details. I want to ask a quick view from Parag Thakkar, and let's pull up the 3-month HDFC Bank chart as well, because something needs to change. Fundamentally, something needs to change, because beyond the point, the fact that it's a strong franchise and it's a great bank and it has pedigree, it's not working anymore from an investor perspective. Do we have the 3-month chart? We can show that as well. So what do you think that thing is?
So I think this is a same case, right? For this case only, this entire thing happened, and so on and so forth. So US class action is a common thing, as Puneet also said, right?
That's Nimit.
Nimit, sorry. And so now whether it takes a further more serious shape, I don't know. But I would say that yes, it is a negative in short term. And as they say, when it comes together. So everything it is a perfect storm for HDFC Bank, and it will take a slightly longer time for them to come out of it. But I'm reasonably confident that the valuations at which it is available, such a kind of franchise, I think long-term investors at least should not right now sell. I cannot recommend to buy right now very aggressively, but in the middle of all these things, but it is not a sell. If you hold it for 1 or 2 years, I think from here on it will make money. And overall, banking as a pack, yesterday also we saw very good moves in ICICI, Axis, Kotak kind of names, because banking is doing extremely well on the credit growth side, asset quality as we discussed, and now this FCNRB will further increase NII growth and credit growth for them.
By the way, do we have, actually, why don't we go to Soumit Sarkar first, because he's waiting by to tell us about what he's hearing on the dealing room front, but we'll come back to the banks in just a bit. Heard on the Street is up next, and Soumit, good morning to you. What are you picking up?
Well, good morning, Alex. Firstly, it's Capacit Infra. Now, dealers are indicating that there are buy flows on the PMS desk on this count, and they're expecting some positive news flow that could come in here. There's also a possibility of a large order win that could come in for Capacit Infra. For Ashok Leyland, there are buy flows on the large HNI desk. Dealers are expecting strong August sales number to come in for Ashok Leyland. For Vimta Labs, the buzz on the street is that there could be some M&A activity here. The company could be an acquisition target is what dealing rooms are indicating. For Zydus Life, there's a buzz of some announcement that could come in related to some acquisition. The company might acquire either some drug or some company is what dealing rooms are indicating. For Virtuoso Opto, the stock was up nearly 17% odd in trade. There's a buzz of a potential fundraise via preferential issue that could happen in this counter. And lastly, when it comes to ITC and Apollo Hospital, there are buy flows on the institutional desk at lower levels. Both foreign and domestic institutions were accumulating this counter in trade yesterday. And a couple of other stocks which we did mention yesterday, Viyash and Rubicon. In Viyash, we did mention that the promoter was looking to sell stake, and yesterday Carlyle was the seller and the demand was quite weak. And in Rubicon, we did mention that General Atlantic, the promoter, was the seller. And if you look at the bulk and block deal data, General Atlantic name has appeared in the seller list, and the demand was quite strong, and it was subscribed largely by mutual funds and largely.
Got it. All right. Yeah, absolutely. Quite a few mutual fund buyers there, Somit, in the block deals that took place yesterday. The likes of SBI, the likes of Invesco also, I believe, was a buyer in one or two of them. But we were speaking about banks, and my colleague Piyush Shukla has actually pulled up an interesting piece of information on Axis Bank in a meeting that he did yesterday, and he's saying that Axis Bank, this is interesting for you, Parag Bhai, to talk about, because he's saying that Axis Bank is targeting a 1 lakh crore mid-corporate book by FY28. It's saying that 1 lakh crore okay, so that's one. The second thing is that the wholesale banking segment is set to grow fastest among the other segments. They plan to grow the wholesale bank book by 30 to 35% year on year. And beyond that as well, they say that they've discounted 3 lakh crore of invoice using in-house trades platform. Anyway, the most important thing is that the ROA in wholesale banking business is at over 2% and the credit cost is near zero. So if you're talking about 30 to 35% growth in wholesale, you're talking about significantly better than system. System is at what, 15, 18%?
Yes, so system is at right now at 17%.
Yeah.
And Axis Bank has clearly said that they want to grow at 300 bips more than the system.
But that's at the whole loan book,
not at
right?
the corporate level.
Wholesale, yeah.
But they are right now mainly growing wholesale book, and retail disbursements are also picking up. So in future, retail will also pick up. So in my view, and this for a bank like Axis Bank, these FCNRB deposits are very, very important because it's a bank with about 90% CD ratio. So they were much more starved for deposits. If they want to grow at say 17, 18, 20%, they want that deposits, right? And this FCNRB is coming at 6.4, 6.5%. It is a 3 to 5 year money. So it is slightly long term, and most importantly, it is coming at a time when interest rates are going to go up. So you have to pay now fixed rate, which is 6.4% for 3 to 5 years, and you will get higher spreads when RBI will increase the repo rates. And that is why I think Axis Bank yesterday also reacted positively. And I think that is a big picture for all banks, actually, in my view, because you are getting long-term money at a fixed rate for 3 to 5 years when interest rate cycle is going to turn. And any increase in the repo rates will increase margins for them.
I have a question, Parag Bhai. So let's forget your portfolio. All right, this is not your portfolio, but if you had incremental capital to put into a set of private banks, and if you had zero exposure, what are the top 3 bets that you will take?
So ICICI, Axis, Kotak.
That's how you will put in 50, 30, 20. That's how you would do?
Yeah, that is
50, 30, 20, ICICI, Axis, and Kotak.
And
No
these are
HDFC
actually
No HDFC Bank.
And no SBI.
I have, but
No, not your portfolio. Not your portfolio.
That's why I told you. That's why I told you. Because he said that there's no portfolio discussion.
But look at the gains.
No, what I meant is because you have ICICI Bank, so you may say that
ICICI Bank is my top holding for sure.
But for people who don't have it, you are saying this is the allocation.
ICICI Axis Kotak.
That's what I meant.
So by the way, look at the gains yesterday, right? For Kotak Mahindra Bank, 3.76%. We just saw the chart from yesterday. The other, it was actually very interesting because what we're discussing on the table on the fundamentals with regard to the private sector banks is playing out even as we speak, because HDFC Bank ended flat yesterday and the other private sector banks gained.
Yes.
What's the charts looking like?
I think it's in a very, very, very long time that I'm saying that Kotak is looking better than Axis on technicals.
You had a long on HDFC Bank, right?
Okay, by the I still do. The setup is still the same, and I did also put a caveat कि कोई momentum नहीं है तो मेरा भी patience test हो रहा है. But जब तक मेरा 699 का stop loss maintained है, I will say stay long because technically HDFC Bank.
अभी HDFC की बात हो रही है.
800 plus 825 plus kind of targets still intact.
बहुत पेशेंस टेस्ट करेगा, but I still remain until that 699 stop loss is intact. But from a near-term perspective, you're right. Kotak actually has a better technical setup than Axis right now. So maybe if you have, you can hold. I wouldn't buy right now because there's a massive call congestion at 420. So about 425, 428 तक जा सकता है, and that's when you want to start booking profits. Axis, I don't want to enter right now.
Okay, I want to talk a bit about Polycab. BofA has initiated a buy on Polycab with a target of 11,000. Steady structural compounder is what they say and how they describe it. They say it's an industry leader with the strongest competitive position. 5 moats underpin the market share, margins and returns. Competition risk is real but overestimated. BofA has also initiated on KEI, so we'll talk about the whole space together. They've initiated a buy with a target price of 6,300, saying it's a growth leader, fastest growth player in the wires and cable space. Competition risk is real but overestimated in our view. Upside moderated post sharp rally year to date, yet attractive. Now let me add to that a view on the wires and cable space, Parag Bhai, because we know that a big player, a conglomerate who has entered paints relatively recently, is now looking at wires and cables. We can actually expect the announcement in the next few days.
Correct.
So how do you look at this entire space, and will you see that initial bumpy ride which we saw for other paint companies when the same player entered?
Yeah, correct. So I would say that I am not a fresh buyer of wire and cable stocks, purely for the reason you said. Stocks have done very well, although the Polycab, I would say Polycab, KEI, all, even RR Cable, have demonstrated phenomenal earning growth. And execution is superb, and industry tailwinds were also fantastic. So I would say that this is an industry which has done extremely well, and so has attracted new competition. So I would not be very enthused about it, and buying at this price.
The beauty about a Polycab, for example, the same thing happened to Asian Paints. Excess competition, the stock got hammered. The same thing happened to Polycab. Polycab went down, I think, to 4,700 or 4,800. From there, it's come back to 9,000. It's nearly doubled in the last 12 to 18 months. I don't know, remember the exact period, but somewhere around that, right? So it's been a beautiful recovery for some of these stocks, which I think what Parag Bhai is saying, that it's rallied a bit. The question though, is Kush, very quickly, and I want to talk about Tata Power before we hit that break, but very quickly, a Polycab or KEI on the charts?
KEI is preferred, and if you do enter 53, 500, that should be your stop loss.
Okay. Okay. No, but I want to talk about one stock which will actually have an overhang today, very likely.
Yeah.
And that's Tata Power, right? Because what's happened is that the Singapore court has dismissed the challenge by Tata Power and ruled in favor of Kleros Capital Partners. Now, just for context, viewers, and I've written down here that in 2013, the companies had jointly bid for a coal asset in Russia. The legal overhang, now that this has been adverse ruling, has worsened. But Tata Power losing its challenge in Singapore, the adverse award comes meaningfully closer to enforceability. And I think the numbers, because of the interest, the bear case liability is now estimated at $640 million. This should bring about a reaction which is negative when it comes to Tata Power. So expect that stock to react negatively today. But Parag Bhai, a stock which literally hasn't done too much, right, relative to maybe some of the other power names as well, now has an adverse ruling, will start off lower, I would believe. Is that an opportunity, or would you leave it alone?
So basically, I know you have explained very nicely the entire issue which had happened, and if it is going to be such a big penalty, it is working out to around 6,000 crores, right?
A bear case.
Bear case. Then it's really big, and then stock can stay there, fall and then stay there also. I don't know. But this is a basic problem with any companies where like Tata said, this JLR thing, when you go and acquire assets outside India and you face this kind of issues at some later point, anyways your ROICs or ROCs of that particular businesses are not that great. These are typical risks, which corporates take, but for investors it becomes painful.
Yeah, for the Tata Group right now, they did not really need this, with Tata Power coming in as well. Watch out for Tata Power, and we'll have to wait and see how that case pans out. Now, meanwhile, the supply spree continues with a bunch of block deals lined up today and several done yesterday. Shivam joining in with all the highlights.
Well, yes, the first stock that might see a block deal today is ICICI Prudential AMC, in which Prudential Corporation Holdings is likely to sell up to 2% stake, and they are selling around 98 lakhs shares. Also, in the offer price is set at 2900 to 3100 range. Price per share, and which represents around 2 to 7% discount on the stock's previous day closing price. Also, the offer size that is sized at around 2900 to 3100 crores. Now, second of this, the AI Finance, the Alpha India Web is about to sell a stake of around 7.8%, and the total block size of the deal is around 320 crores. And this block deal is likely to happen at a 5.5% discount to the previous day's closing price at 167 rupees per share. Last one is the Fosco India, in which Morganite Crucible and Morgan Terrasen are likely to sell at 15.2% stake via block deal, and the deal size is at 664 crores, and which is likely to happen at a discount of around 5% to its previous day closing price at 5,773 rupees per share. Now, few of the notable block deals that happened yesterday includes Grow, in which the Rebit Capital entities have sold around 11.3 crore shares at a price of 196, and the total value of this deal size stood around 2,200 odd crores. Physics Wala, that too has seen a block deal happening from Lightspeed Opportunity Fund, in which they have sold around 4 crore shares, and the deal size was around 549 crores. And also Wellspun Corp, that has also seen a block deal of around 1,400 odd crores, with Wellspun Investment Commercials selling the shares.
All right, thanks so much for that. Quick view, Parag bhai, quite a bit of supply coming through the market, and we were talking about this earlier as well. This could be a dampener.
Yeah,
we're not even seeing the largest IPOs come through yet.
This is a dampener. OFS, QIP, IPOs. This is a dampener because it actually takes away already dull secondary market. But of course, ICICI Pro AMC is a good opportunity, very good long-term compounder.
अगर गिरेगा तो
हाँ गिरता ही नहीं
Yeah, but I think this just reinforces what Kush was making the point, that it will effectively mean that the Nifty stays completely flattish or even has a small downward bias, but broader markets will continue to be active.
Saw that yesterday.
Yeah, I think that is what will happen, because the paper gets absorbed, the capital gets absorbed in paper, and therefore it doesn't come to the Nifty 50. But well, it takes very little capital to move a small cap name, and therefore that's where the activity is likely to be centered. Let's bring up Tata Power and see what's happening. In fact, some of the key movers in trade or potential movers in trade, let's just try and see what's happening to some of those. So Tata Power should come up on your screen. That one, well, not quite in terms of reaction. For Seco, which was up 8% yesterday ahead of the block deal, it's very curious that without any triggers, it was up 8% yesterday, and the block deal is now today a 5% discount. Not much reaction. IF Finance and ICICI Pru are the other two. SAIL has increased the prices by 1,000 rupees per MT, and both Parag Thakkar and Kush Bohra have said that it might be a good idea to take money off the table in this one. And railway stocks, government will quadruple high density railway network. So the Titagar, Texmacos of the world could be interesting as well. And lastly, guys, two very interesting purchases. Rubicon, like we said, a lot of powerful mutual funds. The top four got into Rubicon in the block deals yesterday. You didn't see this with Viyash Scientific. It was not lapped up by the top four. It leaked to a lot of others, but Rubicon was lapped up very, very well. So it could be interesting to see.
Yeah. Ventive Hospitality, once again, looking interesting. So are Devyani International. I remember that Devyani and Sapphire had an announcement on their scheme of arrangement. Devyani International now about 3% up this morning. NetWeb Technologies, Birla Soft, some of the other ones that are moving, but no massive moves, I would say, overall that are being seen. Imami, Swiggy, etc. are doing decently. I want to get a view on Swiggy on the charts, because this has been a slowly but steadily improving kind of a situation on the charts after being down in the dumps for a while. Maybe after they've got their agreements in place and all the permissions in place to become a wholly owned Indian company and then go into an inventory-led model. But what are you seeing?
Yeah, still I wouldn't bet on this. You're right that there has been an uptick. There will definitely be a breakout above the 295 mark, but then you hit the 200-day moving average resistance at about 305, 310. So unless you get a breakout above that, a sustained close above that, is when you want to consider. Not now. If I can just take 30 seconds, quick word on Devyani and Sapphire. even we on the show had discussed that, these are the two stocks that you should focus on from, this space, which is moving up after a while. But hathi nikal gaya, abhi pooch mat pakadna. So if you have a position, it's better to book right now, buy on declines, don't enter at these levels. Although it might seem ki bahut zyada gir gaye hain, room hai, but you want to buy these on declines, not now.
Okay. What's happened is that they have revised their proposed merger scheme between Devyani and Sapphire. So they're still going ahead, but some of that detailing will change. Their promoter SFML will join the merger on the same terms as other Sapphire Food shareholders after its planned 18.5% stake to Arctic International was terminated, which to a split screen. So Devyani doing okay today. Sapphire is mildly down. But remember, this is the pre-open session, so a lot can change in the next few minutes. Shrikant Chauhan, Executive VP and Head Equity Research, Kotak Securities, with us this morning. Shrikant, very good morning to you. Let's get a nifty call. Do you have a nifty call?
Good morning, Tamanna. Good morning, Neeraj and everyone. So for Nifty, we are of the view that the market is holding above the level of 24,100, 24,000 since last 4-5 days. And of course, at higher levels, we are seeing some selling pressure, or maybe my market is finding difficulties to move ahead. But at lower levels, definitely the market is having support. While looking at private banks, while looking at the performance of other sectors, we are of the view that 24,000 going to act as major support for the market. And today, like yesterday, it closed at 24,200, but again, it is opening at somewhere around, let's say, 24,200, 250. Then there, certainly we should look for taking some long bets. Here, I think we have to keep a positional stop loss at 24,000, because on a day-to-day basis, it is very difficult to maintain specific stop loss. So it is better if we keep a stop loss at 24,000 and hold long positions for the target of 24,500 again on the higher side.
Got it. Individual stocks that you're liking this morning though, Shrikant?
Yeah. So in that space, we are focusing more on auto companies, because again, the month end is coming and approaching, and we can see some activity in auto companies. So in that specifically, we like Hero Motors. There we saw some correction from the highs. Currently, it is around 5,700 sort of levels. From here, we can keep a stop loss at 5,590. And again, on the higher side, the stock can move towards 5,750 or 5,800. So there we are bullish. We also like a few pharma companies in that, specifically this CDMO related companies. In that, we like Sai Life, which was around 1,450 yesterday. There also, we should look for taking long bet with a stop loss at 1,420. And we can expect 1,525, 1,530 on the higher side. So Sai Life as well as Hero Motors should be on the watch list for the day.
Shrikant, we were having a conversation about Devyani International just before you joined. The stock is up quite considerably over the last month. In fact, while Shrikant is talking about it, just pull up that chart. What's the call on the charts for the future?
So for Devyani, I think the way it recovered from the lower levels, and it has broken the important supply zone, which was around 130, 140, 145. It is holding about this particular level since last 3-4 days, which is positive. Based on that, we may see some minor correction, maybe again close to 135, 140. But eventually, I think the stock is heading for the levels of 171. Maybe 190 on the high side. So ideal strategy should be to buy on dips. And I think this space is now has started buzzing. So on dips, certainly we should look for taking some long bets.
Got it. Okay, it's time now for the big brokerage call of the day. It is Adani Enterprises, and this is Motilal Oswal that has initiated a call. Let's find out what they're saying. Sharad Dubey joining in to talk about it. Sharad, the stock has been on the up and up. What is Motilal saying?
Well, Motilal has initiated a buy rating, and the target price is of 3,880 rupees per share. Now, they've stated that multiple growth engines are there, and this is a one entire integrated platform. This is positioned at India's heart of the capex cycle, and multiple businesses are actually entering the earnings inflection point as well. A value unlocking story to play going ahead, and the consolidated revenue, EBITDA, PAT, CAGR is expected to range 22%, 29%, and 82% respectively over the next 3 years. Also, this is aided by growth, margin expansion and increasing contribution from the high margin verticals, and that is why Motilal Oswal is bullish on Adani Enterprises.
Got it.
Okay, let's talk a bit about some of the buzzing stocks, or at least the newsy companies, and look at how they've ended in the pre-open session. I want to pull up HDFC Bank and see if there's any impact that we're seeing of that class action suit which has been filed. No, none at all. I want to look at Tata Power once again, and an arbitral award has been dismissed by a Singapore court, about 1.5% down. Devyani International we've spoken about in detail, but no harm looking at it once more, about 1.5% up, nothing great. Let's look at Steel Authority of India that have increased rebar prices, and that's also about 0.5% down. So nothing really moving. Juniper Green, we can look at Juniper Green Energy, a good set of numbers in their Q1. That's showing some signs of life, about 4% up right now. And let's look at Titagarh Railway Systems. They have an MOU with Siemens for global metro projects, just about 1% up. So clearly not too much action over there. Shrikant, anything interesting that you are spotting right now in a market which is quite placid?
So I think at this level, we need to focus on metal companies also, because there also we are seeing sustained trend. Most of the companies yesterday did really well. But in that specifically two stocks on which we are bullish with a medium-term view. There we like Vedanta Aluminium, which was around 462 yesterday. Today it is opening somewhere around 460-65 sort of levels. But if we consider its overall technical pattern as well as its overall fundamental strength, I am of the view that this time the stock is having lot strength to cross the level of 490, which is its important resistance level. So from here also the stock can move towards, let's say, at least can give 10 to 12% sort of returns from current levels. We also like NMDC, on which we are bullish with a medium-term view, and we are expecting stock to move towards 95, 96 sort of levels. Currently, it is around 88.75. And finally, if we have to focus on any other sector, then in that we like defense. In that, HL is the stock to buy for. Currently, it is around 4,900, but by looking at its daily, monthly, long-term charts, I'm very clear that the stock is heading for at least 5,500. So it's a buy at current levels, more on dips with a positional view. I think this stock, this particular space can do really well, but in that the outperformer should be HL.
Okay. I want to quickly look at Anant Raj. Let's look at NetWeb. Let's look at E2E and see how they have ended. Just 3 minutes to go for the opening. But why are we looking at this clutch of stocks? NVIDIA has rock and roll results. I mean, $100 billion they're going to do in Q3. It's insane what that company is doing. So this is just the little bit of trickle down maybe impact that you're seeing over here. How are we feeling about NetWeb, Kushbora?
Oh, very positive. I think yesterday, Alex, I think you marked this stock at open or pre-open, and I said this is a stock that you want to buy on decline. So that view remains. I mean, look at the primary trend, and beautiful. Has its share of profit bookings, by the way, every now and then. I would have preferred to buy this closer to 5,050, 5,100 mark, but doesn't seem like that will happen anytime soon. So yeah, you can consider buying NetWeb at current levels also. Positional stop close to the 4,900, 4,950 mark.
Okay. 2 minutes left for the markets to kickstart trade. Shrikant Chauhan, you've given us some ideas already, but if you had to nail it down to one top idea for the day today for a trade, which one would that be?
So I would like to go with any metal company, and in that NMDC, there we have bullish stance. Even at this level, it's a buy with a target of 94, 96. We can keep a stop loss around 87.50 for creating long positions on NMDC.
Interesting. Steel prices are up. Shrikant is going for a non-ferrous company, but he said any metal company. So metals per se look good to Shrikant Chauhan. So keep that in mind. Kushbora, if you had to bet on one top name today, what would your bet be?
It'll be Vintage Coffee, the stock that we discussed. Targets to reiterate 170, 175, stop loss 160. And the only reason I'm going for this is because happy forcing that we discussed is opening about 2% higher. So the risk reward ratio will not be favorable. If you get it closer to yesterday's closing price, that's when it makes sense. Keep this on the radar as well. But yeah, I mean, at open, Vintage Coffee looks good for a long trade.
The rule is anytime you talk about a coffee stock, you have to buy me one. By the way, Shrikant, any other stocks that you're looking at beyond what you've spoken about? Just 30 seconds left.
Apart from this, I think banks can do well, because if we are expecting market to do well, then banks should do well. And in that, specifically HDFC Bank, I think here the downside is limited. And if market has to go up, then this can particularly participate. We can keep a stop loss around 720, 715 for creating long positions. Again, we can expect 750, 755 sort of levels.
Consensus on the table on HDFC Bank. Keep an eye out for that. Let's see. But I remember Kush saying that maybe Kotak charts look better tactically for the near term, but he's still constructive on HDFC Bank. Will the big one finally move? Well, I can tell you, if HDFC Bank moves, both the Bank Nifty and Nifty will have some undercurrent to themselves. It's just not done that for a while. But here come the first trades this Thursday morning, and we'll have a start which is, well, very different from what the 8 a.m. number was showing, and me and Alex spoke about it, that it sounded very unreal, that oil doing what it is doing, that Indian markets will really start off that low. We're starting off well, about 0.25% on decent market breadth, with the mid caps and the small caps participating as well. This is the mid cap index 0.25%, small caps index 0.25%. Nothing dramatic, nothing really to write home about, but a positive start, which is not a bad thing. Now let's get the heat map up on the screen and see what is moving and what is not on the large caps at least. Is it even Stevens? No. More green than red. HDFC Bank, the consensus idea is the top loser, but it's down only 0.33%. So nothing too dramatic here. Grasim, Axis, Power Grid, not too many losers. What about the gainers? Again, not very strong moves, but Bajaj Finance up 1% yet again. Tata Motors PV ahead of the monthly numbers is up about 1%. Eternal is up about 1%. Adani Enterprises as a brokerage note, that stock is up about 1% as well. And then you have the Kotak, Tech Mahindra, Apollo Hospitals variety. Reliance marginally in the green, Infosys and Wipro. So IT is supportive, Reliance is doing well, Adani Ent is doing well, and broadly financials seem to be doing okay, but at least Kotak and Bajaj Finance out there. Bajaj Finance is in fact strengthening now, 1.5% higher, so really strong show. And HDFC Bank is now down about 0.5%. That sums up the story, but not a bad start. Currently about 0.33%. Let's see where we go from here.
It's almost as if the Nifty heard the taunt that nothing is happening on it and decided to open about 80 points up in the green. There you go. Let's pull up the Nifty contributors for you and see what's moving and what's not. Reliance Industry is coming in strong. ICICI Bank as well, as is Bajaj Finance. Biggest drag on the Nifty with 15 points is HDFC Bank, which was to be expected after a class action suit has been filed in the United States. So that's out of the 22 points down on the Nifty, 15 is coming from HDFC Bank right now. Let's pull up the small cap and the mid cap stocks for you this Thursday morning and see where the action is. 0.34% up on the Nifty mid cap 150. The advanced decline ratio is actually looking pretty good. Your implied open essentially was a bit of a confusing kind of factor because it's not looking bad at all. 1595 advances to 737 declines, about 0.3% up on the Nifty small cap 250 as well. Let's pull up the sectoral heat map and see where IT is sitting. Is Nifty IT one of the strong ones today? No, not on the top line, but definitely up in the green, 0.35% up. Healthcare and pharma is looking decent. Some maybe defensive plays coming in there, but healthcare pharma is where the action is. Nifty Energy about 0.5% up, and then you have IT also doing decently, about 0.5% up. I wonder if that's the Nvidia effect, but you know, it's not a bad market as well at all, because the Nifty Private Bank is also pretty much in the green. There you have it. You're closing that piece out on a completely green screen. So that's looking decent. I want to pull up the India VIX for a second and just take you through what's happening on the India VIX. 0.5% down now, 10.5. Clearly the Middle East war participants have maybe moved on to other things. Let's hope that's what's happening overall. 0.3 down now on the India VIX. Okay, I'm going to go to individual stocks and look at what's happening there. Well, let's put the spotlight back on HDFC Bank, because that US class action suit over the interest payment scheme is going to be a bit of a drag. There was a news report yesterday that there is a clutch of investors who are going to write to the Prime Minister's office as well. So till you don't have their succession plan in place and their management who's in the corner office next in place, you're going to keep having these bits of turbulence. Devyani International has, there's been a change in the merger scheme with Sapphire. That's talk about 3.5% up. I want to look at Steel Authority of India. They've increased their prices of one particular product by about 1,000 metric ton. Nothing much happening there. Let's look at Imami and NHPC. Huge humanitarian tragedy in Nepal. Both of these companies have presence there and significant presence there. So you're seeing a bit of a downtick. I want to look at what's happening with Tata Power. That Singapore court's ruling against their plea for an arbitral award is a bit of a cinch, and it's showing on the stock price 4% down right now. Let's look at Titagarh Rail Systems very quickly. They have a global MOU with Siemens today, and then I want to just skip to looking at some of your, there you have Titagarh Rail Systems. Let's look at NetWeb, Anantraj, E2E. Let's look at some of these, because again, since we're talking about Nvidia results, what is the impact there? There's a spillover, about 2% up on NetWeb. Anantraj also mildly up in the green. Let's look at E2E Networks doing about 3% up over there. I just want to look at Pine Labs. It was on Alex's watch list this morning. Investec has initiated a buy. Pine Labs also 2% up. So these are some of the ones which are popping out. I would say no big runaway moves, but the overall mood is fairly positive.
Based on the news flow, certainly, but there are a couple of stocks that maybe were in the news. One that had a block deal recently that is acting up, and one that I don't see any news flow on. Bombay Burma is a stock from the broader markets that is doing incredibly well today. Pull that one up. It's up 10% right now. And well, I want to know what Kush Bora has to say about this one. Welspun Corp is gaining about 5.5%. And remember, this is the stock that saw a large trade taking place. Triveni Turbine is up and about. So too is GETND, Inox India. These are stocks that are buzzing. GETND now up about nearly 3% or 2.5% or thereabouts. Inox India is climbing as we speak, gaining about 3.4%. Or thereabouts. In Triveni Turbine up about 4% or 4.2% right now as well. So there are a few names that are reacting to news, otherwise not. So Kush, on Bombay Burma, Welspun Corporation, and then maybe Triveni Turbines and Inox India as well. Which of these are a trade in your opinion?
From a trade perspective, I think Inox India is something that you can consider. Had a smart run, went into profit booking, then went into consolidation, and then now it's starting an uptick. So this is a very good setup from a positional standpoint, mind you. So you this is something that you can for sure consider. 1875 thereabouts should be your stop loss. And yeah, Bombay Burma, by the way, as you said, without news, there's an uptick on this one. From a technical standpoint, it was into oversold territories, but didn't really warrant this kind of a move. So I would avoid. If I had a position, I would maybe hold it with a trailing stop loss or start booking partially, on this one. But one stock that is shaping up very well, which was on your watch list, and even Tamanna mentioned it right now, is Pine Labs. Very good accumulation over the last 2.5-3 months on this one. Now it's starting to show an uptick. Yes, 170 is a bit of a resistance. Couple of days of closing above this will actually put it in a positive territory. But if you're looking at a positional trade, I think with a stop loss at 155, Pine Labs is setting up well.
Okay. Just one quick thing on the blocks, right? ICICI Pru, of course, AMC, the block has happened, so keep that in mind. But Alex spoke about Welspun Corp and the reaction thereof. Look at the nature of the buyers. New World Fund, 9.93 lakh shares. Capital Group, Euro Pacific Growth. So capital is really logged in here. And then Edelweiss and Quant Mutual Fund are the other institutional investors which have bought it, including Euro Pacific Group. So block by the company and the MD CEO, but bought in by some very smart hands, as a result of which the stock has recouped all of it and is now at 2426. So pretty good going. Remember, this is the one that recently got that 17,000 crore order. So pretty strong going there. But what do you do with something like this? rallied a bit, 1100 का देखा है, 2400 हो गया है, but the order wins are very, very
So
strong.
it is something a rare situation where seller is also winning and buyer is also winning.
नहीं तो अभी
Seller, see, promoter after stock has doubled has sold shares, so he is gaining, and there is a room available still for the upside because they are in a very right sector and in right location in US where there's entire drill baby drill is going on, plus data AI. So I think for buyers also it is good. So I think it is a win-win situation for both promoter and buyer.
Is it good enough to latch on now?
I will not. Basically, my nature is not. I will not. But that is my problem.
Yeah, okay. Shrikant, good recovery though in this one. Very quickly, Shrikant, 1 minute answer because we got the next management in. But Welspun Corp, what do you think of it?
See there, Neeraj, we are bullish and we are expecting stock to move higher. But the thing is what right now it is like rallied a lot. So in case if there is any correction, I am of the view that 2500 should act as major resistance. 2250 should act as major support. In case if there is any again a quick reaction or maybe correction, we should look for taking some long bets. But while looking at its entire technical pattern, very clearly I am of the view that the stock is heading for 3000 plus. It will take some time, but it is into strong uptrend and it is buy on every day.
Okay. Shrikant, thank you so much for joining in today. Thank you so much, Kushpura Parag Thakkar, for coming in today as well. And we are kind of in the beginning of the festive season. So let's hope some of that mood continues through the end of the week. But turning the focus to Capri Global, because rising gold prices are driving stronger demand for gold loans. We're joined now by Rajesh Sharma, Managing Director of Capri Global Capital, to discuss the outlook. But before we get to our conversation with you, Mr. Sharma, which we're looking forward to, Sharad is joining in to set that chat up.
Well, for the last 3 days or so, the stock has been going up almost 13 to 15% in the trade. And remember, the stock is beneficiary of rising gold prices, the gold loan demand. That's expected to be an important driver. Stable yields is also supporting margin expansion outlook for this counter. And Street is also focusing on the rapid branch expansions. From the con call itself, they have targeted two important numbers, 28 to 30% AUM growth they are targeting, and the co-lending business that contributes roughly 20% of this AUM, and they want to maintain that market share of 20 to 22 odd percent. South India expansion is also something which Capri Global is looking out for. But as of now, the Street is quite bullish on the rising gold prices and the effects which are happening for the gold financing companies, CSB Bank, and now even Capri Global Capital.
Okay, let me go across to Rajesh Sharma, Managing Director of Capri Global Capital. Mr. Sharma, very good morning to you. And you know, one of the reasons that we wanted to speak to you is just to understand that as we see gold prices internationally back on that uptrend, what does it mean for you? What does it mean for your company? What is the kind of impact that you're seeing?
Thank you. So I think increasing gold price have an impact that borrower's ability to draw higher amount of the loan becomes possible, which makes your growth potential go higher than in a steady state of the gold loan prices. So the gold loan going prices have also impact on the positivity of the NPAs, because your gold loan prices goes up, your LTV comes within the range, and that also positively affect your asset quality in the gold loan. So growth and asset quality both it impact positively.
What is your gold loan AUM already look like, and what are you projecting it? I know in your con calls, your total AUM you looked at with a growth of 28 to 30%, but just let's hive off the gold portfolio within it.
So gold last year we grew about 111%. This year we are aiming that gold loan profit, the gold loan portfolio should increase at least about 40%.
Okay. And what is really going to be the driver there? Are you now going to back this up with more branches, more outreach? How are you doubling down on this?
So this year we have planned to open another 400 branches. Majority will be gold loan branches in that. And we hope to complete this expansion by end of December. So the momentum in the gold loan overall demand and growth is very encouraging. The way we have grown our portfolio, we started this business in 2022, and in less than 4 years we built a book of almost 20,000 crore. So this year target is to take this book to 28,000 crore, and for that to support that growth will be coming from the data science driven some specific schemes where we improve the productivity of our people, plus adding the another 400 branches by December.
Mr. Sharma, good morning. This is Alex here. Just a question on the gold loan, and obviously we're stressing on this because it's now accounting for 47% of the book, right? I'm trying to understand the implication of the competition in the space, because it's like everybody wants to jump into the same pool. The pool size, of course, is also growing a little bit, but not necessarily at the pace where there are new additions and new competition. So is that having a bearing on the pricing of loans?
So I think looking at the gold loan prices have more than tripled in last 4 years, and total household reserve is expected to be in the range of $5 trillion, which is a huge reserve. Only marginal about 12% gold is monetized, so that leaves a huge scope for loan against the monetization of the gold. Having said that, despite the new people are coming, everybody is growing. It means that informal segment market share is shifting to the formal segment, to the banks and NBFCs. So while competition will impact some kind of a yield, but I think it will not impact the overall growth.
I'm just trying to understand quantums here. If you can put that into perspective for me, because you had interest rates more or less stable for a couple of quarters. So if you look at Q1 versus Q4, what is the implication, and maybe even Q2 as we're speaking right now, what are the kind of yields that you're getting on your gold loan portfolio on an average?
So our realized yield of the gold loan portfolio is in the range about 18.6%.
Okay.
And throughout the year, we hope to maintain in the range about 18 to 18.5. So we don't see much reduction there, because we are focusing on the small ticket size gold loan rather than going for the big ticket size gold loan, where the competition, the lower rates loans are happening, teaser loans are happening. We are not going much into the launching and competing in the teaser loan competition. We are focusing on the smaller ticket size business gold loan. So I think we should be able to hold our rates, and we should be able to grow our book in the range about 40%, as we said.
Okay, just a quick follow-up to that. What is the kind of ticket size that you're talking about? One, two, in terms of the raw material for you, which is in the fixed income space and bonds essentially, right? So, or rather the deposits that you would get, right? The yields have gone up in the system. And so therefore, are you seeing a pressure on the margins on account of that?
So interest cost, because this gold loan portfolio is still in a short-term maturity, by mixing some short-term instrument, borrowing through the commercial paper route and other route, I think we should be able to maintain our cost of fund in the same pricing where we were getting from the banks in the past. So we don't see much pressure there. And pressure will come on the yield of the gold loan side from the competition. I don't think there will be pressure on the cost of fund side.
Okay. Mr. Sharma, just one point from you. One question that I have with you is on the macro per se. If indeed inflationary pressures are evident around the world and in India, and therefore the Reserve Bank is, let's say, takes a hike or a series of hikes, in part due to the local inflation challenges if they surface, and in part due to global rate action if that were to happen, what does it mean for the operational metrics for all NBFCs? Do they come under a bit of a cloud? Cost of funding, etc., all goes up as well. Could we be looking at NIM compression in the next 12 to 18 months?
So in case the cost of fund goes up, so far liquidity is available. I think cost of fund can still be passed on to the customer a bit. Affordable housing and other segment growth maybe slow down a bit, but gold loan it will not slow down, because gold loan customer for 1% rate still is not that sensitive for a smaller ticket size, for a smaller tenure. So I think affordable housing loan the cost going up, we'll see some slowdown happening. But barring that, if the liquidity is available to NBFCs, then I don't think as a sector there's any challenges as such.
Okay, fine. So, Mr. Sharma, you seem confident that you'll be able to pass it on, but it'll be interesting to see how it shapes up. The other part is there there's a fund manager from MDC of a mutual fund house who was with us day before yesterday, and he was saying that there is some stress starting to be visible on the balance sheets of consumers who are borrowing to consume. So consumption debt has moved up, and that may cool off loans as well as consumption post the festive season. Are you seeing that or not quite in the system at large?
At the moment, we are not seeing that.
Not
even
seeing
in
that,
the
okay.
month, not seeing that. Maybe it is possible that in consumer loan and unsecured loan, there could be that possibility. As far as the capital is concerned, we are doing MSME, affordable housing, gold loan, all are secured product. So far we are not seen in that segment.
Mr. Sharma, just wanted to understand, and we've spent a lot of time on gold loans. The outlook is also positive basis what gold prices are doing. Now, recently when we had seen a dip in gold prices, what is the kind of impact it had on some of your accounts? Did some of them reach stage 2? How do you expect to manage the situation if there is another dip in gold prices?
So I think there are two aspects of it. One is that loan to value. So the moment loan to value goes beyond a particular level, the branches start collection calling. So they will, for example, somebody have taken a 1 lakh rupees of loan and price have fallen 4%. Then either we'll collect from the customer 4,000 rupees is part of loan agreement. They have to maintain all the time loan to value. Or in case he's not able to give the money, he has to give additional pledge of the gold, and failing which either of the situation, we give them the notice that in case if they don't do it, we have a right to auction the gold. And the moment gold LTV goes beyond 85%, we initiate the auction process, and some point of time we auction the gold to recover money. So I think it doesn't have impact. Is such an asset quality so far, your weight, your purity check, everything is in place.
My question is, the last time that you had a dip, did you have some of these issues coming up? Was there a certain quantum of accounts where you had to follow this process?
Yeah, so that happens every day. The sum of the account reaches the LTV norm because either the gold loan price has gone up or they have not paid the interest dues. In both the situation, the loan to value will breach, and we do the collection calling. So last time it happened. So we made a collection call, and we are not seeing the spike in because we are able to collect. But this is a routine practice. It is not only it aggravate when the gold loan prices fall, but otherwise also when the customer do not pay their timely interest. Again, that also have a same bearing that their loan to value breaches, and we have to do the collection calling and collect the money from the ground through the branches.
If it is regular, Mr. Sharma, then is it true that your loan to value is relatively higher than your peers? Because some of your larger peers have a loan to value of just about 60 or less than 60. So if you're saying that it crosses the threshold of 85, then it would be closer to that threshold, right?
So our loan to value in the range of currently is about 72%. And I think now income generating loan, Reserve Bank have allowed that you can, based on the income, you can give them the higher loan to value. Some of the cases we go up to 80%, but based on their past track record and the income generating ability through our proper assessment. But rest of the consumption loan, we follow the same. We don't give more than 75 on disbursement basis. That also impact, having said that the gold loan prices fall, the portfolio level, further LTV can fluctuate either way.
Okay. Mr. Sharma, since we've asked you so much about gold, I want to get a sense of what's happening with your MSME book. And are you seeing any signs of distress or asset quality at all, even at the margins on your MSME book, considering this whole Middle East crisis, high input prices, inflationary commodity prices that we've been seeing?
So I think I'll compare this situation to the COVID, when the businesses were completely shut and there was no movement was happening, versus this time some of the cost of business have gone up. Not that businesses entire sales have become unviable and the business is not in operational. So I think some bit of compression of margin to those businesses will happen. some cash flow crunch may happen. So far, we have not seen that in MSME, whether we see the check bouncing ratio, asset quality, or either demand. We have not seen. I think impact these things will percolate, some take longer time. We have to keep watching, and some of the sector where it has a direct bearing and more impact, and we are watching it carefully through our policy intervention and other places. I think we have to watch one more quarter to see what impact it really causes.
Okay. Thank you so much, Mr. Sharma, for speaking with us today and outlining in detail the outlook for your company. That's the Managing Director of Capri Global Capital. We truly appreciate your time with us today. Let's talk about 2% down off the lows of the day. Although, just want to highlight a few movers. I want to highlight Tata Power because we spoke about Tata Power earlier, right? In the context of a Singapore court rejecting an arbitrage award that they had got. That's talk about 3.5% down. And I just want to quickly look at HDFC Bank. I would say two large companies, HDFC Bank, of course, with a mega weightage and the impact that they're having. That's about 1% down now as well. But Neeraj, another clutch of stocks that you're spotting.
Yeah, so we should try and pull up CG Power, GE Vernova, TND, Hitachi Energy and Taril. What has apparently happened is that Donald Trump has signed an order banning some foreign equipment from US energy grid, and therefore this order covers transformers, grid connected inverters, BESS projects or BESS equipment, generators, circuit breakers, the works. And apparently DOE has about 120 days to frame the implementing rules. Now, what happens eventually is not certain as yet, but why this is important is because these are the Indian companies with some US or export or US exposure. So CG Power had an export order inflow which had grown about 82% in Q1. They had won a 900 crore order to supply power transformers in 2026 as well. For GE Vernova TND, 46% of the Q1 order intake was this. They were expecting a 1,300 crore large order as well. Hitachi Energy, similar story. Taril, similar story. I mean, the numbers will be different, but I think that is possibly the reason why these stocks are doing what they are doing today.
That they're up despite this order?
Yeah, no, because of this order. Because this order has come, and if Chinese equipment makers are not a part of the grid.
So it's basically blocking out the Chinese companies, which could be advantage India.
Higher orders coming through from the US.
Yeah, and that's a very large proportion of orders.
Yeah, but I would hope so, because if you see the recent lot that they have done, where they named some companies on shipping patterns from Iran. They named Indian-based entities and promoters as well, where they wanted to bring in their economic sanctions on Iran, and they said that anyone who's helping out Iran or doing business with Iran will also be sanctioned. They did name some Indian companies as well. So in the face of this looks positive for India right now relative to China, but in the Trump administration, I'm not sure that you can say that India or Indian origin companies will get any preferential treatment. It could change with the wind and it could change with the day.
Yeah, 100% correct. If this specifically leads to Chinese equipment getting barred, I think that, this is the factual thing. The market seems to be believing that this is banning China and advantage India. Let's see if that works out.
No, and in the short term, that binary is absolutely correct. The only word to wise would be that anything can happen with that administration any day. All right, let's talk about V-Mart. They posted a strong Q1 with store productivity improving, while value-driven demand and festive spending support the outlook. We're going to get Anand Agarwal, COO and CFO of V-Mart on, but Pune joining in with more details.
Well, thank you for that. The company has a really strong Q1 revenue growth by almost 23%, and this was led by same-store sales growth of almost 8% for the company as well, 9% on a blended basis, and the Unlimited, the value retail chain format, grew by 13% on this. Now there are some. This conversation is very important at this pertinent time, because you had the Durga Puja days different compared to the same time last year, and hence the first question that the management expecting Q2 to be slightly impacted because of that, and that will be across the industry. What could be that impact will be the first question. The other one coming through that consumers are remaining very at this point of time because of the input cost inflation. So what could be the impact on demand or margins that could be visible in this particular quarter? And finally on what the management also feels, because almost 60% of the 800 unique towns that we are seeing for the value retail chain side have only one of the 4 listed retail stores. So the expansion of stores in the medium term, these will be some of the key pointers from this conversation.
You preempted what I wanted to start off with, because your first question and my first question coincide. Let's get in Mr. Anand Agarwal, COO and CFO of V-Mart Retail, in on the conversation. Anand, great having you. It's been a while. Thanks so much for joining in. Neeraj here. Good morning. And this is, for me and for a lot of people, arguably the best time of the year, right? Starting yesterday, the festivities have started. We'll have Raksha Bandhan tomorrow, Ganesh Chaturthi soon, and presumably the festive buying fervor begins now. Are you hopeful of that turning out to be a trigger for higher consumption across your store formats?
Yes, Neeraj, I think we have begun the year well. Just as your colleague was mentioning, the Q1 has begun quite strong. And what we are seeing on the ground ever since has also been a very robust consumption spread. It's not just the start of the festive, but even the intervening period in between, where we were also equally wary of how the consumption is going to pan out, given the geopolitical impact on the inflation, as well as the threat of a very low monsoon. But thankfully, things have panned out quite strongly. Things have remained quite buoyant at the ground level. We have not seen any significant dip in, consumption across the towns. We're seeing, a pan-India sort of a stable momentum. And we are also entering into the festive with a strong footing. So we have made grand plans. We have strong inventory. We have, a great strategy around how we want to look at the festive. But the early 2 days that we have seen in the last week and even continuing now, that gives us a lot of hope that, the festive is going to be strong this year.
So therefore, strong Q1. You are telling me that the early days of the festive season have started off well, which means the second half of this festive season quarter as well could turn out well. Are you expecting momentum to continue in terms of numbers as well? Because you told me that you're on a strong footing and things look good. Can you place it in terms of numbers? What you did in Q1 in terms of same-store sales? Do you expect that number to be maintained or improved upon? How does it go?
So difficult to comment on the numbers, but suffice to say that if the momentum continues the way it is, I think we should be able to replicate what we were able to do in Q1. Definitely, it will be a growth over last year. The only caveat being Q2, where the Durga Puja gets shifted into Q3 this year because of the timing impact of the festival. I think Q2 might not see as much of growth as last year, but otherwise, I think on a festive to festive basis, a calendar of 75 days or 90 days, intervening between Q2 and Q3, we should see strong growth.
I lost him. Interesting. Anand, hi, Alex here. So ahead of the festive season, of course, it's important to also consider messaging and communication, right? And practically all of your sales take place in your stores. So therefore, from your perspective, I'm just wondering how you're thinking of marketing and ad, if at all, and whether you're apportioning, how much you're apportioning towards that with regard to your cost. What is the strategy there?
So marketing has always been a very important, but not a very big part of the P&L. We have always relied on a lot of word of mouth, because we, being a honest value price retailer, we would want to give out the maximum value to the customer without really spending too much on marketing. But at the same time, the festive push does require a lot of communication. So a lot of efforts have been made around in-store communication, using digital means to reach out to our customers. We also have more than 8 crore customer database of our loyal customers who have shopped with us over the last couple of years. So we do reach out to them very regularly. And I think the impact of all of this has been that our repeat rate of customers has always hovered more than 70%. So even when we launch a new store, we do get a lot of word of mouth publicity, not really spending too much on outdoor marketing. But yes, digital is something that has come in very handy for our marketing efforts.
Anand, you've also mentioned that your customers are value conscious, and so therefore I'm just wondering about pricing and inflation pressure during this period where commodity prices have been pretty volatile. How are you managing inventories right now?
So inventory is fairly okay. I would say there is a lot of pressure on the input cost. The oil prices have played their part in the last 4-5 months, and whatever we sell now would have been procured in the last 3-4 months or last 2 months. So definitely there was a lot of pressure on the cost. We have tried our best to contain our pricing. We have not really increased our pricing significantly. I think over the course of next 1 to 6 months, we might see a little bit of price increase around between 2 to 5%, not anything substantial. We've done a lot of value engineering in our products. We have done a lot of engineering around what we want to, mix, how do we want to sell, what is the product mix, etc. So for the end customer, especially protecting his pocket is our key concern. So we have not really increased pricing and also managed to hold our raw material or input prices to the extent possible.
And so therefore, Anand, would it be fair to say that because you're selling older inventory and that's not impacted by the cost increases and you will take a price increase, would it be fair to say that it's going to be margin neutral? It's not going to have an impact on the margin, and so therefore the Q2 margins are intact?
No, we are definitely not selling older inventory. We always have fresh inventory, and especially for the festive season, we have to procure fresh inventory, and substantial part, not substantial, more than 90% of the inventory that we will be selling will all be freshly procured inventory. I think the good part that we have been able to do is to hold our purchase cost through value engineering and through intelligent product mixes, so that the impact of the price increase or the cost increase because of the the oil price hike does not really get translated into MRP hikes for the customer. There might be a little pressure on the margins, I'm not denying that, but because we will be taking between 2 to 5% price hike in selected products, that impact might also get mitigated. So I'm not sensing a very large impact or a very significant impact, but it will definitely pan out, and it will depend on what we are actually able to sell.
Got it. Anand, thanks so much for taking the time and wish you all the best for the festive season. It's our favorite time of the year as well. And so therefore look forward to speaking to you around that time.
Thank you.
All right, well, let's shift focus now to the chemical sector. Strong Q1 earnings have triggered a rally among the space, but the story isn't the same across the pack. There is actually quite a bit to talk about if you splice the chemicals, so to speak. Let's head across now to Varsha to find out what exactly the story is here. Varsha?
Well, everybody is actually banking on chemicals and expecting a good rally on chemicals. But one has to understand that not all chemical companies are riding the same wave. Number one, so what happened recently? We saw strong earnings growth, which has triggered a rally in chemical stocks. We saw a good boost in profit from Middle East supply disruptions, raw material and product prices surge, also aided from lower cost inventory. And hence, all the chemical companies, majority of chemical companies are riding the wave on due to inventory gains. Now, lower cost inventory led to margin expansion. If you see, earnings got an exceptional boost in Q1. Analysts are expecting most of these benefits to moderate over coming quarters when it comes to the commodity chemicals. Now, we are deep diving in each segment of chemicals. Talking about amines, we have seen improved pricing which has supported earnings, but amines industry overall might face some kind of raw material pricing pressure in Q2 or in Q3. Talking about CRDMO, over here every company did, the growth over here is structural because global pharma companies are continuing outsourcing manufacturing. Navin Fluorine is getting good traction from US pharma majors. Even if you see customers addition, seems to be continue. Growth is driven by outsourcing, not chemical price cycles when it comes to the CDMO company. So over here, the growth is expected to be structural. Talking about dyes and pigments, everybody is banking on this segment. Now why? Because now the key companies over here are Sudarshan Chemical, Ultramarine Pigment. Now why? Because China is tightening environmental regulations, new capacity additions are slowing down, and this might have a positive impact when it comes to Indian companies. So Indian companies are gradually, benefiting from this shift, and hence every analyst now is talking about dyes and pigment companies. Talking about agrochemicals, we saw weak quarter, but Q2 and Q3 are expected to have a good growth. Delayed monsoon hurt kharif demand. Export demand remains soft. Pricing pressure continues when it comes to overall agrochemicals, but companies expect demand recovery from October onwards. So the big question is this a temporary rally or a structural growth that we might see in chemicals? So the answer over here is every company is different. You might see good traction in agrochemicals and CDMO, but commodity chemicals and amines may face some kind of raw material pressure going forward.
Well, Varsha, very well summed up. Thank you so much for that. And let's take that question to Ajay Joshi. He's founder of Ajay Joshi Chemicals and is a chemical sector expert. And Ajay, thanks for joining in at the start. We are not doing this conversation to get stock ideas with you, right? But to try and understand which companies could have a better chance of maintaining the profitability that some of them have shown in Q4 and Q1. So Ajay, to start off with, let's break it down. Within this very vast chemical universe, where is it, in which chemicals have you seen an uptick in pricing due to Chinese factors or otherwise, which is sustainable? And where is it that there is an uptick but might not be sustainable?
See, first, there has been an uptick in commodity chemicals like phenol, acetone, phosphoric acid, and all that. Those uptick will not be sustainable. So Q2, the current quarter, will be a litmus test for a lot of commodity chemical companies, whether it is Deepak, Aarti, Atul. Most of them made phenomenal margins, phenomenal volume growth in Q1, but that might not continue in this quarter. So Q2 will be the litmus test for commodity chemical companies because now prices have cooled down and customers are no longer paying war premium for these chemicals. But there are two segments where uptick will continue for the entire year. One we discussed early on during our last conversation also, amines. Although the RM prices for amines have been firm, but still because there is structural supply tightness in amines from Middle East as well as from Europe. So amine companies will continue to command very good pricing for the entire year, especially for Q2 and Q3. Then CRDMOs, where Navin Fluorine might come out as a surprise winner. Years of hard work is finally yielding them something good. So we might expect some surprise contracts for Navin from US pharma majors. In CRDMO, we are also very bullish on Privi Specialty, which is in flavor and fragrance. They are getting a lot of outsourcing work from Europe because in Europe, cost of production is very, very high. Then dyes and intermediates, pigment sector, we are also very bullish on that because in China, 50% plus capacity has been phased out for a lot of dye intermediates because they are extremely polluting. So it's a government mandate there. So that has made China net importer in a lot of dye intermediate from being a net exporter. So companies like Bodal, Kiri, these are going to be key beneficiaries. Agrochemicals, we have mixed signals.
Ajay,
the current season.
Ajay, I think the viewers will get confused. So I'm going to break it down very quickly into some of these, right? So let's talk about dyes and pigments that you mentioned first. I think Varsha, my colleague, when she spoke about that, had a set of companies which will be beneficial. I heard you say Bodal Chemicals. Are you saying China is a net importer and therefore it might be importing from some of the Indian companies as well?
Yes. For example, there's a very famous intermediate, H acid. It goes into making reactive dyes and that dye eventually goes into garment. So China used to be a big exporter, but around 60% capacity has been shut down. And we will see more and more shut down because of the stringent government norms there because this industry is extremely polluting. So China is going to become rather net importer. So Bodal, Kiri Industries, these are manufacturers of H acid in India and they might be huge beneficiary.
Okay. The second one is amines, wherein I heard you mention that you are constructive. Varsha was saying that maybe the raw material prices uptick could actually hurt these companies going ahead. Is that a risk or not quite according to you?
So companies solely betting on the amines, there in the end product, we will continue to have premium pricing. But if we pick company by company, Balaji Amine also makes certain non-amine products like dimethyl ether, which they are going to sell into fuel blending. So there they might suffer. So it depends company to company, but pure play amine manufacturers, they will continue to command premium pricing despite the RM price increase.
You. Okay. The other one is the uptick seen in select products like bromine. Yesterday or day before yesterday, somebody sent me a chart saying that bromine prices have gone up some 40, 50, 60% or thereabouts month on month in China. Why is that? Is it net constructive for? I believe there are a couple of companies in this one, right? I'm forgetting the names, but there are a couple of companies which do this. What do you think about that?
So bromine, yes, it will continue to remain very, very firm. Bromine, again, we have structural supply tightness from Jordan as well as from certain Middle Eastern territories. So companies like Neogen, companies like Archean, they will continue to have very good pricing in bromine related molecules. So margins will be very, very good in Q2 and Q3 also.
Q2 and Q3, this might continue for bromine companies, Archean and Neogen. I heard you mentioned a couple of those names. Viewers, standard disclaimer, of course, please do your own due diligence. These are not recommendations from Ajay Joshi. I don't think he's a SEBI registered advisor. So please do your due diligence, but he's a chemical sector expert and therefore important to understand the sector as it stands and the base business. Ajay, one last question from my end, and that is, I heard you say the start of the conversation that phenol, acetone, etc. have gone up, but people are no longer paying what premiums to these. The commentary from some of the companies seem to suggest that even if there is a cool off, the new base is much higher than the previous base, and therefore the margin momentum might well continue even if it is not at the heady margins. Would that be a fair assessment, or do you believe things will start looking bleak from quarter two itself?
See, I have a slight contradictory view because customers are no longer placing orders. They are like going hand to mouth. So that's the approach. And unless there's a continuous demand from customers, pricing power cannot sustain. And this, we have seen back to back in past few years also in businesses. So I believe towards August and September mid, we will see the price going down because these companies have to lower down the price to sell to customers.
Ajay, we'll leave it at that. Thank you so much for taking the time out and giving a bit of a ready reckoner to us. Is really important because a very important sector which is actually doing really well fundamentally, at least in terms of the numbers. So good to put perspective there. Much appreciate your time.
Thank you.
Time for a very quick break. On the other side, we'll be joined by Shankar Sharma of G-Quant Research. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
Well done on that ESOP sale.
Thank you.
Now that you have this extra money to invest, let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Hold up. Let him get a second opinion first.
Sounds good.
You can continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first. Ionic Wealth AI.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो एसआईपी करो, इन्वेस्ट करो या आईपीओ, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster. Bold.
Welcome back. We have an exciting conversation lined up for you with Shankar Sharma, ace investor and founder G Quant Fin X-Ray, the man who often goes viral one way or the other. I don't know if you do it on purpose, Shankar, if you know that what you're saying is going to go viral or it just happens for you. But a very good morning to you and welcome.
Morning. Morning. As always, real pleasure to connect with all of you folks. And I hope the markets have been treating you well.
Well, you tell us. The markets have been, just in its own universe of pain. Do you think that's fair to say? Because the biggest factor that was troubling markets, which was the Middle East crisis and what's happening in the Strait of Hormuz, seems to be unwinding and not becoming such a big problem. Crude prices are cooling off. Q1, by most standards, was better than expected. But you're not seeing that kind of a response. Why is that, in your view?
Yeah, it's very perplexing, to be honest with you, that on the big macro numbers of the economy, or let's say the crisis, things have moderated for sure in a good way. But the markets do not seem to be reacting at all. And my sense is, and I've been also asking myself this question, my sense is that the market still worries a bit about the Middle East crisis, because understand this, nothing has been really put to rest here. It has all been just one announcement after the other. So there is at the back of the market's mind a lingering doubt that, hey, this could still escalate. And you never know, how these things can just suddenly flare up one fine day. So nothing has been really put to bed here. That is one major problem. The second problem, of course, is that the data center trade, or the AI trade, does not seem to be losing momentum. I mean, if you look at it that way, people have been talking about it, that at some point that will kind of start to fall and money will rotate back into India, which is a okay thesis. But it doesn't seem to be happening that way. And, Korea and all, once in a while they have their 10% down days. But by and large, the US has held up quite well, which is the real fountainhead or the source of the AI trade. And as long as that keeps happening, then the global sentiment towards India will remain very tepid. So that is the real problem. The sexy part of where the bull market lies globally is not really present, at least not in the large caps. But that being said, it is present in small part in the small caps, and that's exactly where you've seen the big momentum upwards. Yeah. So the markets, while at the surface look very tepid, very, very senile actually, under that is anything but that. And that's where the money has moved. That's where the money has been made.
The use of the word senile is particularly interesting when you're talking about large caps. Are you referring to it in the context of has-been kind of companies or growth or exciting stories? And in the small caps, it's a great idea. You spoke about it the last time we spoke. But now aren't valuations beginning to bother you?
Yes, so, Neeraj just mentioned offline before the interview started that I mentioned on another interview something about valuations, and I think it's as good a time to revert back to it, unless I'm preempting you, Neeraj.
No,
please continue.
Go ahead. It's a free-flowing conversation with all of us.
So in India, anything which is low P should be avoided like plague. And, I mentioned in a previous interview with another ex-journalist, TV anchor, that, the way we should look at P ratios, and I do believe that somebody else, mentioned that this was coined by my old and dear friend Samir back in the 90s. I did not recollect who had talked about it. It was not my invention for sure. But anyway, the point being that in India, you never buy cheap stocks because India is probably the smartest stock market in the whole world. It prices things reasonably okay. It can go overboard on the higher side, but it never goes overboard on the lower side. A low PE stock deserves to be low PE in most cases in India simply because a low PE, the PE ratio, the way we have defined it in India, is nothing but the number of years the company is going to remain in business. So if it's a 5p stock, it will remain in business for 5 years. If it's a 50p stock, it will remain in business for 50 and probably even more. So that is the central thesis, that you might crib about valuations being very expensive in the small caps and more reasonable in the large caps, like private sector banks are now at the lowest price to book in decades now. Is that a good thing or a bad thing? In India, a compressed valuation is almost always a bad thing. Almost always. There are no absolutes, but almost always. So my view is the small caps reflect the inherent growth ahead of them. The large caps are cheap because the earnings number may not be as good going forward. That's it.
Agree. Shankar, but two questions to that, right? And inherently just agree with that, because the growth seems to be at the broader end of the spectrum and not necessarily in maybe 35 out of the Nifty 50. Maybe there are 15 which are doing well and showing growth, and therefore they are doing well. The remaining might not be. But that argument would therefore mean that cyclical names which are going through a bad cycle and therefore are correcting and contracting P multiples should not be bought into, because then how else do you buy cyclical companies in order to make money if you don't buy them at the bottom of the cycle? And you're a master of cycles per se, right? Because you're a hare and not a bull or a bear.
So, everything has got a cycle to it. So everything is broadly cyclical. There's nothing structural about most companies in the world, and in particular in India. But the way to buy cyclical companies, commodity companies, or even, let's say, banks, one method could be, and it's a reasonable way to look at it, I've looked at it that way for a long time, is that you buy them when the P multiples are actually very high rather than when they are low. What that means is that at the bottom of the cycle, the profits kind of compress more and the market cap doesn't compress as much, which is why the multiples expand. That is usually a good time to buy these kinds of companies. While, on the other hand, when multiples are compressed, which means profits have gone up and the market is now paying less and less for every dollar or rupee of earnings, that's a time to probably exit them. This is broadly the way you play cyclicals. Structural stories, that's a different issue. But basically, you buy them at higher Ps rather than at lower Ps, or higher price to books rather than at lower price to books. That's the way to play the cyclical plays within India. In the Nifty, there are mostly cyclical plays. You see, there are very few tech-oriented plays, which is why the cheapness of the Nifty, as people keep talking about on social media, is probably a problem more than a solution.
Yeah. Agree completely. But Shankar, does it befuddle you? Does it worry you that some of the most heaviest weightages of our markets are stocks which have not done anything for the last 3-4 years, and from the looks of it, I mean, unless things change, don't necessarily have triggers which will make them move higher in the immediate future as well? Does it worry you? I mean, Reliance, HDFC Bank, the list is fairly long, if you will.
Last I checked, at least a couple of them are trading at the 52-week lows, if I'm not mistaken, or at least close to them, right? So, I mean, that's the way markets are. I mean, I actually tweeted a couple of days back when I just asked my analyst at GQ that, hey, tell me the churn in the Nifty and the low and the smaller indexes of the Nifty, and the data that I posted on my Twitter account was very illuminating, that in the last 2 years, if I remember it correctly, only 6% of the constituents, or maybe 8% of the constituents of the Nifty have changed. Okay? While for the Nifty 150 or the 500, the change is something like 45 or 50%. 50% of the smaller indexes have been changed and rejigged and reconstituted in favor of newer, fresher legs. It's like the bench has now come out to play rather than the old guys who were tiring, perhaps. The Nifty has not had the same kind of churn at the top. And the reason is very logical, that the Nifty requires a higher bar for companies to enter their market cap and track record and whatever other parameters the exchanges follow. That is the real problem, that the smaller cap companies or the smaller cap indexes have rotated very quickly in favor of the hotter plays. So the tech oriented plays, or the consumer tech plays, or the data center plays, the optical fiber plays, they have made their way into the 150s or the 500, but the Nifty 50 has remained fairly static and stagnant. Even there, if you see, Zomato entered it eternal, like I don't know, a couple of years back, but actually it delivered nothing in that period. So the core problem in a large index is you enter it when you're already a very large company. You never enter it when you are the young Turk. That you enter the 500 at that point in time. So to reach the 50 level market caps and the liquidity and all the other parameters, you have already pretty much hit a ceiling for your market caps. I mean, Zomato, for whatever goodness it might be having, to expect it to triple from here or when it entered the index is a bit of a reach. But a 500 stock can potentially triple. So that is the core arithmetical or mathematical reason why the Nifty has not done well. The churn has been very, very small as opposed to the 50% churn in the smaller cap indexes.
Important. Shankar, hi, Alex here. So, speaking about that, and just to drive home,
you were the guy asking me tough questions that day. I remember. I have a very long memory about all these things.
I'm glad that you remember. But on that day, you had said that nobody asked you tough questions. I'm glad that you're acknowledging.
You complained.
I know. I agree. Okay. I called you babies or something.
No, that's how I grew out the beard. Anyway, but having said that,
actually, you should put Shankar and Alex on a two-window. Shankar, you can't quite see him, but he's got a beard which looks exactly like yours
looking
right
super cool, man. Welcome to the club.
Thank you so much. But to drive home that point on large caps, for those people that are waiting for a reversion to the mean, so to speak, doubling down at these moments, whether you call it contra, whether you call it value, and saying that this will eventually turn around, you're saying that effectively you'd have to wait for a long time for something like that to pan out?
Not a long time. Let's put it in perspective. The large caps in India do not represent what is in demand across the world, which is the tech plays, the data center plays, the AI plays. They do not. They are not at all represented, and Eternal doesn't somehow make that cut anyway. That part of the market is finding place in the smaller cap indexes. All right. Now you can argue that at some point AI will go out of favor and money will rotate back into the Indian large caps. My view is I don't see that happening. Even Nvidia declared pretty good numbers. Aftermarket, I think, is up 5%. So market has taken it reasonably well. I do not see that trade going away. Now, if that trade does not go away, because again, I can spend a couple of minutes on this. This is a very important point. The IRRs on the data center business, I was looking at some numbers, is depending on what assumptions you take, a 5-year IRR will be about 18%, maybe 20%, maybe 21%. Something like that. Now, people crib a lot about Google has got negative free cash and it's borrowing money. Look at the data. If you are able to invest at an 18% IRR by borrowing at the long end of the market, let's say the 30-year is 5% and change, and add 1% or 2 premium as a private sector company, if you're borrowing at 7%, investing for 18%, what is so terribly wrong in that? And what is so terribly wrong in these large Mag 7s or the Mag 10s having a bit of negative free cash? As a growth company, a negative free cash is not necessarily a bad thing. So I think everybody has kind of just started pouncing on these companies. The CDS spreads are blown up and negative free cash. But you just look at the math of what they are doing. And last point on this point, very important. The promoters or the founders of these companies, the Mag 7s, in my view, and I'm sure nobody in this panel can disagree, are the best managements in the world. Who can argue against the managements of an Amazon or a Facebook or a Google? You cannot. They are the best. They are the literally the 800-pound gorillas in this game. You tell me that they don't understand all this, that people are cribbing about negative free cash and this, that. They have been in this business for 25, 30 years. Amazon was founded in mid-90s. Google was founded in the early 2000s. They've seen the dot-com bust. They've seen the overcapacities that killed those businesses. They're aware of the risk. Despite that, if they're putting capital, I would tend to believe that they know what they're doing. I typically do not I'm not a believer in anything, but these companies have made wealth through 25, 30 years, through tough times and good times. Put some faith in their ability to understand the business cycle. They are not a bunch of newbies or young promoters with capital. They are solidly experienced founders. If they are putting in capital, I think we have to put a little bit of credence to that.
That's an important point. And the numbers are supporting that, Shankar. So you can't argue against that. The earnings growth is there. Having said that, you spoke about the small cap space. And of course, you can splice and dice and talk about which spaces are doing better than others. I'm just wondering whether there's a significant element of inventory gains that you have to account for, and whether some stumbling will take place in the second quarter before the dust settles. Because a lot of these companies have pushed prices through, and they've had the benefit of cheaper raw material that is going to bleed out in the second quarter. So are you worried about that at all?
That is a worry, 100%. I mean, and if you've known me for a lot of time, I mean, I'm a worrier more than a warrior. So I like to worry about things, and that's a definite worry for sure. But I think that the small cap end of the market, some of them actually, are benefiting from this global AI or the data center trade. And I would tend to focus my capital on that area rather than look at large caps and, start to think that some point they will become cheap and they will turn back. I think there is an easier way to make money in the market. At least I have benefited from the point in March. I tweeted on March 11 that small caps are the place to be in. And since then, I've had no cause for complaint. I've almost tripled my capital because I put in capital around that time. I put my money where my mouth is. It's been working out very well. I see no reason to change the broad AI data center trade that I think will continue for a while to come.
You have to look at what you have. I just want to go back to what you were saying about some of the, I would say, big ones in the Indian equity firmament, which is where a lot of SIP money goes, where foreign investors go when they need to. And, Neeraj mentioned RR and HDFC Bank. I want to ask you about HDFC Bank specifically, Shankar, because this is an important company in terms of the presence it has across portfolios as well. A lot is going on right now. What is your core view about how solid that business is and the pain that they're facing right now?
My sense is, like in any great company led by a great leader, Aditya Puri was the best. I mean, I've had the privilege to work with him. I've known him for, around 35, 37 years. He was my very, very senior boss in Citi when I started my banking career. We've had a few drinks together. We've chatted about things. Great guy. And the reason why, we liked HDFC Bank right from the time it listed in, I think, 96 is because of Aditya Puri and the team he built around it, like Paresh and Bharat Shah and all that. In my view, when you have a leader like that departing, you will inevitably have a fairly longish period of transition. And it's not even for sure that you can get back to those levels that Aditya Puri was able to achieve, because he was an extraordinary leader by any standards. So I just think he has just created such a high bar that for any other management to walk in and do that. He was a founder. He had the passion, the zeal, the energy. The rest are all professional managers. If you see the best companies in the world today are the Mag 7s. They're almost, without exception, founder-led. This whole professional management thing that came for 30, 40 years has been found to be wanting. People want founders with skin in the game, passion in the game to be running businesses. I think HDFC Bank has that core problem. Other than that, the governance issues and stuff like that, I don't want to go into that, but that keeps surfacing in like a bad penny every now and then. Suffice it to say, I think it's just a very large bank. You will not be able to see the kind of growth numbers unless they push the risk envelope substantially. And that's been my real problem with banking, that when you want to grow too fast, you inevitably run into a problem 3 years from now. So for me, banks in general are a no-go area. HDFC Bank is a no-go area. People have been talking about two-time book or whatever it's trading at. That's not a good time, or that's not a good enough signal for me, or for that matter, any other large bank in India.
Okay. You mentioned large banks. So any specifics in the BFSI space or anything that you're seeing interesting which is overlapping with your small cap bet?
So, I mean, I bought a bit of Paytm. So that's been working out okay. And I don't want to talk about individual names, but since you mentioned, because I don't like the space overall, the BFSI space, but I made an exception. It had become cheap. I just put in a bit of money. It's been doing well. Other than that, I have no reason to be very bullish about the space. But overall, I have been reasonably bullish on the consumer tech space in India. And I remember we spoke about one listing when it was a very controversial listing, I think last year, probably, right?
Lenskart.
Something that makes spectacles or something,
Yeah.
right? And I had said that why are people bashing this company when they bought Nika at some 50, 100 times revenue,
recall
and
that.
yes, exactly, and it actually worked out very well. And so those kinds of businesses in India in the last, at least stock market wise, have done pretty well if you see them. So that's a space I've liked. I've put some capital into them. But broadly, the tech space, consumer or infrastructure tech, is where I have put in my capital. And I think that's the right space to be in going forward as well. Not the traditionals.
Infrastructure tech, sorry, if you can just elaborate a bit.
Well, I mean, you have companies making stuff for the electrification theme in India. Because obviously with data center comes electricity. You can't have that without that. There are companies supplying goods, components to the large scale electrification that we need, whether it is the renewables or even the thermals. You have companies supplying cables to the data center side. And remember, things have changed. I mean, understand this one thing about the data center boom. It's not a one-time capex business. I'll give you an example of optical fibers. Okay, it's been a commodity for the longest time, and I bought Corning in America, a while back. It's, I think, gone up 3 times in the last 6-8 months time. If you look at the history of optical fibers, earlier you had a simple bunch of fibers being put into a hose, and that was it. Now with the desire of AI data centers to have more processing speeds, the technology is changing rapidly. So you have multi-core, cables. You have now hollow core cables. You have the intermittent bonded ribbons, the IBRs. A lot of tech has come into it, and the innovation pace has accelerated. Which means that companies which are doing this, whether in India or globally, the companies in India, the companies in China, they are assured, in my view, I could be wrong, of multi-year capex supplies, because the technology moves. So the new data center that come up will need to move to the newer tech available in just the cables part, and similarly for all other components. So I'm just saying that the AI data center boom is not like a 1 year, 2 year boom. You need repeated capexes as the data center company to keep up with the new guys who come in, because the new tech will have more processing power, more throughput than if you set up a data center 3 years back, which is good news for the companies engaged in different parts and ecosystem of the data center place, which is why I like it. It's not a one-time boom. In my view, again, we could be wrong. I just think it is a structural story, being played out. America has benefited, Chinese companies are benefiting, and Indian companies are benefiting as well.
Shankar, we're seeing a tentative restart of activity in the primary markets, and you may have looked at some of these issuances, right? Or maybe looking out for those that are in the wings, so to speak. Is anything enthusing you, and what do you think about the pricing right now? Because more often than not, there's at least a little bit of a pop. So it would go to suggest that they're not pricing it so aggressively as they were when the markets were going a little crazy with IPOs.
Yeah, I mean, I agree. I mean, the pricings are not that I invest in those spaces. I keep a very cursory view of that, because my view is that if you lock up capital in 100 issues or 50 issues, 25 issues, you're missing out on the action in the secondary market. So it's all about capital allocation. But on a macro basis, I think more rationality has dawned. All of that is good. But it also is a problem that it keeps sucking away capital from the secondary market. So, we need just a small uptick in India in the secondary market for QIPs and preferentials and IPOs to just keep gushing back in, which is really what the problem is. I mean, if we just keep sucking out the liquidity, it's not a problem. Companies need capital. If the market supplies them capital, they will take it. But then puts a lid on the secondary market performance, and which is really what we have seen so far.
Okay. Shankar Sharma, always a pleasure talking to you. Today was no different. We got some very interesting thought processes around how people should approach investing in general and investing in the current time. So thank you so much for that, and looking forward to talk to you more often.
Me. Thank you, guys. Have a nice day.
Thank you. Well, interesting takeaways. Cyclicals, be careful there, buy them not at the bottom of the cycle, but when the cycle changes. I thought that was a takeaway for me.
And the constitution.
And consumer tech being that mainstay.
The constitution of the benchmark as well. That's something
Senile.
that's very interesting.
I mean, I've heard
a few adjectives being used. Yeah.
I've heard dinosaur. I've heard lots of things. I've never heard senile.
Yeah,
so senile is a new one.
one.
All right, that's all the time we have on India Market Open. Thank you so much for watching, from everyone sitting here and everyone who puts the show together. Ask Profit up next. Don't miss it.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ।
Sorry, I'm late.
No worries.
So our daughter, she's starting university in a few years. How do I safeguard against these dollar fluctuations?
So factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Great. Please continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first. Ionic Wealth AI.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना। स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. asking the questions that couldn't wait. Of telling the stories that could.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains nearly flat at that $78,000 level mark. SEC sends digital asset custody rule to White House. Shinhan Financial partners with Visa to test stablecoin issuance. And Bernstein forecasts Bitcoin hitting $150,000 by mid-2027. Well, the Bitcoin remains nearly flat at that $78,000 mark levels for the second straight session. The US spot Bitcoin ETFs has seen 7 days net inflow of roughly $2.15 billion. Largely, the tone remains bullish for the crypto ecosystem, but the technicals still suggest overbought levels. The Securities Exchange Commission (SEC) has submitted a digital asset custody proposal to the White House Office of Management and Budget for the review. The changes would modernize outdated provisions and clarify how advisors and funds may actually store crypto assets while maintaining investor protection. This move shows more acceptance in management advisory for the crypto ecosystem. The South Korean banking giant Shinhan Financial has partnered with Visa to test stablecoin issuance. This includes, of course, transfers and redemption on Visa's platform. This is Shinhan's second major stablecoin deal in 4 months as South Korea moves towards rules that could require banks to control at least 51% of own stablecoin issuers. Now, the global banks are also advancing plans for a global stablecoin consortium as well. Lastly, Wall Street brokerage firm Bernstein forecasts that Bitcoin will reach a new all-time high of $150,000 by mid-2027. Looking further out, Bernstein sees Bitcoin hitting $300,000 at the peak of the next bull cycle in 2029. Bernstein argues that a broader debasement trade is likely to provide a tailwind. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. There are, of course, mixed cues coming in when it comes to Bitcoin and Ethereum as well. And these are the important pivot levels for both support and resistance flashing on your screen. Do track them. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook is bullish but overheated. We checked the fear and greed index, and right now also it's flashing extreme greed. Now the rally has matured and may be there for a consolidation phase going ahead. But remember to monitor Bitcoin's price action, which can happen between that $75,000 to $80,000 range. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. My name is Puneet Zaveri. With me today is Thomas Sarkar. And over the next hour or so, we'll try and get to solve all your stock-related queries. A quick check of how the markets are doing though, because yet again, you've had a good open and then sell off right at that point. So we're now down almost 90 odd points from the day's high. 24,277 is what the level was at the start, but couldn't hold on to that level yet again today. And we continue to be in this range between 24,100 and 24,600, though at the lower end of that range too. When you look at the heat map also for the Nifty 50, that continues to be a couple of key counters that are buzzing on the back of news flow, but largely continuing to see pressure on quite a bit of them in the heat map too. So HDFC Bank, we spoke about it, my colleague Nimit has highlighted the legal case as well, and that's having a bearing on the stock today. Shriram Finance, NTPC and HCL Tech are the other losers for the Nifty 50 today, while you are seeing some gains on Kotak Mahindra Bank as well as SBI Life at this point of time. Also look at what you have seen in terms of the sectoral impact. Now Nifty IT was doing well, but now off the highs for that counter too. So you're seeing some pressure on Infosys off the highs today. Nifty Realty and Private Bank are doing well, but media, oil and gas, FMCG, as well as the PSU banking index continue to be the biggest losers and in the red as well. Advanced decline ratio is the other factor before we move on to your stock related queries as well, because yesterday was a day where you actually had the advances doing much better compared to the declines. Today though, that's gone back to the levels that we've seen over the last couple of weeks, where the declines have had a bigger impact. The mid cap, small cap, if we can pull those up as well. Yesterday was a good day for the small cap index. Mid cap continues to be almost flattish with a tinge of red, but similarly on the small cap 252. And for the individual movers today, you would look at the BSE 500, a few of them that make it to our list today. Of course, you're seeing some good ones on Bombay Burma. That's the first counter, up 13%. Sterlite as well as Jindal is also doing well, while Tata Power, on the back of that Singapore order in terms of the legal case, has been knocked the wind out of the stock and the momentum, so now down 4%. Imami is also continuing to be under pressure, maybe some impact because of the Nepal floods amongst others, but those are all the key counters that we are focusing on today. But let me welcome in our guest. We have Kush Bora, founder kushbora.com in the studio because it's Thursday, and Shaina Mukaddam, independent market expert on the fundamental side of things. Both of you, thanks so much for joining in, and a very good morning. The first question, Shaina, coming to you from Govind, who's from Hyderabad, asking an interesting one. Wants to know if it's the right time to buy Amara Raja as well as Tube Investments, both those counters. He has actually wants to invest 10 lakh rupees on both of those counters. What would be your recommendation? We've seen a very long cycle of investments in the battery space, from both listed players. Any view though on the long term?
Well, yes, actually, and there's a lot happening in the battery space. And the capacity that Amar Raja is putting up for the lithium battery, actually, it's quite substantial, and that I believe should drive growth going forward. I would believe that if one is holding it, one can continue holding it, because I think the demand remains pretty stable. And even if you look at the balance sheet, despite the investments that they are making, it's the balance sheet is strong, so one can continue to hold Amar Raja. And the other one was?
China. Yes, China on Tube.
Yeah, Tube Investment. I think there, the way the stocks within their portfolio are performing and the management drive, I would believe that even Tube Investments is a good long-term story. So I think both the stocks can be held for the longer term.
Got it. Well, the next question is from Padma from Bengaluru, and viewers, you can also call us, speak to our guest directly on your stock related queries as well. Padma from Bengaluru is actually asking about Tata Power, Kush, and today, of course, that arbitration award and arbitration case actually is having an impact on the stock. She's holding shares at 390. Wants to actually know if she can add more. What's the price to average? As the first question that comes to you, but what are you picking up? Very good morning.
First up, a very good morning, guys. That's a great look, Puneet, by the way.
Thank you.
Good morning, Shaina. See, Tata Power is a stock which hasn't done well. Even in the market rallies, it's not really participated. It's given way. Immediate support at about 345. That's been taken out. Major long-term support at about 325, 330. That could well come into test. I wouldn't for sure recommend, averaging. I generally don't. This is a stock which doesn't really fall into that category where, you could perhaps consider because of an uptick. So I would avoid, Tata Power. If at all you still want to hold, by the way, it's an exit. But if you still want to hold, keep a strict stop loss at 325, 330 levels. But I think you're better off exiting.
Got it. Shaina, just coming to you for a quick view as well, because we've seen a very big impact, right? Almost $400 million kind of an impact on this one. Any view that you have on the counter for someone who's already holding?
Yeah, I mean, I would say it's a positive. It's not that much of a negative, and one can continue to hold. I would go with it.
Well, the next question coming through, and this one's actually a caller from Sambhaji Nagar. Sudhakar actually has a stock-related query for us. Sudhakar, very good morning. Welcome to the show. What's your query?
Good morning. I am holding 217 shares of Vedant Power at 79 rupees. Whether to add it or hold it.
Okay, got it. Shaina, would you have any view on Vedanta Power? Of course, one of those demerged companies now out of Vedanta, but any view that you have on Vedanta Power or on any of the other demerged entities, any preference?
So I think of the whole group, I would prefer Vedanta Aluminium. There, I believe that not only the investments and increase in capacity is going to add, but also the demand and the overall, average realizations for aluminium are likely to remain pretty stable going forward. So I think that is one stock that I would continue to like, and also Hindustan Zinc. I think the government is not likely to actually disinvest at least in the near term, and the prices, the average realizations over there for zinc, silver remain stable, quite good. So I think these would be my two preferred picks in the group.
Queries coming in from Naveen from Chennai. Is holding 31 shares of Sheela Foam, bought at an average price of 850. He wants to hold this counter for the next 5 years. What would you recommend on this one, Shaina?
I think I'll just pass this question.
Kush, on charts, Sheela Foam?
Yeah, hasn't done well. In fact, it's fallen quite sharply from those 2000 odd levels. There is recovery underway, but nothing meaningful. So 5 years, not sure, but if I do have a position, then I'd be inclined to keep a stop loss around 600 or maybe just under.
Got it. Well, the next question is on ITC Hotels. Our viewer holding shares at 150, and he wants to add more Shaina for the long term. Is this a good price as well as good pick in the hotel space?
See, I believe that at current levels, the valuations remain pretty attractive actually. They have close to about 13,000 rooms and they are expanding it. They're talking of expanding it to 18,000 over the next 2 to 3 years. I believe the management is strong. The stock has corrected a lot. And at current levels, I would believe that it is a good price level to average. And if you're a long-term investor, I would definitely think it will give you good returns, because not only does it have an opportunity to grow internally, but also there could be various other acquisitions that they could do. The balance sheet is quite strong. So I would say yes, you can average and hold it for the longer term.
Right. The next query is from Sanjeev Jain from Rajasthan. He is holding 3,000 shares of GMR Airport, bought at a price of 108. Can he hold this counter for long term, Shaina?
Yeah, I think there's a lot happening over there. There could be some near-term issues if the government changes policies. So, if you are a long-term investor, yes, in the shorter term, you could see some bit of correction. But I would still believe that if you're an investor and you're holding it, you continue to hold. You can keep a near-term stop loss close to about 96. But otherwise, I think there's a lot of opportunity out there, and one can continue to hold for the longer term. Shorter term, you could see some bit of softness.
Got it. Let's go across to Pune now. Parab, dialing in for a stock-related query. Parab, very good morning to you. What's your query?
Good morning. My question is regarding Lupin. What is the outlook for Lupin as a fundamental outlook for the Lupin? And also want to understand one thing. Why market is giving so much appreciation for all these CDMO companies like Newland, Laurus, instead of all these traditional companies like Lupin?
Right. I mean, and
in spite of not bad results.
Right. And Parab, it's a fair question, because we've seen, of course, for all these players like Laurus, as you mentioned, have been rewarded. But Shaina, comment on this as well. On Lupin first, what's your long-term view? And as Parab highlighted, I think CDMO being the next big opportunity, I think the market's giving a premium valuation to all those players. Is it justified? Or do you feel that the traditional players have merit in the current state? So either of those, what's your opinion?
Yeah, hi Parab. I think that is a very interesting observation. And to an extent, I would agree with it. What I feel is that it is happening because if you look at the equity structure and equity holdings of most of the CDMO companies, they're pretty concentrated. So that gives, if the numbers come out good, which a lot of them are reporting decent numbers, especially the stocks that you mentioned, then the bounce or the upside is pretty swift. Whereas for the larger pharma companies, like for example, you mentioned Lupin and even the other large companies, Arbindo, here what is happening is one is the US FDA is very closely monitoring. So to an extent, you don't know when the negative is coming. So I think investors are wary of giving it very high multiples, you know, uh, to start with, but the numbers do drive good a good performance does drive the stock price. Now for Lupin specifically, I think yes, if you look at pure valuations, it is quite attractively valued. If you look at it in terms of turnover, compare the turnover to the EV. Okay, it is just about 3 times, which for a stock like Lupin is quite attractive. Also, if you look at EV by EBITDA, it's about 12 times FY28, 1 year forward. So all these factors do, I think, I would feel that the stock can perform well if you're a medium to longer term investor. They also have some new products that they're launching in the US, which could drive the growth in the second half of FY27. So to an extent, yes, you can buy, but I would say if you want to buy Lupin, you can buy close to around 2,000 rupees. Any small dip from here, that would be better buy price so that you can get a decent appreciation over medium term.
Right, the next is a caller query coming in from Ludhiana. Suresh, you can go ahead and ask your query.
Good morning to everyone.
Good morning.
I would like to ask this question to Mr. Kush. I have been waiting for a very long time to talk with Mr. Kush.
Right, and what is your question and what is your query?
Query is that I am holding IRCTC shares, 250 shares at the rate of 804 last from 1.5 years. And I am unable to decide what to do next because I am waiting long to get some results, but nothing is happening.
Okay. Kush, what should he do at this moment?
First up, a very good morning, Suresh. And I'm so sorry you've had to wait so long just to connect with me for this query, but that's so sweet of you. Now, the structure for IRCTC from a medium to a long-term perspective is not all that great, right? So I'll have to be the bearer of the bad news here that, the stock could actually slide further. However, there are some positive divergences emerging on the weekly and the daily setup, which suggests that the near-term selling pressure might just be over and you could get a rebound. Now, even if that comes about, where could the stock head to? I think the stock could head to about 525 to about 575 kind of levels, still remain substantially below your buy price, but at least the loss that you're incurring right now will be lesser. So my suggestion, because of these positive indicators on the charts on the weekly and the daily setup, hold for now, exit on rebound, but in any case keep a positional stop near the 455 level. So hold, exit on rebounds.
So, Kush, basically what you're saying is case train se aap utar jaiye, get to a better perspective in other stocks as well. But let's go across to the next question. I want to take this one with you, Kush, again, because our viewer Nand Gopal from Bengaluru is holding on to Dixon and Sirma, but he wants to know about PG Electroplast, if it's a good time to buy into this counter now. We've seen Q1 come and go for PG, and actually it wasn't a very great one, but stocks held up. So any opinion now for Nandgopal, should he add this third name in the EMS space?
Yeah, so both of them are good names that he's got in his portfolio. I actually remain very constructive on PG Electroplast amongst all three for very different reasons. Sirma, we know, has run up quite a bit, so doesn't offer a great risk-reward ratio. Dixon moves up, but then you see every now and then a selling pressure come in. So PG Electroplast also, by the way, sees selling pressure, but the steady uptick on this one has been very encouraging. Volume action on the days when it gains is a good delivery markup. So positive on PG Electroplast. Yes, you can add it from a medium-term perspective. Positional stop near the 565 mark. And on the way up, I wouldn't be surprised 630, 675 plus kind of levels could also be seen on this.
Interesting one. But let's now start the rapid fire round in this edition of the show. Shaina as well as Kush, you know the drill. The first question from Bharat, Kush on Prestige Estates. He's holding shares at 1626. Wants a short-term view.
Okay, you can hold, not enough momentum. Stop loss at 1575.
The next query is on AFCOM. It's for you, Kush. Uma from Bangalore is holding few shares, bought a price of 1,608. What would be a good, any targets on this?
AFCOM Holdings, is it?
Yeah.
I'm sorry, what's the buy price?
Didn't mention.
Okay, fair enough. So there is momentum, but it's waning. You can book partially right now and hold the rest with a stop loss at 1525.
The next one's coming in on Bharti Airtel. Madhav from Hyderabad wants to add it for the long-term China. Is this a good time?
Yeah, I think one can add Bharti Airtel for the long run. Yes.
The next one is on NetWeb Tech. It's for you, Kush, again. Mr. Chaudhary from Andhra Pradesh has bought 198 shares at a price of 5,368. He's currently sitting on a loss. For short term, should he continue to hold? Any targets, any stop loss?
Yeah, we discussed this twice yesterday and today on the morning show. You can hold. Buy price slightly elevated. Stop loss at 5,000.
Kush, a different one, because I think our viewer needs some help on Vakrangi. It's a stock we've not discussed at all because of its nature. Now, Satya Narayan owns actually 13,000 shares at 12 rupees. Stock's barely moving, but any view, should he just exit at any chance he gets?
After a very long time, the stocks come into discussion, and for rightly so. I don't see too much happening with it, but if you still want to hold it with a stop loss at 5.5, but exit at rebounds.
Okay. The next one is on Ircon. Murli from Hyderabad is holding 200 shares, bought at a price of 80. Should he continue to hold this counter China?
Well, I'll pass the question.
Kush?
No, you can hold this, but I will suggest a stop loss at 118.
Manohar from Pondicherry wants to enter the insurance space. China is asking what would be a better pick between life and general.
I would prefer life, and I think SBI Life looks reasonably priced compared to the rest of the companies. So I would prefer SBI Life.
Okay, the next one is on IGL. Manju from Amritsar, Punjab is holding 3,000 shares, bought at a price of 157. Should she continue to hold this counter, China?
I think it's better to switch, exit.
Procter & Gamble Health, Kush, the next one. Priyanka Asher from Mumbai holding shares at 4936, asking a short-term view for a 300 shares.
Again, this is more of a rebound play, not enough momentum going for it. In fact, there's downward momentum. So while you can hold with a stop loss at 1,000, exit on rebounds again.
The next one is on VRL Logistics. It's for you, Kush. The viewer hasn't mentioned name, but is holding few shares, bought at an average price of 190. Should he book profits?
Yes, that's a good idea. You can book profits right now.
Concord Biotech is the other one. Our viewer Savita holding shares at 1,200 China. Stock seen a rebound after a while. Should he hold?
I would say yes. As of now, given the bounce that it is going through, yes, it is a hold as of now.
The next query is on Geo Financial. On charts, Kush, how's it looking? Should he buy?
No, not really. If you have, you can hold. Stop loss at 225.
Next one's from Kavita from Australia, Kush. On Patanjali, our viewer holding shares at 470 wants to know if that price will come back and what should she do then?
Unlikely. But again, I would suggest a stop loss at 330. Exit if that is broken. Don't see enough momentum building on this also.
The next query is on data patterns. It's for you, Kush. Asma from Bangalore is holding 10 shares. Should she continue to hold or exit?
Oh, data patterns you can hold. Stop loss deepish, close to 4,400 or thereabouts. Could continue to see, a consolidative upward biased move.
And the last one for the rapid fire on DLF, Sairam holding shares at 814 China. So he's currently sitting on a loss. Should he average down, continue to hold?
Yes, I think at current levels he can average, and I think he will make decent money if he averages at current levels. So yes, average.
Got it. Well, that was the last question of the rapid fire, but stay on China and Kush. A lot more stock related queries on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lords Mark Industries, हमेशा आपके साथ. Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday.
Welcome back. You're watching Ask Profit on NDTV Profit. Moving on to an exclusive story. Race to buy Nuvama is heating up. Now, sources are suggesting that banks have also entered the fray. Let's get in Nisha Poddar with the exclusive details on Nuvama.
Thanks for that. Yes, it's a large transaction that is live right now in the financial services space, and sources with direct knowledge on this particular development are saying that the bids for Nuvama's stake buyout, where PAG, its single largest stakeholder with 54% stake, is really looking at an exit opportunity. That particular bid process and the bids are expected by the end of this particular week is what we gathered. Now, when we talk about the deal structure, it's still in the work in progress at the current moment, because remember, a bulk of the business coming in for Nuvama comes in from the custodial services business, and the other part is the wealth business. We gathered that some of the large banks have seen an opportunity in the lucrative custodial services business, and therefore Axis Bank, Federal Bank, HSBC are the ones who have been in talks and have shown interest thus far to buying out PAG's stake there. And now, whether or not this particular company will be bifurcated into two pieces in wealth as well as custodial services needs to be seen. And here are the reasons for it. We know about Nuvama's custodial service business by way also of the Jane Street controversy that took place, where Jane Street had hit a regulatory hurdle, and they are a big client for Nuvama. Therefore, SEBI, market regulator SEBI's comfort in who really buys out the custodial service business with the fiduciary responsibility will be a critical aspect to watch out for this particular transaction, and that's where large banks are seeing an opportunity there. Whether or not they bid for wealth business also needs to be seen. We also know from reports that Chris Capital, CVC, EQT and General Atlantic, these are some of the companies which have been interested in the wealth business, and some of them are also interested in the custodial services business. So whether or not the business will be bifurcated, how many banks and private equity really bid for it, needs to be seen by the end of this particular week. But this is indeed a large transaction really taking place, worth close to about 18,000 crore rupees, which is PAG's stake here. We reached out to all the participants named in this particular story. We did not get comment from any of them.
Well, thank you, Nisha, for that. But moving on to another exclusive, sources are saying that the government is exploring a potential merger between two listed government companies. Let's get in my colleague Shrimi with more details on the same.
Absolutely an interesting development on the PSU restructuring front. The government is exploring the possibility of merging IRCTC with Balmer Lorry, a Category 1 Mini Ratna PSU under the Petroleum Ministry. Now, sources tells that the proposal being discussed between Railways, Oil and Finance Ministry recently on the feasibility of merger between these two entities. Now, why Balmer? What we also learning that one, it's a historic PSU with businesses across manufacturing and services. While it has strong presence in areas, especially in oil packaging, but it also handles air tickets booking for almost all PSU, which making it an important part of its business and almost contribute around 25% of revenue. Now, from IRCTC perspective, this could be significant because the railway PSU has been looking to expand and strengthen its air ticketing businesses, and hence it has made a proposal recently which is now under examination. What we also learning that the concerned ministry is looking into whether Balmer can be better capitalized and allowed to focus more sharply on its core businesses, or merger could be a better option. So at this stage, this is more of an examination and checking the feasibility rather than a final decision is what indication so far we are getting. But the bigger picture also is that government appears to be looking at whether combining complementary PSU businesses can create greater scale up the business and help these companies utilize their assets in a better way. And you will see that coming in a lot of other sectors, especially railways, in the coming days.
Thank you, Shimbi, for that exclusive information coming in. Let's get a fundamental view with Shaina on the same. Shaina, how are you looking at this potential merger that the government could be merging Balmer Lorry with IRCTC? Could be positive for the retail shareholders of Balmer Lorry, but for IRCTC, how are you looking at this counter?
Well, I think, the merger will be on equivalent basis what the market price is currently and the market cap. So I don't think, if you're looking at the merger between the two, it's going to make too much difference. I think IRCTC, while shorter term, the overall stock, I mean, so I would say for the combined group also. So I would look at it as a positive because IRCTC seems to be consolidating at current levels. But the opportunity over there is strong because the number of new trains that the railways is talking about of introducing over the next 2 to 3 years is quite substantial. So I think the business opportunity is there, but and even the balance sheet is reasonably good. So I would think the combination of the two will be decent. I mean, except how they will merge it together in terms of operationally, I don't know. But otherwise, it doesn't seem to be too negative for either of the two.
And Kush, on Nuvama Wealth, this counter, it has been in buzz. This story has been quite around. But on charts, how is it looking?
Very interesting, very interesting. The stock actually ran up quite a bit. There was, a profit booking round that incidentally was at the 61.8% retracement around that 1600 mark, right? And then it's rebounding from there. This is a good time to accumulate with that 1600, 1625 as your stop loss. Could hit all-time highs, 2100 plus levels also. In the same space, you've got 361 as well, which because of its FNO positioning has seen major resistance around the 1200 mark. But once that is taken out, new highs of 1300 plus also on the card. So positive on the space. Right now, if you want to pick, Nuvama.
Okay. Moving on to a caller query now coming in from Delhi. Pawan, you can go ahead and ask your query.
Okay, yeah. I have a specific question for Kush, and his recommendation has been always spot on. And the electrifying energy, I love him personally. Anyways, thank you for that. But my question is, Manipal Hospitals, the recently listed stock. I got the through IPO, and then I added. Now I have 450 shares of that at an average price of say 655 or 60, somewhere around that. And I just wanted to understand that I need to add more because of the space itself, or I can actually I'm an investor and I can wait for next 5 years. So what would be your take on that?
Kush, your take.
Pawan, first off, thank you so much for all the lovely words. Right back at you, mate. But you know what? You've asked me a query on a stock which is recently listed, and my skill set being technicals doesn't really give me that much history to give you a view on Manipal. So you'll have to seriously excuse me on that. I generally like the hospital space. Yatharth right now seems to be doing very well in terms of momentum also. So maybe something that you can consider. Apollo from a long-term perspective also is shaping up well. But sincere apologies, I can't help you with that Manipal query in particular, again, because of lack of data. But thank you so much for redirecting this query towards me.
Well, moving on to another caller query coming in from Bangalore. Venkat, you can go ahead and ask your query.
Yes, good morning, sir.
Good morning.
Yeah, I have Hyderabad Hospital at 55 shares at 562.
Okay.
So I have two questions regarding this one. So can the stock reach 1,500 rupees in the next coming 2 years? And second question is, shall I add some more at this price or like that? I want to know.
And you can hold the counter for long term, I believe.
Yeah, 2-3 years I can hold.
Okay, Shaina, your view on Yatharth Hospitals?
Yeah, Yatharth definitely is a decent hospital to hold. It has got about 2,300 rooms, and they are pretty well. I would say the balance sheet is quite well balanced. So yes, you can hold Yatharth hospital. And in terms of price, I think even current levels, if you're a long-term investor, you can look at. Better to look at it at slight dips because it's not very cheap. But compared to the rest of the hospital stocks, yes, it is more attractively valued. And also regarding Manipal, that was the previous question, of the previous investor. I would think it is a good bet, Manipal at current levels because the money that they raised from the IPO, a lot of it is going towards repaying debt. And once that brings down the interest costs, I think if you look at it 1 year forward, Manipal with, they are planning to expand from 5,000 beds to 10,000 beds over the next 2 to 3 years. I think that will be a very interesting bet to continue to hold. So I think both of them are interesting. And before I go, I want one more point. This regarding the merger of Balmer Lorry into IRCTC. I was just looking at the equity structure. First of all, I just realized that the government has very small equity, that also through another PSU, and the market cap is just about 3,000 crores. So it is not going to make too much difference in terms of the equity holding of IRCTC. So and because here the market cap is almost 40,000 crores. So the merger is going to be a very easy merger in my view. They're just combining the two to, I would say they don't want to hold Balmer Lorry as a separate company.
Right, Kush,
This is the advantage of having pros on the show, right? Somit and I were just discussing that let's please direct the Manipal query to Shaina because, of course, I couldn't answer. And lo and behold, even before we could, she's gone ahead and answered that query. You're awesome.
Thank you. No, thank you. Actually, because it was an IPO which I looked at and I found it very interesting for the longer term investor.
Great, great. Let's move on to our next query from Bangalore. Shiva, again a caller query coming in. Please go ahead and ask your query.
So hi everyone. I have a query on REC where I'm holding 100 shares from long back at around 350 rupees. So I see it's dropped to 310 levels. I want to know the short-term view. Should I hold or average it, or should I exit it, or should we see any retracement?
Kush, your view on RAC?
Why did he buy it in the first place, Shiva? That's what I want to know. I mean, the stock's been in a serious downtrend and it is consolidating, that too with a negative bias, right? I don't see a reason why you should hold it except for maybe, a mild rebound from those oversold territories that it is in right now. So just to give yourself that chance, keep a tight stop loss at 310. I think you can bear another 10 rupees of loss on this one, if at all it gets there. And your buy price is not too far off from here, but, at or closer to your buy price, or if it hits 310, exit. You don't want to basically enter into stocks which are in a primary downtrend. So that's just a, broad view on stocks, but REC in particular, hold with a stop loss at 310, exit on rebounds.
Right, the next query coming in from Bangalore again. Lalita is holding 50 shares of EPAC Durables, bought at a price of 251.38, currently sitting on a loss. Kush, any view on this? Should she continue to hold or exit?
On EPAC Durables, is it?
Yeah.
And the buy price you said again was?
The buy price was 251.38.
Okay, so you know what, Sumit, I've discussed this. There are times that on the show, there is a pattern that keeps repeating. Often you get queries where, investors have been holding on for, returns for a very long time. I think today is the day when a lot of queries are on stocks which are in a primary downtrend, and then we're expecting ki ab kya hoga, right? So sadly, this also falls into that category. My suggestion, you should ideally exit EPAC Durables, massive selling on this one and supporting the long term, or rather testing the long term support zones. If it breaks, the downturn could actually extend further.
Okay. The next one is a caller query coming in from Pune. Aniket, you can go ahead and ask your query.
Yeah, hi. Thank you so much for taking my call. Actually, I want to ask this query to Kush Bora sir. As I like the way they explain the stocks and the precision of the levels they give and mention everything. And by the way, sir, your smile is really enchanting. Thanks. So I have a query on Ujjivan Finance. So I have 100 stocks at the price of 44.92. The stock is little corrected. So is this a good averaging point, or should I wait for more dip?
Kush, your view.
Aniket, thank you so much, for those kind words. Almost got me to blush, right? But this is a good stock that you're holding. The buy price is excellent. You know what? I will not worry about the last few days of moves that we are seeing. 73, 74 thereabouts. It went to those levels. Now seeing profit booking. The volumes on this are very thin. So the primary trend remains intact on the upside. The breakout came above 63, 64 levels. So now that would act as my stop loss. In your case, it will be at the trailing stop loss. So even if you exit at about 63, 64, it will still be in profits. My suggestion, continue holding on to Ujjivan, a small finance bank with a stop loss at around 63, 64 levels.
The next query is coming in from Anil Nair from Abu Dhabi. He's holding 180 shares of Wheels India, bought a price of 1,550. Shaina, should he continue to hold this counter or exit?
Yeah, I think you should hold the counter. This is more a fundamental view for the longer term because they are adding a lot of capacity. And as I mentioned earlier, I think railways are increasing their capacity for wagons. I mean, their lines where they will require much more wagons and wheels. And I think Wheels has got interesting tie-ups where I think they should do better in terms of fundamentals and I would say volumes going forward. So it is definitely a hold, and in fact, I would think even you can add at current levels.
Kush, you had a view, I believe.
Yeah, so okay, so I did have this as a call 2 sessions ago. जिस दिन दिया उसी दिन stop loss hit हो गया 1500 पे, right? But like Shaina, I also still maintain a positive view on it. It had a massive run, then consolidation, and it's now starting to move up. So if your stop loss is hit and you're out of it, not an issue. But if you still want to continue holding on to this, then 1425, 1430, that's your revised stop loss zone. You can still hold on to it if you have it.
Okay. The next query is on Vedanta. It's for you, Kush. The viewer Wahida is holding around 170 shares, bought at a price of 286.35. The short-term view on Vedanta?
Yeah, not a bad entry price, slightly elevated though. I would suggest yes, you can continue to hold. Keep your stop loss at 265.
Next is a caller query coming in from Hyderabad. Murli, you can go ahead and ask your query.
Yeah, good morning to everybody. My question is to Kush sir. I have been waiting for Thursdays every week. My question is on SBFC, Small Banking Financial Corporation. I have 100 shares at an average of 90. So should I hold it on for under 1 year for a little more upside?
Okay. Shaina, any view on SBFC Finance? Kush, okay.
Well, I think I think the question was directed to Kush. Yeah. So I would let him, because he handles the question so well. So let me pass the question to him.
Yeah, right back at you, Shaina, for that. First up, Murli, so sweet of you, and I think he's a repeat. He's a regular viewer, a repeat caller. So so awesome to listen to him. You can hold SBFC Finance. Major consolidation breakout, 200-day moving average taken out, falling channel resistance taken out, and your buy price is excellent. So my suggestion, continue to hold for the next year or so. I'll not be surprised if it goes to 115, 125 plus levels also. But what you do is you keep a stop loss at 93, 94 levels, just above your buy price. So even if you exit, it's still at a profit. But the momentum is starting to build. Continue to hold SBFC Finance.
One more caller query coming in from Bangalore. Akash, you can go ahead and ask your query.
Hi everyone. My query is on Bluestone. I'm holding about 75 shares at 512. I want to know the medium-term perspective about 2 years. Should I add more at these levels or should I keep on holding? I also have Titan in my portfolio.
Okay. Shaina, should he continue to hold Bluestone for 2 years given the fact that he also has Titan in his portfolio?
So yeah, Bluestone has got I think market cap just about 12,000 crores. And I think, after the correction, it seems to be bouncing back. So yes, you can continue to hold Bluestone. You hold it with a stop loss close to about, it would be a deep stop loss, but I would say about maybe 780 type of levels, you can keep a stop loss, but continue to hold as of now. And they seem to be doing pretty good. I think gold price is also moving up, so they should do well. The second question was on Titan. I think Titan, yes, they do so well in terms of all their divisions. And if you're a long-term investor, it's got everything going for it for the longer-term investor. So yeah, you can continue to hold both the stocks.
Okay. The next one is on Tata Elxsi. Suman from Hyderabad is holding 27 shares, bought an average price of 5,951. Shaina, your long-term view on Tata Elxsi?
I think even at current levels, it is expensive if you compare it to the rest of the IT stocks. Though it has got, in terms of product portfolio and the way they operate, it is much deeper than the rest of the IT service companies. But still, I think the valuations are expensive, and I would prefer the other IT companies over Tata Elxsi. Even Persistent is, I would believe, more attractive at current levels, though there also valuations are a bit expensive. So I would say a switch.
The next one is on BHEL. Raghavi Prabhu wants to know whether should she continue to hold BHEL at the current levels. She hasn't mentioned any buying price or quantity, but Kush, your view on BHEL on charts?
Very well continue to hold. It had a massive spurt, a few months ago, and then it's consolidating that too with a positive bias, now testing those resistance levels of 440 thereabouts. I think you should very well continue holding on to this. Keep trailing your stop losses. Right now, the level sits at 405, 410, but as the stock keeps moving higher, you should continue to trail your stop losses.
Okay. The next one is on Reliance Industries. The viewer hasn't mentioned the name, Yashwant, I believe. Yashwant is holding 500 shares of Reliance Industries at a price of 1,320. Should he continue to hold this counter for short-term, Kush?
You know what, you can hold this, but like HDFC, that we've been discussing, at least on the opening show, the momentum seems to be missing. But these are historical, long-term support zones. So with a stop loss at 1250, you should continue to hold RIL. By the way, I think there is, perhaps an MSCI rejig as well, that could affect the near-term price action for Reliance and, hence the pressure. But with a stop loss at 1250, this is not a bad price to, hold Reliance.
Well, with that, let's start our rapid fire segment. Shaina and Kush would kindly request you to keep your answers short. The first one is on Sirma SGS. It's for you, Shahina. Mahalakshmi from Hyderabad is holding 100 shares, bought at a price of 1,364. Should she add more for the next 1 year?
I would say yes, you can add, but add at slight dips.
The next one is on Card Trade. It's for you, Kush. Nayan is holding few shares, bought at a price of 3,225. Any support levels, any targets that you can suggest?
For Card Trade?
Yes.
I think you can hold on to this. Deepish supported about 2,900 and definitely an immediate resistance at about 3,300.
The next one is on Tata Steel. It's for you, Shaina. Jawahar Babu wants to know whether should he buy Tata Steel at current levels?
Instead of ferrous, I would prefer some non-ferrous stocks like aluminium or even Hindustan Copper. That was just that I think it's going on. The retail portion is still going on. Tata Steel,
Okay.
if you're holding, I would suggest that you can either switch or then you hold for the long term.
Okay. The next one is on Crompton Consumer or Crompton Greaves Consumer. It's for you, Kush. Mohammed from Dubai is holding a few shares, bought at a price of 253. Should he continue to hold this counter for the next 3 months?
No, not really. I think this is in a downward spiral. You might want to exit right now.
The next one is on Anantraj. It's for you, Kush. The viewer wants to know whether should he continue to hold on to the shares of Anantraj. How much time will it take for it to reach that 660 levels?
Yeah, Anantraj you can hold. Stop loss at about 575 kind of levels. It might take some time because the momentum indicators have now gone flat. So maybe 6 months or maybe a little more as well.
The next one is on Radico Khaitan. It's for you, Shaina. Sumit from Jammu and Kashmir is holding 500 shares, bought at a price of 450. He's been holding the counter for a very long time. He wants to know whether should he continue to hold or should just book profits and exit.
No, I think he can continue to hold. Congratulations, he's made great money, but still it looks good. One of the best in the alcohol beverage.
Next one is on Siemens Energy. It's for you, Kush. Sumana from Dubai is holding 37 shares, bought at a price of 3,840. Should she hold the counter for the next 3 months?
I don't think it'll be seeing her buying price in the next 3 months, but right now, yes, you can hold. Stop loss around 3075, 3050.
The next one is on Tata Power. It's for you, Shaina. Shravan Kumar is holding 190 shares at an average price of 428. Should he continue to hold this counter for long term or exit?
He can continue to hold, but if he's looking at making good money in the shorter term, then I think it's better to switch, exit.
Okay. The next one is on Shakti Pumps. It's for you, Shaina. Jyoti from Hyderabad is holding around 50 shares at a price of 900. Should she hold this counter for the next 3 years?
Yeah, I think she can hold and she should average at current level.
The next one is on G Shipping. It's for you, Kush. Ram from Hyderabad is holding 260 shares, bought at a price of 1,560. Any stop loss, any targets that you could suggest?
Stop loss I will at about 1250.
Well, that was the last query that we had. Thank you, Kush. Thank you, Shaina, for joining us and solving as much as queries that we could. And with that, it's a wrap on this edition of Ask Profit. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time.
Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med.
Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India.
और trust पूरी दुनिया का. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो एसआईपी करो, इन्वेस्ट करो या आईपीओ, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Arunesh Chawla, the DPAM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 50.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, interesting mid-caps, and also the stocks for your profit. But let's understand which company we are getting today. It's an interesting one. Try to guess it. It's a Bengaluru-based rural financial platform, or to say, of course, an NBFC MFI company as well. Earlier, the company has rebranded itself. Stock is up 25% from March lows, and they're targeting 50,000 crore AUM by the end of calendar year 2028. Also, one more hint, the group lending contribution is roughly 79 to 80% of the total AUM. So let's understand which company we are talking about. And yes, there is a flavor of rural, there is a flavor of Grameen, and the company is in that business. The company's name is Credit Access Grameen. But why are we calling this company? What are the key reasons for it? Is there that microfinance stress, or is that over now? Erratic monsoon coming in, any impact expected in the second quarter, especially on the borrowers? Will it impact the books? Next question is the company outlook for FY27. What are the key parameters which one should be tracking? Also, the credit cost normalization, will that continue in the second quarter or not? Another important question we'll ask the management is the loan portfolio growth guidance. Is it strong, or is there any hiccup? Disbursements growth, will this be slower, or has it bottomed out as well? So there are a lot of moving factors when we judge a company like this, and the NIM guidance and the margin profile also. We'll also give you the ROAs and the ROEs and the return ratios so that you can judge the company on yourself as well. And the scale up of the retail portfolio, what engine is moving, the company and where's the strategy like? So these are the key questions we'll be asking Credit Access Grameen. But let's understand the business first, what it means, and do not worry. This is an easy sector to track and I'll explain you all the important parameters as well. Just stay put with me. It's a rural focused inclusive financial platform. It's from Bengaluru. Also, let's look at the key reasons about the company. This provides services to low middle income households, and the product profile, this includes group business, housing, two-wheeler loans. It's like an entire suite, to be honest. They're present across 457 districts in 16 states. Roughly 2,300 branches as well. But before you track an NBFC company or a housing finance company or a rural financing platform, whatever name you like, this is something which is very much important. GNPAs, lower the better. NNPAs, the story is the same. It's called net interest NPA as well. Net interest income we spoke about. Return ratios is important as well. They should be higher, the better. NIMs, very much important to track for any company in the BFSI space. GL is group lending and RF means retail finance. So these are the short forms, so do not worry while we talk and have this conversation. Q1 performance was good. AUM grew between 16% upon a year-on-year basis, topping that 30,000 crore mark. And the disbursements, that increased by only 12%, around 6,107 crore rupees. Also, let's look at the other key parameters. Healthy new borrower addition was there, almost 2.5 lakh, 35% were new to credit. And the credit cost, interestingly, that declined also. So that is a good feature for the Q1 numbers. But going ahead, how the AUM mix lies. This is the group lending GL. Another one is RF, which is 21%. Group lending still has the highest segment. Companies trying to focus to increase this statement from the retail side as well. So that is where the movement is happening, and it's much better to have that product profile as well. Now, what are the FY27 targets? 20 to 25% AUM growth is coming in. NIMs will be there between that 12.8 to 13.2%. Also, they're sustaining a 20% plus medium term AUM CAGR. And if you look at it, the credit costs are at 3 to 4% and ROE stands at roughly 16 to 20%. Also, the FY27 targets, the 50,000 crore AUM is not for FY25 but for calendar year 28. So these are the numbers, you should be marking it down. But let's wonder what are the key factors which is working for Credit Access Grameen. Strong Q1 numbers, operational update was good, especially the asset quality and the ROA numbers. FIs are slowly increasing stake in the company. We'll try to understand that. Valuations are cheaper than their 5-year average levels. Remember, FY25 was a painful year for the entire microfinance sector. Analysts remain bullish. Also, apart from this, there is a strong distribution plans and growth as well. So it looks pretty interesting right now for where Credit Access Grameen stands. But things which may not work for the company, macro disruption risk, that is not in anybody's hand. Retail loans are also having over leverages the product profile in which they operate. Weaknesses in rural income, especially the concern on erratic monsoon. We need to see, it's a developing story. Liquidity risk from bank, especially it becomes a raw material for them. And lastly, the risk of rising credit costs. Is there any hike coming in from RBI? What happens then? What's the transmission like? So a lot of moving factors, and this is the entire picture for Credit Access Grameen. But let's understand the KYC ratings for Credit Access Grameen, and especially I would like to tweak the ratings whenever we judge an NBFC company. So do not worry, balance sheet cash flows won't be here, but we'll have some other parameters. This includes the operational parameter, asset liquidity or the asset quality, and the return ratios as well. Of course, we'll have the usual ones, the shareholding, street cred and valuations. We'll try to compare over the last 5 years what has happened, what were the peak levels, what were the average levels, and the analyst take. Are they bullish on this counter or not? But all these details will come one by one chronologically. First one, income statement, largely 3-year CAGR has been pretty strong if we talk about net interest income and the operational profit. But the profit levels has not been very strong. It's been a very mixed set of numbers coming in. Let's just see how the numbers have panned out for the Q1 also. YOY basis, there is a good move happening. Remember, some adjustments are also at play here. So the numbers are pretty decent in Q1, and I had mentioned you that the base was also on the lower side. So net, it's a neutral rating when we are having a look at the income statement. But let's try to understand the operational parameters also, what stands here. There is yields, there is borrowing cost, there is spreads. So FY25 was a good year, but a little bit of normalization coming in FY26 as well. FY25 was a weaker year because of the microfinance stress, and now the company is improving. The spreads and NIMs have also started going up as well. And if you look at it, the AUM and disbursement, that has done well as well. Almost 26,000 odd crore rupees. That has come to almost 30,000 crore. In Q1, that number has shot up as well. So overall, the operational parameters look strong. So we spoke about the income statement, we spoke about operational parameters, but let's try to understand what the asset quality is all about, what's happening here. GNPA numbers, you must be wondering why this is so big. There has been accelerated write-offs during this period, the credit costs were up, and the entire sector was in a stress. And that stress, the number came, but now it's coming down. That is why, just to keep things in a balanced manner, I'm going to give this a neutral rating. Apart from gross NPAs, we talk about return on assets, and that has been, on the slightly on the lower side, and a mixed kind of, returns profile is coming in, a little bit of pressure, but overall the momentum is getting strong and it's likely to come back to its normalized numbers, especially for FY27. So that's our view coming in when it comes to the return ratios. Also, apart from return ratios, the usual ones, the FIs are slowly adding up their stake. It was around 11% in March 25. That has seen a slight move, almost 2% acquisition coming in, and over here also we've seen some buys happening. So the interest amongst FIs seems very strong. So I've given a thumbs up for this. But apart from the shareholding, let's look at the street cred, how much money the stock has actually made if you're the shareholder of Credit Access Grameen. From March lows, a good trade maybe, positionally 25% up returns has come in. This year itself, from the tops, it's down 12%, but it's even Stevens returns, last 5 years of 115% has not been a big multi-bagger, but yes, the stock has doubled, and slightly that's what is required for a stable counter. For a stable counter, I'm going to give this a stable view as well, but the valuations are cheap. Currently, it's trading at almost a 12-month forward price to book of just 2.2 times, and you compare that with the 5-year average, it is still cheaper. That average is 2.6 times, and that peak which was there when there was the euphoria in the industry and there are a lot of cycles to it, it was at 3.7 times. So the valuations are very much attractive. So I'm going to give this a thumbs up as well. Let's talk about lastly the analyst take. Almost 18 analysts are tracking this counter. 12-month target price giving a good 20 to 30% return potential, and all the analysts except one has a buy rating. 95% of the analysts are very bullish in this counter. Because of that, I'm also going to give this a very strong thumbs up as well. But let's do the revision of the KYC ratings for Credit Access Grameen. Where does the company stand? Yes, there is some improvement happening over the last 2 quarters in the numbers, but FY25 was painful for them. And now we are seeing the up move, especially in the operational parameters. We need more time to see what these numbers pan out. But let's move on and understand what's happening here. Shareholding and street cred, largely the FIs have started buying, and that is why I have given this a strong thumbs up, and the valuations are way cheaper when you compare to the long-term averages. And the analyst stake, the community is very bullish. So net, let me give you the total picture for Credit Access Grameen. It comes to 6 out of it. It's largely on the higher side of the average numbers we speak about. But our conversation continues with the management. We'll be joined in by Ganesh Narayanan, the MD and CEO of Credit Access Grameen. He has almost 3 decades of experience in the BFSI industry. He did join the company in 2020 as the Chief Business Officer, and interestingly, he held leadership position roles in ICICI Bank, SMFG as well as Yes Bank. So the conversation continues with Ganeshan, but just after a short break.
केसरिया से मन जोगी हुआ
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सकता है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now, sell immediately.
Hold it, boss.
Buy now,
Sell.
hold.
Buy.
Sell immediately.
Confused? What to buy? What to sell? What to hold?
Hello and welcome back to Know Your Company, and now we are joined in by Ganesh Narayanan. He is the MD and CEO at Credit Access Grameen. Good afternoon, Ganesh sir. It's always a pleasure to have you with us at NDTV Profit. And a lot of industry changes are also happening. But yes, for the last 2 quarters, there is a good turnaround or bottoming out from the stress which the industry was going in FY25. But sir, it seems like some stress again back because of erratic monsoon. Any kind of impact we can expect on the borrowers? How is the industry looking like right now?
Very good morning, Sharath. Thank you for having me on this show.
with respect to the developing implications on El Nino.
Right.
Predominantly, microfinance sector does not lend to large farmers, right? So most of our customers would be households with multiple income streams. Generally, since we operate in rural, a typical household will look like 1 or 2 acres of agricultural land, and they'll also have some amount of ancillary income. So each household has at least 2 or 3 income streams. Current situation is that I think the El Nino situation is kind of improved from the earlier assumptions. The shortfall is assumed to be around 10 to 12% point of time. Historically, we've seen many El Nino situations. It has not impacted us meaningfully in any form. However, this is something that we are watching closely, and we don't see this impacting us significantly. All historical El Nino situations, the segment, especially microfinance customers, have been extremely resilient. They switch to crops which are less time consuming or less water absorbing crops, number one. Number two, generally they produce for own consumption or for their livestock. And in case of such situations of high drought or lower shortfall, even government schemes kick in to support these customers. Customers have also seen they move into construction labor temporarily in case agri labor is not available. Broadly, they've been resilient on all historical scenarios. This year, like I said, we are watching the situation very closely. However, we don't see any major impact to our profitability numbers or credit cost guidance because of the current El Nino situation.
Right. And speaking of that, Ganesh, the guidance for the industry as well as for your company for FY27, how does it, go ahead? Is there any chance of an upgrade, or you'll just keep your guidance as it is?
See, I think guidance right now with respect to growth, we've given a growth target of 20 to 25%. I think we'll be range bound with that. With respect to credit cost, we've given a guidance of 3 to 4%. Currently, we are little lower than the lower end of the credit cost we've given, right? But we've only done Q1. We'll have to watch for a few more quarters. And we also have two situations which are currently developing, including our West Asia crisis, as well as the El Nino situation. And we believe that we should be at this point of time at the lower end of the credit cost guidance that we've given. But growth, I think we will be able to publish the growth range that we've indicated to the markets.
So the growth number stays as it is, but I just wanted to understand a little bit more. Are there any trends which can suggest this credit cost is normalizing in second quarter? Because I think we are halfway through here.
Yeah. See, currently the credit cost is holding really, really good within our expected range, right? And like I said, today, El Nino is a developing situation. If at all there is an impact on credit cost, our current pricing has enough cushion to absorb if there is an incremental credit cost that comes in, and hence profitability does not seem to be impacted this year because of elevated credit costs, if at all it happens. But both Q1 and Q2, the collection trends have been very, very strong, and it is slightly below our expected range at this point of time. In the sense, the credit cost is slightly below the expected budgeted numbers for this year. And we hope it will remain in that range that we've indicated.
Fair enough. The loan portfolio growth guidance also. Which segments do you think more green shoots are coming right now?
Right. So this is a very interesting phenomenon which you highlighted earlier also, that from a pure play microfinance institution, we are now transitioning towards a diversified financial services platform in the financial inclusion space. So this is clubbed with both our research, our visibility on household credit, as well as the regulatory room that has been created over a period of time, which allows us to do 40% non-microfinance loans. So what we expect in the near term is that we'll continue to grow microfinance. We lead in today at least 5 states out of the 16 states we operate from a portfolio perspective. So microfinance will continue to grow on a gross level at around 16 to 18%. But since we are also accelerating our retail finance growth, every year we believe around 6 to 8% of our customers will graduate into retail finance. because of which you will see that the microfinance growth rate is in the range of around 10 to 12%. But overall, as a company, we will grow 20% plus, higher growth coming from retail finance because of the graduation of customers into retail finance. So this is how we are transitioning.
But sir, I want to know a little bit more details about it. How will you be scaling up your retail portfolio? What's the strategy here?
Right. See, broadly, our approach has been to follow our customer, right? So far in our history, because of regulatory restrictions, we were not allowed to do too much of non-microfinance. Now, like I said, because the regulation allows 60-40, what is happening is that we are seeing that over a period of time, microfinance customers, good profile customers move up to retail finance and start borrowing individual finance. So our current thought process is to minimize our customers from moving away from us into somebody else as long as possible. So going forward, we will acquire customers in microfinance and carefully handpick certain profile of customers who have the ability to graduate to retail finance through an unsecured business loan, and beyond a certain ticket size, they will move into secured business loans. So once their business needs are met and they start earning more, there is also an aspiration for these customers towards other things like home, vehicle, etc. These are also something that we are currently working on today. So the growth story going forward will be from two engines. One is microfinance, one is retail, but predominantly focused on our own customers who come into microfinance with little or no credit history, and we're graduating and going out to other NBFCs. Going forward, you will see a large portion of our graduating customers stay with us longer. So that will kick in a lot of efficiencies in how the company operates.
So basically, in a platform, the product life cycle or the customer life cycle, as and when their progression happens in life, there is some more offerings to it. Is that clear, right?
Yes. Yes.
And also,
so
sir,
that is how it will be. It will give,
right.
Yeah, sorry.
And sir,
that's
what
how it
will
will be.
the...
It will give you two advantages.
Sure.
One minute. So it will give us two advantages. One is that you're retaining your customers longer, and second, your lifetime value of the customer significantly goes up because the retail finance products are of a very different ticket size compared to the microfinance loans.
Fair enough. And what will be the disbursements growth guidance? Will it be on the slower side, or has that bottomed out now?
No, so the disbursement should be strong. So last year we did around 24,000 and odd crores of disbursement. I think this year we will close the year with roughly around 28,000 crores plus of disbursement. So disbursement growth will be strong.
And sir, the final question, what's the NIM guidance and the margin profile looking like going forward?
Right. So we've given a NIM guidance of 12.8 to 13.2. Currently we are at around 14.4%. The NIM is slightly high now because we exited the last quarter with a higher credit cost. And as the credit cost continues to hold good over a period of time, we will start passing back the benefit to the customers. And hence the NIM should moderate anywhere between 12.8 to 13.2% as we guided. Right. So that is where we are. So the NIMs are quite strong. We have the ability to reprice for anything that moves, including cost of funds as well as credit cost. And with this NIM range, our returns will be well protected in the range that we've guided. So we will be in the last 10 years, we've given a cross-cycle ROE of around 3.5%. And we are currently working towards moving this to an average of around 4%, both with the diversification strategy as well as diversification in the liability mix also. So we've been able to hold our cost of borrowing quite strong, one of the lowest in the industry. Our OPEX is quite under control, and you're also increasing different type of products to our customers. So all the engines are performing in the direction that we want to perform. So,
yes.
A strong, consistent performance.
Fair enough. Ganesh sir, we are running slightly out of time, but we had a great conversation with you. And of course, we wish you best of luck for the future for your company, and hopefully more positive news comes for the industry as well. It's always a pleasure to talk with you. So that's the management of Credit Axis Grameen I would like to talk about. And yes, the stress in the industry is not fully over yet, but the company is showing green shoots. We saw that in Q1. And the guidance portion also, largely the growth numbers are strong. Little bit of stress in the credit cost, but it's just one quarter. We need to wait and watch how things pan out, and the valuations are also slightly on the cheaper side as well. So interesting story, right? For all these stories, just for your profit, stay tuned to KYC and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time.
Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med.
Empowering health, touching lives. Accuracy that shows up when it counts the most.
State-of-the-art innovation, made in India. और trust पूरी दुनिया का. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सकता है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit. 3 decades of watching the world change. Of asking the questions that couldn't wait.
We have an exciting conversation lined up for you with Shankar Sharma, ace investor and founder G-Quant Fin X-Ray, the man who often goes viral one way or the other. I don't know if you do it on purpose, Shankar, if you know that what you're saying is going to go viral or it just happens for you, but welcome.
As always, real pleasure to connect with all of you folks.
Yeah.
And I hope the markets have been treating you well.
Well, you tell us. The markets have been, just in its own universe of pain. Do you think that's fair to say? Because the biggest factor that was troubling markets, which was the Middle East crisis and what's happening in the Strait of Hormuz, seems to be unwinding and not becoming such a big problem. Crude prices are cooling off. Q1, by most standards, was better than expected. But you're not seeing that kind of a response. Why is that, in your view?
Yeah, it's very perplexing, to be honest with you, that on the big macro numbers of the economy, or let's say the crisis, things have moderated for sure in a good way. But the markets do not seem to be reacting at all. And my sense is, and I've been also asking myself this question, my sense is that the market still worries a bit about the Middle East crisis, because understand this, nothing has been really put to rest here. It has all been just one announcement after the other. So there is at the back of the market's mind a lingering doubt that, hey, this could still escalate. And you never know, how these things can just suddenly flare up one fine day. So nothing has been really put to bed here. That is one major problem. The second problem, of course, is that the data center trade, or the AI trade, does not seem to be losing momentum. I mean, if you look at it that way, people have been talking about it that at some point that will kind of start to fall and money will rotate back into India, which is a okay thesis. But it doesn't seem to be happening that way. And, Korea and all, once in a while they have their 10% down days. But by and large, the US has held up quite well, which is the real fountainhead or the source of the AI trade. And as long as that keeps happening, then the global sentiment towards India will remain very tepid. So that is the real problem. The sexy part of where the bull market lies globally is not really present, at least not in the large caps. But that being said, it is present in small part in the small caps, and that's exactly where you've seen the big momentum upwards.
Yeah.
So the markets, while at the surface look very tepid, very, very senile actually, under that is anything but that. And that's where the money has moved. That's where the money has been made.
The use of the word senile is particularly interesting when you're talking about large caps. Are you referring to it in the context of has been kind of companies or growth or exciting stories? And in the small caps, it's a great idea. You spoke about it the last time we spoke. But now aren't valuations beginning to bother you?
Yes, so, Neeraj just mentioned offline before the interview started that I mentioned on another interview something about valuations, and I think it's as good a time to revert back to it, unless I'm preempting you, Neeraj.
No,
please continue.
Go ahead. It's a free-flowing conversation with all of us.
So in India, anything which is low P should be avoided like plague. And, I mentioned in a previous interview with another journalist, TV anchor, that, the way we should look at P ratios. And I do believe that somebody else, mentioned that this was coined by my old and dear friend Samir back in the 90s. I did not recollect who had talked about it. It was not my invention for sure. But anyway, the point being that in India, you never buy cheap stocks because India is probably the smartest stock market in the whole world. It prices things reasonably okay. It can go overboard on the higher side, but it never goes overboard on the lower side. A low PE stock deserves to be low PE in most cases in India simply because a low PE, the PE ratio, the way we have defined it in India, is nothing but the number of years the company is going to remain in business. So if it's a 5 PE stock, it will remain in business for 5 years. If it's a 50 PE stock, it will remain in business for 50 and probably even more. So that is the central thesis, that you might crib about valuations being very expensive in the small caps and more reasonable in the large caps, like private sector banks are now at the lowest price to book in decades now. Is that a good thing or a bad thing? In India, a compressed valuation is almost always a bad thing. Almost always. There are no absolutes, but almost always. So my view is the small caps reflect the inherent growth ahead of them. The large caps are cheap because the earnings number may not be as good going forward. That's it.
Agree. Shankar, but two questions to that, right? And inherently just agree with that because the growth seems to be at the broader end of the spectrum and not necessarily in maybe 35 out of the Nifty 50. Maybe there are 15 which are doing well and showing growth and therefore they are doing well. The remaining might not be. But that argument would therefore mean that cyclical names which are going through a bad cycle and therefore are correcting and contracting P multiples should not be bought into, because then how else do you buy cyclical companies in order to make money if you don't buy them at the bottom of the cycle? And you're a master of cycles per se, right? Because you're a hare and not a bull or a bear.
So, everything has got a cycle to it. So everything is broadly cyclical. There's nothing structural about most companies in the world and in particular in India. But the way to buy cyclical companies, commodity companies, or even let's say banks, one method could be, and it's a reasonable way to look at it. I've looked at it that way for a long time, is that you buy them when the P multiples are actually very high rather than when they are low. What that means is that at the bottom of the cycle, the profits kind of compress more and the market cap doesn't compress as much, which is why the multiples expand. That is usually a good time to buy these kinds of companies. While on the other hand, when multiples are compressed, which means profits have gone up and the market is now paying less and less for every dollar or rupee of earnings, that's a time to probably exit them. This is broadly the way you play cyclicals. Structural stories, that's a different issue. But basically, you buy them at higher Ps rather than at lower Ps, or higher price to books rather than at lower price to books. That's the way to play the cyclical plays within India. In the Nifty, there are mostly cyclical plays. You see, there are very few tech-oriented plays, which is why the cheapness of the Nifty, as people keep talking about on social media, is probably a problem more than a solution.
Yeah. Agree completely. But Shankar, does it befuddle you? Does it worry you that some of the most heaviest weightages of our markets are stocks which have not done anything for the last 3-4 years, and from the looks of it, I mean, unless things change, don't necessarily have triggers which will make them move higher in the immediate future as well. Does it worry you? I mean, Reliance, HDFC Bank, the list is fairly long, if you will.
Last I checked, at least a couple of them are trading at the 52-week lows, if I'm not mistaken, or at least close to them, right? So, hey, I mean, that's the way markets are. I mean, I actually tweeted a couple of days back when I just asked my analyst at JQ that, hey, tell me the churn in the Nifty and the low and the smaller indexes of the Nifty, and the data that I posted on my Twitter account was very illuminating that in the last 2 years, if I remember it correctly, only 6% of the constituents, or maybe 8% of the constituents of the Nifty have changed. Okay, while for the Nifty 150 or the 500, the change is something like 45 or 50%. 50% of the smaller indexes have been changed and rejigged and reconstituted in favor of newer, fresher legs. It's like the bench has now come out to play rather than the old guys who were tiring, perhaps. The Nifty has not had the same kind of churn at the top. And the reason is very logical, that the Nifty requires a higher bar for companies to enter their market cap and track record and whatever other parameters the exchanges follow. That is the real problem, that the smaller cap companies or the smaller cap indexes have rotated very quickly in favor of the hotter plays. So the tech-oriented plays, or the consumer tech plays, or the data center plays, the optical fiber plays, they have made their way into the 150s or the 500, but the Nifty 50 has remained fairly static and stagnant. Even there, if you see, Zomato entered it eternal, like, I don't know, a couple of years back, but actually it delivered nothing in that period. So the core problem in a large index is you enter it when you're already a very large company. You never enter it when you are the young Turk. You know, that you enter the 500 at that point in time. So to reach the 50 level market caps and the liquidity and all the other parameters, you have already pretty much hit a ceiling for your market caps. I mean, Zomato, for whatever goodness it might be having, to expect it to triple from here or when it entered the index is a bit of a reach. But a 500 stock can potentially triple. So that is the core arithmetical or mathematical reason why the Nifty has not done well. The churn has been very, very small as opposed to the 50% churn in the smaller cap indexes.
Important. Shankar, hi, Alex here. So speaking about that, and just to drive...
You were the guy asking me tough questions that day. I remember. I have a very long memory about all these things.
I'm glad that you remember. But on that day, you had said that nobody asked you tough questions. I'm glad that you're acknowledging.
You complained.
I know. I agree. Okay. I called you babies or something.
No, that's how I grew out the beard. Anyway, but having said that...
Actually, you should put Shankar and Alex on a two-window. Shankar, you can't quite see him, but he's got a beard which looks exactly like yours right now.
You're looking super cool, man.
Thank you.
Welcome to the club.
Thank you so much. But to drive home that point on large caps, for those people that are waiting for a reversion to the mean, so to speak, doubling down at these moments, whether you call it contra, whether you call it value, and saying that this will eventually turn around, you're saying that effectively you'd have to wait for a long time for something like that to pan out?
Not a long time. Let's put it in perspective. The large caps in India do not represent what is in demand across the world, which is the tech plays, the data center plays, the AI plays. They do not. They are not at all represented, and Eternal doesn't somehow make that cut anyway. That part of the market is finding place in the smaller cap indexes. All right. Now, you can argue that at some point AI will go out of favor and money will rotate back into the Indian large caps. My view is I don't see that happening. Even Nvidia declared pretty good numbers. Aftermarket, I think, is up 5%. So market has taken it reasonably well. I do not see that trade going away. Now, if that trade does not go away, because again, I can spend a couple of minutes on this. This is a very important point. The IRRs on the data center business, I was looking at some numbers, is depending on what assumptions you take, a 5-year IRR will be about 18%, maybe 20%, maybe 21%, something like that. Now, people crib a lot about Google has got negative free cash and it's borrowing money. Look at the data. If you are able to invest at an 18% IRR by borrowing at the long end of the market, let's say the 30-year is 5% and change, and add a percent or two premium as a private sector company, if you're borrowing at 7%, investing for 18%, what is so terribly wrong in that? And what is so terribly wrong in these large Mag 7s or the Mag 10s having a bit of negative free cash? As a growth company, a negative free cash is not necessarily a bad thing. So I think everybody has kind of just started pouncing on these companies. The CDS spreads are blown up and negative free cash. But you just look at the math of what they are doing. And last point on this point, very important, the promoters or the founders of these companies, the Mag 7s, in my view, and I'm sure nobody in this panel can disagree, are the best managements in the world. Who can argue against the managements of an Amazon or a Facebook or a Google? You cannot. They are the best. They are the literally the 800-pound gorillas in this game. You tell me that they don't understand all this, that people are cribbing about negative free cash and this, that. They have been in this business for 25, 30 years. Amazon was founded in mid-90s. Google was founded in the early 2000s. They've seen the dot-com bust. They've seen the overcapacities that killed those businesses. They're aware of the risk. Despite that, if they're putting capital, I would tend to believe that they know what they're doing. I typically do not, I'm not a believer in anything, but these companies have made wealth through 25, 30 years, through tough times and good times. Put some faith in their ability to understand the business cycle. They are not a bunch of newbies or young promoters with capital. They have solidly experienced founders. If they're putting in capital, I think we have to put a little bit of credence to that.
That's an important point. And the numbers are supporting that, Shankar. So you can't argue against that. The earnings growth is there. Having said that, you spoke about the small cap space. And of course, you can splice and dice and talk about which spaces are doing better than others. I'm just wondering whether there's a significant element of inventory gains that you have to account for, and whether some stumbling will take place in the second quarter before the dust settles. Because a lot of these companies have pushed prices through, and they've had the benefit of cheaper raw material that is going to bleed out in the second quarter. So are you worried about that at all?
That is a worry of 100%. I mean, and if you've known me for a lot of time, I mean, I'm a worrier more than a warrior. So I like to worry about things, and that's a definite worry for sure. But I think that the small cap end of the market, some of them actually, are benefiting from this global AI or the data center trade. And I would tend to focus my capital on that area rather than look at large caps and, start to think that at some point they will become cheap and they will turn back. I think there is an easier way to make money in the market. At least I have benefited from the point in March. I tweeted on March 11 that small caps are the place to be in. And since then, I've had no cause for complaint. I've almost tripled my capital because I put in capital around that time. I put my money where my mouth is. It's been working out very well. I see no reason to change the broad AI data center trade that I think will continue for a while to come.
You have to look at what you have. I just want to go back to what you were saying about some of the, I would say, big ones in the Indian equity firmament, which is where a lot of SIP money goes, where foreign investors go when they need to. And, Neeraj mentioned RR and HDFC Bank. I want to ask you about HDFC Bank specifically, Shankar, because this is an important company in terms of the presence it has across portfolios as well. A lot is going on right now. What is your core view about how solid that business is and the pain that they're facing right now?
My sense is, like in any great company led by a great leader, Aditya Puri was the best. I mean, I've had the privilege to work with him. I've known him for, 35, 37 years. He was my very, very senior boss in Citi when I started my banking career. We've had a few drinks together. We've chatted about things. Great guy, and the reason why we liked HDFC Bank right from the time it listed in I think '96 is because of Aditya Puri and the team he built around it, like Paresh and Bharat Shah and all that. In my view, when you have a leader like that departing, you will inevitably have a fairly longish period of transition. And it's not even for sure that you can get back to those levels that Aditya Puri was able to achieve, because he was an extraordinary leader by any standards. So I just think he has just created such a high bar that for any other management to walk in and do that. He was a founder. He had the passion, the zeal, the energy. The rest are all professional managers. If you see the best companies in the world today are the Mag 7s. They're almost without exception founder led. This whole professional management thing that came for 30, 40 years has been found to be wanting. People want founders with skin in the game, passion in the game to be running businesses. I think HDFC Bank has that core problem. Other than that, the governance issues and stuff like that, I don't want to go into that, but that keeps surfacing in like a bad penny every now and then. Suffice it to say, I think it's just a very large bank. You will not be able to see the kind of growth numbers unless they push the risk envelope substantially. And that's been my real problem with banking, that when you want to grow too fast, you inevitably run into a problem 3 years from now. So for me, banks in general are a no-go area. HDFC Bank is a no-go area. People have been talking about two-time book or whatever it's trading at. That's not a good time, or that's not a good enough signal for me, or for that matter, any other large bank in India.
Okay. You mentioned large banks. So any specifics in the BFSI space or anything that you're seeing interesting which is overlapping with your small cap bet?
So, I mean, I bought a bit of Paytm. So that's been working out okay. And I don't want to talk about individual names, but since you mentioned, because I don't like the space overall, the BFSI space, but I made an exception. It had become cheap. I just put in a bit of money. It's been doing well. Other than that, I have no reason to, be very bullish about the space. But overall, I have been reasonably bullish on the consumer tech space in India. And I remember we spoke about one listing when it was a very controversial listing, I think last year, probably, right?
Lenskart.
Something that makes spectacles or something, right? And I had said that why are people bashing this company when they bought Nykaa at some 50, 100 times revenue, and yes, exactly, and it actually worked out very well. And so those kinds of businesses in India in the last, at least stock market wise, have done pretty well if you see them. So that's a space I've liked. I've put some capital into them. But broadly, the tech space, consumer or infrastructure tech, is where I have put in my capital. And I think that's the right space to be in going forward as well, not the traditionals.
Shankar, what do you mean by infrastructure tech? Sorry, if you can just elaborate a bit.
Well, I mean, you have companies making stuff for the electrification theme in India. Because obviously with data center comes electricity. You can't have that without that. There are companies supplying goods, components to the large scale electrification that we need, whether it is the renewables or even the thermals. You have companies supplying cables to the data center side. And remember, things have changed. I mean, understand this one thing about the data center boom. It's not a one-time capex business. I'll give you an example of optical fibers. Okay, it's been a commodity for the longest time, and I bought Corning in America, a while back. It's I think gone up 3 times in the last 6-8 months time. If you look at the history of optical fibers, earlier you had a simple bunch of fibers being put into a hose, and that was it. Now with the desire of AI data centers to have more processing speeds, the technology is changing rapidly. So you have multi-core, cables. You have now hollow core cables. You have the intermittent bonded ribbons, the IBRs. A lot of tech has come into it, and the innovation pace has accelerated. Which means that companies which are doing this, whether in India or globally, the companies in India, the companies in China, they are assured, in my view, I could be wrong, of multi-year capex supplies, because the technology moves. So the new data center that come up will need to move to the newer tech available in just the cables part, and similarly for all other components. So I'm just saying that the AI data center is boom is not like a 1 year, 2 year boom. You need repeated capexes as the data center company to keep up with the new guys who come in, because the new tech will have more processing power, more throughput than if you set up a data center 3 years back, which is good news for the companies engaged in different parts and ecosystem of the data center place, which is why I like it. It's not a one-time boom. In my view, again, we could be wrong. I just think it is a structural story, being played out. America has benefited, Chinese companies are benefiting, and Indian companies are benefiting as well.
Shankar, we're seeing a tentative restart of activity in the primary markets, and you may have looked at some of these issuances, right? Or maybe looking out for those that are in the wings, so to speak. Is anything enthusing you, and what do you think about the pricing right now? Because more often than not, there's at least a little bit of a pop. So it would go to suggest that they're not pricing it so aggressively as they were when the markets were going a little crazy with IPOs.
Yeah, I mean, I agree. I mean, the pricings are moderate. I mean, not that I invest in those spaces. I keep a very cursory view of that, because my view is that if you lock up capital in 100 issues or 50 issues, 25 issues, you're missing out on the action in the secondary market. So it's all about capital allocation. But on a macro basis, I think more rationality has dawned. All of that is good. But it also is a problem that it keeps sucking away capital from the secondary market. So, we need just a small uptick in India in the secondary market for QIPs and, preferentials and IPOs to just keep gushing back in, which is really what the problem is. I mean, if we just keep sucking out the liquidity, it's not a problem. Companies need capital. If the market supplies them capital, they will take it. But it then puts a lid on the secondary market performance, and which is really what we have seen so far.
Okay. Shankar Sharma, always a pleasure talking to you. Today was no different. We got some very interesting thought processes around how people should approach investing in general and investing in the current time. So thank you so much for that, and looking forward to talk to you more often.
Thank you for having me. Thank you, guys. Have a nice day.
Thank you.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान तो SIP करो, इन्वेस्ट करो या IPO डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Buy now, sell immediately.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. With me, Hiral Dadia and Sharad Dubey, who's standing at the Profit Market Pit with all the action in the markets today. Good afternoon, Sharad. An interesting day of trade where, if you see in terms of opening as well, I mean, a gap down trade, we're nearly at the day's lowest levels as well in terms of Sensex, which is seeing cuts of 0.3%, and likewise in terms of Nifty 50 as well. In fact, broader markets absolutely flat. So nothing in terms of major moves, but a lot of stock specific action as we saw yesterday.
That's right. Good afternoon, Hiral. Lower volumes. VIX is also not that elevated at around 11. We are at the day's low when it comes to Nifty. You could say sell-off is there from the gap down opening as well, but initially the GIFT Nifty cues are very different and positive. Nifty Bank also, interestingly, the story is on the lower side. If you could flash that as well, we are near the day's low level here as well. Earlier last week, we had seen Nifty Bank at least showing some technical strength, but now that's also giving away a little bit of sectoral, a little bit of profit booking in select counters. But let's look at how things are panning out for Sensex expiry. This is the first time happening under the cash effect as well. Keep that in mind as well. A weaker setup. coming in. And let's look at the key support levels right now. It is narrow range, but nevertheless it has shifted downwards. 23,800 is a very important level we should be tracking if this fall happens more. Nifty bank support range between 57 to 57,500. That's why we are seeing certain bounces happening as well. But small caps is still alive and kicking, showing a good strength and better positioning than the broader index, than the benchmark indices. Profit booking continues in the PSU banking space, but let's also look at the other sectors, especially the telecom and the capital goods segment. That's where selective buying is happening. Pharma also a little bit of churn is at present. But post-market hours, a lot of action is there. AGM, Aurobindo Pharma, Vodafone Idea, IndusInd Bank, we'll be tracking that. Also, very important data on the macro front. Jackson Hole Symposium starts from today, continue till 29th August, and the US initial jobless claims data also comes in. So a lot of macro-driven factors are actually playing out right now. But yes, the action is quite less in the large cap space, and the action really continues in the small caps.
Absolutely, action is in terms of small caps, and that's individual counters as well, because indices are absolutely flat. But on the sidelines of his visit to Japan, Commerce Minister Piyush Goyal spoke exclusively to my colleague Rishabh Bhatnagar. Let's listen in to a slice of that conversation.
Talk to us about, sir, we have the $70 billion target, private investment target, $10 billion already in. What will it take? What's the timeline that we can expect for the rest to be completed?
When there was the India-Japan summit last year in 2025, Japan, on the back of the success story of the first tranche of 5 trillion yen, which Japan had invested in less than 5 or 6 years in India, had expressed the desire to invest 10 trillion yen, which is about 70 billion US dollars. In India over the next decade. I'm happy to report to you that they have reiterated their interest. JBIC, the Japan Bank for International Cooperation, is at the core of managing this investment and encouraging both public and private sector to invest in India. Already in the first 10 months, nearly 10 billion US dollars have come in, largely from the private sector, clearly demonstrating that even this second tranche, the 10 trillion yen, may not take 10 years, but may come in about 5.5 years.
Very interesting, sir. One matter of concern that has been highlighted by both sides is the trade deficit between both the countries, and that is something that we're looking to bridge as well. What are some policy tweaks that we're looking at from the Japanese side as well, in terms of maybe lighter import regulations that we're expecting from them, or higher quality standards from our side? What are we exactly looking at?
I think our focus will be on better and higher quality in India. Because no country will change their regulations for another country. They are the same in Japan and apply to the world, just like our BIS regulations apply in India and all over the world. Our food regulations apply in India and all over the world for foodstuffs to be sold in India. I believe with the greater interest that Japanese industry is showing to come and invest in India and manufacture in India, we will be able to upgrade our own mindset towards quality, thinking towards quality. More and more companies are now producing world-class products which will meet Japanese standards also, and will naturally give us an opportunity to expand exports. At the same time, there are certain products where Japan has supremacy and which we'll continue to need in large quantity because of our own growing aspirations in high-tech sector, semiconductors, shipbuilding and the like. And I think we would like to expand this relationship bilaterally, both in investments, which will create huge jobs in India, through trade bilaterally, both import and export, through the greater number of people who can come and work in Japan, which also adds to economic prosperity in India. They have asked us to train 300,000 Indian personnel, technical, management, caregivers, nurses, whom they will train in Japan or in India and give jobs in Japan. So there is a vast array of potential with this country.
Thank you so much.
Thank you.
You know, the investment that you're talking about, that Japan would get into the country, that's a huge number.
10 trillion yen. Not expected in 10 years, but almost 5.5 years is what Piyush Goyal is indicating right now. And the kind of upgrade it will help us in terms of thinking towards manufacturing, thinking towards becoming an export-oriented country is the key as well. But moving on, let's look at the watch list as always. Kotak Mahindra Bank, strong volumes in trade today, one of the top gainers on Nifty 50 as well. You have Adani Enterprises, which is buzzing, and this is on the back of an initiation report by Motilal Oswal, which has a target price of 3,880. We will get you more details on Adani Enterprises as well. Moving on, Shriram Finance, that stock is down for a second session. If you just pull up, if you just, toggle that as well, and you'll see the kind of downtick that you're seeing in terms of Shriram Finance as well, one of the top losers there. HDFC Bank, your US class action lawsuit that has been filed, so that's the reason why the stock is slightly under pressure. Strong moves coming in terms of BBTC because, and that's Bombay Burma Trading Company. The Supreme Court has recalled their earlier observation on the 4,655 crore Singampatti lease rent liability. HCC volumes very strong along with the most chip. Inox India, all of these are volume buzzers in trade today. ICICI AMC, UK's Prudential is planning to sell 2% stake via block deal, and that stock is down, as well as a Tata Power, where they've actually lost the $490 million arbitration challenge in Singapore. CG Power and GE Vernova, both of these counters are buzzing in trade because Trump has signed an order to restrict some foreign equipment in US energy grid, and hence both these counters are down. NMDC Steel as well, the volumes are up 7 times. Pine Labs, there's an initiation report by Investec, and they have a target price of 200 on the counter. So that's the watch list that we're watching out for. But over to you, Sharad, to take the rapid fire with Rupesh Solanki of Latin Manharlal. I beg your pardon.
Thanks a lot, Hiral, for that. And Rupesh, good afternoon. Always a pleasure to have you with us. We start a rapid fire round, and the stock in focus is Kotak Mahindra Bank. Yesterday there was a good up move also in this counter. If you could just get that stock on screen as well. Important levels to track here. Second straight day of good buying coming in. One of the top gainers also in the Nifty index.
I think we have seen a good move since the past 2 trading sessions. And yesterday we saw a good swing breakout above 410, which opened further upside till around that 450, 455 zone. So as of now, my view is positive. As long as the stock stays above 405, then we have a chance that in this expiry September month, we can test the 450 mark.
Right. And Rupesh, apart from this, Shriram Finance comes to our radar also. The stock has been rising because of the rise in the gold prices, but now it seems a little bit of profit booking coming in. Good time to sell a little bit more, or do you think charts will sustain more up move from here?
I think it's just a healthy profit booking. If you see the past 3 months price chart, the stock is just above a rising trend line support, which comes around 1080. So I feel maybe the correction, we may see a further correction, and the stock might stabilize around 1080. Overall, the chart's structure is positive, and I maintain a buy on dips view in Shriram Finance.
Okay, so buy on dips view is coming in for Shriram Finance. But also moving on to the other stock, of course, is CG Power. These all capital goods stocks are doing well in trade also. I just wanted to get these counters in CG Power, GE Vernova as well. Your views on this technically?
Technically, CG Power seems stuck within a small sideways range, which is around 860 and 880. On intraday basis, we saw some good move in the morning, but the stock has given up its gain. My view is that if the stock closes above 880, then we might see a range breakout, and we might see some further upside towards 930, 940. As of now, my advice will be to wait for the closing session. If the stock closes above 880, then we can get a confirmation of a breakout.
Right, and Rupesh, we generally don't talk about this counter Bombay Burma Trading. It's technically we could say a holding company, but a very important news flow coming in, which is showing a big spike in the company also. It's around 13% and good value buying is happening. Do you think this will sustain going ahead in this cash counter?
I'm skeptical about this upswing as it is a low volume stock, and I just see as a technical bounce in the stock. The stock has a very strong resistance around 710, 720 zone. So as of now, my view is avoid this move.
Okay, so avoiding this move as well. But that's the end of the rapid fire round. Over to you, Hiral.
Thank you so much for that. In fact, moving on from here on, one stock which I want to also talk about right now is with regards to where Tata Power goes. Rupesh, I'll take a quick view from this on this one. They've lost the Singapore court case, and the Singapore court has actually rejected the company's challenge to arbitration award, and the court has upheld the earlier ruling that was in favor of Kleros Capital. The company says that it will appeal the decision within the next 28 days, and Kleros has alleged that Tata Power used its confidential information. It also alleged that Tata Power excluded Kleros from projects, and the principal damages is around $490 million, and the interest on that would be 5.33% annually since November 2020, and hence that stock is down nearly 3.5–4%. Rupesh, what do you make of a Tata Power? If you have to look at the long-term charts, what are charts indicating? Further weakness, or are you seeing an opportunity to actually buy at current levels on the back of the correction? You're on mute, Rupesh. I think we've just lost Rupesh's line as well. We will come back to him on this one. So that's with regards to a couple of the stocks that we're talking about right now. But moving on, you have Bombay Burma that, Sharad was actually talking about. Sharad, over to you. I think you do have Varsha with you to get us more details in terms of what has happened on the back of the Supreme Court relief that has been coming in, and now that the court has removed the liability reference from its earlier order, take us through the details with Varsha, Sharad.
Yeah, thanks a lot, Hiral, for that. Varsha, interesting counter. We are just discussing about it. What are the key reasons for it, for this jump?
So overall, a key overhang has been removed now, and this is the positive news for Bombay Burma. Now the Supreme Court has recalled earlier 4,655 crore lease rent observation. Now what was the issue? So overall, Tamil Nadu government was seeking lease rent which was linked to Singampati estate, and Supreme Court's May 2026 order mentioned 4,655 crore amount yet to be recovered from the company. This raised fears for a massive liability on the company, but now company said that it never received any formal demand notice and was never given a chance to present their case. Now what has court said now, and why company is buzzing? So one is Supreme Court has agreed the company was not heard on the claim, and hence the 4,655 crore observation has been removed from earlier order, and hence company need not pay 4,655 crore, but that doesn't mean a clean chit, because Tamil Nadu government can still pursue claims through due process. So now for time being, if you see, the overhang has been removed, and hence the stock is up almost 12–13% in trade.
Thanks a lot, Varsha, for that. And over to you, Hiral.
Yeah, I mean, this is a very interesting counter, Sharad, and as Varsha is indicating that the overhang is not really over. So how long this will sustain in terms of the up move is anyone's guess. But moving on, another stock that is in focus is Virtuoso Optoelectronics. Let's pull up that one on the screens and see what the counter is doing. 2.5% downtick coming in there. And what has happened is, in terms of earnings, your revenues have actually grown 85%. Profits have grown around 40% on a year-on-year basis. Margins, a mild dip coming in there. We're talking about a 9.3% versus a 10.2%, and your EBITDA has seen a growth of around 68%. I mean, there has been higher depreciation on the back of expansion investments, and the AC business is the one which is contributing majorly. Let's get in. Suktit Bharti, MD at Virtuoso. Suktit, welcome to the show. Always a pleasure to speak to you. Help us understand, in terms of this quarter, top line, very strong. Profits, good growth. EBITDA also, so operationally everything seems good. Margins have dipped this time around. Why that kind of a divergence?
So firstly, good afternoon and thank you for having me on the show. So typically Q1 and Q4 are our best quarters in terms of revenue, and revenue has done well. Margin pressure because of the increased prices, increase in dollar exchange rate, there is overall pressure in the pricing ecosystem. I believe the new pricing will settle before the next season starts. So hopefully margin should come back to normal in Q3 and Q4.
Okay. So help us understand now, a similar kind of quarter is what you're expecting in the second quarter as well, because usually your first and the second quarter is strong. And what happens in H2 FY27 and cumulatively, if you have to look at the year, where do you see everything normalizing?
So Q1 and Q4 are our strongest quarters,
okay.
Followed by Q3 and then. But we see Q2 also being much better than last year. So we see good growth coming in Q2 also because the summer was good and demand has been good. Overall channel inventory has also been regularized. And from whatever we understand, there is not too much channel inventory. So that should be well. Further, our investments are now starting to generate revenue, which is also helping and which will help sustain the growth prospects that we have.
Okay. If you have to look at the growth that you're seeing right now and the outlook that you have for in terms of FY27, where does your utilization stand? And with the ramp up of new plants that is in Nasik and Sanand, once that happens, how are you looking at utilizations?
So for the current capacity that we have, we're looking at a utilization of almost 70% in the current year. But we are also increasing this capacity. We are going from an AC capacity of 1 million to 1.8 million. We are further going from a compressor capacity of 2.8 million to 6 million. The capacities are increasing across the board. We are also almost doubling our EMS capacity. So these capacities will, of course, not start primarily contributing in this year, but will contribute in the next year.
Okay. And have you applied for any incentive schemes under ECMS?
So we have, of course, we are beneficiaries of the PLI scheme, and I think it was an excellent scheme that the government came up with. ECMS also we have applied under a couple of categories from VOEPL and also our subsidiary companies. We are awaiting government decision on that.
Okay. Sukrit, anything that you plan to do in terms of a fundraise or any preferential issue that could be slotted from here on, taking into consideration the expansion that is on the cards?
Yes, so we are looking at a fundraise. We also have a board meeting later this week to confirm the rate, which has already been announced. So that is where we stand today.
Be a preferential issue versus debt, rights, or any other fundraising options?
So this is what we are doing now is a preferential issue.
Okay.
The debt, of course, we prioritize debt for routine expansions. But we want to balance our debt and equity so that we have a healthy balance sheet overall.
Okay. And apart from this, in terms of how much funding do you need for this expansion right now, and how are you looking to fund it?
So the overall funding projection for us for the rest of the year is already tied up, both as equity, which we are looking at now raising, and debt, and also OCD that we have raised at a subsidiary level. So for this year, we are more or less tied up for our funding requirements post the completion of the current cycle.
Okay. And with regards to where competition goes, you know, you have larger EMS companies also are really expanding aggressively. How are you looking to actually protect your market share versus that large competition which is coming in?
I believe every company has to create its own niche of services and products that we offer to companies. So I don't think there is a simple or a right answer to this. But we believe that we want to focus on quality of product. We want to give good service to our customers. We've grown and come so far because of support of customers and stakeholders. And we want to continue doing that as we go forward.
Okay. And just one more question. You have a warrant issue as well, right?
So warrants have been taken by the promoter group who invested in the company, and so warrants have been paid up and have been issued. So, which is just to say that we are also confident about the future prospects of the company.
Okay, so no, just to understand the issue price, which was, I think, if I'm not mistaken, 356 per share per warrant, right? So help us understand, how did you arrive at this price, and do you think it fairly reflects the company's intrinsic value then?
So it was not solely a promoter issue. It was an issue where Malabar and India Insight also participated. So it was an open preferential issue that we had done, where promoters have also participated. The price have all, of course, been decided by the VWAP price as per norms and SEBI guidelines. So we have no control over the pricing as such. The pricing was market driven.
Okay, and how much dilution should existing shareholders also expect immediately upon the full warrant conversion, number one? And two, if the stock price, say, for example, hypothetically remains below the conversion price over the next 18 months, would promoters still choose to then convert?
Yes, promoters will still choose to convert, of course. And I don't have the exact percentage, but I don't believe it will be a significant number, because the total warrant value was about 25 crores.
Got it.
After conversion.
Got it. All right. Thank you so much for joining in. Always a pleasure to speak to you as well. So that's the management, talking to us in terms of the fundraise. You're talking about the preferential issue, the warrants that have come in as well. And they're really scaling up beyond the AC business. That stock right now in the last 1 month has given you returns of nearly 13% as we speak. Stock down nearly 2.5% in today's day of trade. But completely out of time on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. We'll quickly slip into a short break from the NDTV Profit Suzlon studio. Be right back with Lunchtime Trades.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मानता है। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global.
Markets trade lower as the Nifty falls more than 100 points from intraday highs, dragged by banks and FMCG stocks. Mid caps and small caps, however, would trade relatively better even as market breadth favors declines. HDFC Bank under pressure after a US class action lawsuit over allegations that it disguised interest payments to MSRDC as marketing expenses. The complaint names the bank and senior executives alleging regulatory and disclosure violations. Trump's move to restrict certain foreign equipment in the US power grid lifts transformer stocks in India. CG Power, GE Vernova and Hitachi Energy among the key gainers. Oil prices fall for a fourth straight session as hopes of easier Hormuz flows offset fresh Russia-Ukraine tensions. Crude remains down sharply this week despite staying well above year-ago levels. A massive flash flood in Nepal has killed at least 160 people, with over 142 Indians among those reported missing. The Bote Koshi River surged suddenly, washing away villages and project sites. The Nepal army has deployed helicopters and rescue teams as relief operations continue. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you round up in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's also take a very quick look at what the markets are up to, because there's a lot that we have lined up for on the show as well. But before that, when you talk about Nifty, about 25 odd points lower. When you talk about Sensex as well, you're seeing quite the decline, also some bit of weakness coming in there with that 120 point cut. And when you talk about broader markets as well, mid cap as well as small cap indices, you're seeing that weakness also continue there, albeit a little bit of outperformance that you're seeing coming up with the small cap just about clutching on to gains. When you talk about the sectoral picture as well, this sectoral breadth as well, the market breadth as well, remains quite weak at the moment. So you do have consumer durables, realty, India defense, pharma, private bank, healthcare, energy, as well as the small cap indices holding on to a tinge of green at this point, and those are the only pockets of green that you're seeing emerging as far as the markets are concerned, because you do have media, PSU bank, rural as well as metal sectors that are very much on the back foot as we speak. When you talk about some of the stocks that are in focus as well, something like an HDFC Bank, heavyweight HDFC Bank is in focus on the back of that decline coming in after some of those allegations were also made. And that's something that we've exclusively told you as well when you talk about this particular stock as well. And other than that, when you talk about the entire financial stack as well, something like a Shriram Finance is standing out. That's also under pressure. Hindalco also under pressure, as can be said about NTPC and M&M. So some of those counters holding on to a tinge of red. When you talk about within the Nifty 50, what's holding up quite well right now is the Kotak Bank, Adani Enterprises, ICICI Bank, as well as Adani Ports. And you do have quite a bullish note also coming in as far as Investec is concerned when you talk about Adani Ports. So that seems to be quite the tailwind as well. And other than that, Tata Motors, PV, Titan Company and BEL also holding on to some bit of gains in an otherwise tepid and lackluster market. That said and done, let's also quickly take a look at what the commodities complex is up to. And when you talk about oil prices, you're seeing them also extend some of those losses. So when you pull up Brent as well as WTI, as can be seen on your screens, about $86 a barrel. When you talk about Brent and WTI, close to $81 a barrel. So elevated levels, but nothing like we've seen in the previous week. So some bit of pullback that you're seeing, and that pullback seems to be sticking as well. That's the key highlight that you're looking at when you talk about oil prices. Remains elevated despite some of those weekly losses as well. And when you talk about some of those factors, of course, Hormuz makes it to the top of that list. The diplomacy exchange also is something to watch out for, with the Qatar minister also visiting Tehran, and that's one key meeting that you have to keep on your radar when you're watching out for oil prices in terms of the factors. Other than that, when you talk about gold, it seems to be rebounding close to that 4,600 thereabout dollar level. And when you talk about the key factors also coming in as far as gold is concerned, of course, you do have the war that makes it to the top of that list. But other than that, you do have the Jackson Hole Symposium that you're watching out for in terms of any key commentary coming in for the Fed's rate cues. And lastly, when you talk about wheat as well, you're seeing wheat also climb to a 3-year high, and you're seeing that on the back of Russia-Ukraine-led export disruptions. So definitely watch out for that as well, and we'll try to get you some more insights when you talk about all of these commodities that I've talked about. In fact, Biren Vakil, commodity consultant, Paradigm Commodity Advisors, joins us on the show right now. Mr. Vakil, thank you so much for taking time out and joining us. Pleasure as always to have you on the show. First things first, just wanted to try and understand what you think about oil prices right now, because not only is the decline there, but it's also looking like it's here to stay as well, because some of those elevated levels that we've seen of late, they seem to have gone away on the back of this, not a real de-escalation of sorts, but just not much of a geopolitical cue or commentary coming out.
Like Hormuz and Black Sea, crude is also in a stalemate. A very tight range is since last few weeks, $75 95, almost. These are the floor and ceiling. And this status quo or very narrow equilibrium unlikely to break unless there is some new development happens.
And I like how you've brilliantly also summed it up that like Hormuz and the Black Sea, you do have crude prices also caught in a little bit of a stalemate. But do you think that this particular stalemate is going to be lasting for a few weeks until you get an escalation or a proper de-escalation, if you will?
On my broader canvas, I think in the coming quarters, wheat would steal the show. Wheat and corn, they may emerge as a front runner because climate risk, heat wave, wildfires in Europe, and recent farm tour in USA produced some downside surprise. I think these two commodities, staple food, wheat and corn, may see some upside, meaningful upside.
Absolutely, and that makes a lot of sense in terms of how you should be looking at oil prices right now as well. But do you think that the fact that we don't see much of a move coming in despite not, proper headwinds being, not proper headway being made when you talk about the diplomacy aspect as well, do you think that the fact of the matter is that the alternate routes have been figured out and the market is right now pricing that in?
Real story, I think, is in the distillate or product prices like aviation fuel, sea fuel, bunker fuel, diesel, etc. While headline-driven crude oil remains static or range-bound, but product prices like petrol, diesel, shipping fuel, they remain elevated and meaningfully elevated relative to crude. So I think secular bull market is still thriving and still path of least resistance to the upside.
And the path of least resistance definitely seems to be on the upside because you do have some of those elevated levels that you're still looking at and not a meaningful sort of decline coming in post that elevated level. But, when you talk about gold prices, quite the interesting picture there as well, Mr. Vakil, because you're seeing that little bit of rebound also settle in. Do you think that, number one, gold prices are going to continue and sustain this momentum? And number two, do you think that the sort of safe haven the narrative that you had, the whole regime that you had when you talk about safe haven assets in terms of gold, that's been changed in a very meaningful manner?
Smart money is back in gold, and US midterm premium is still to be priced in. So I think gold may head towards 5,000 during fourth quarter, maybe October, November.
Absolutely. And do you also see it decoupling from the US dollar? Or do you think that it's going to be tracking its moves? Because right now it seems to be tick to tick what the dollar is doing. So if it's weakening, then you see gold being slightly stronger, exactly, directly proportional to it. Do you see that de-dollarization or that little bit of decoupling also to come through going forward in the year?
The macro trade, sell dollar, buy anything is back now.
Okay. Right. So, and when you talk about some of the other factors, of course, you do have the Jackson Hole speech that does hold some of those key clues as well. And that essentially means that it holds some of those cue cards as well when you talk about gold prices. In terms of the direction from here on, is that how you're looking at that one?
Jackson Hole seems to be, entire world is anxiously awaiting because this new chairman is not believe in communication. I think if he is not communicating, itself is a communication. So I would try to ignore the noise and try to hear signal.
Absolutely. And when you talk about listening closely to the signals, just wanted to try and understand if you think that the September rate hike bets, do you think that they're still on? And because they, of course, remain crucial when you talk about the gold levels as well, lower rates could really support gold in a meaningful manner. What are you pricing in when it comes to the Fed commentary?
I think I don't see any rate hike in current year,
Okay.
We will see Fed verbally hawkish, but not in action.
Okay, so that's a very crisp sort of verdict coming in terms of where you could see that entire conversation also moving forward. But just quickly also wanted to try and understand if you track wheat as well, because it's quite the interesting move that's playing out right now in the wheat market. There's a 3-year high that you're looking at largely on the back of that export-related disruption coming in. And you do have the Russia-Ukraine conflict that is seeming to make that upward momentum be the path of least resistance right now.
Here, the story is maritime supply chain disruption. Black Sea is disturbed, Red Sea, Suez disturbed, Hormuz is disturbed. Freights, container freights rate are skyrocketing. Besides, you have El Nino and climatic related extremities. So I think there is significant that remains in wheat.
No, absolutely. And Mr. Vakil, this has been a little bit of a rapid fire round, if you will. Just lastly, very quickly wanted to try and understand if you think that fresh buys make sense when you talk about gold?
Yes, for medium term, 3 to 4 year holding period, gold is still a good.
Perfect. Thank you so much for taking time out and joining us this afternoon. So there you go. Gold prices still going to be looking at the fresh buys as a good sort of strategy for the medium term. And the medium term definition, slightly different from Mr. Vakil, but pick the definition that suits your portfolio. Moving on, let's talk about the NCLT that has approved Subhash Chandra's repayment plan despite claims exceeding 22,000 crore rupees, with creditors also set to recover just 0.03% of the admitted dues. In fact, Nimit Dixit joining in with all of those latest details. Nimit.
Yeah, so what's happening here is that Subhash Chandra's personal insolvency plea has been accepted. The total claims in the case that he was liable for in this case were 22,007 crore. Now, how much has been accepted as the amount he has to pay out is 6.5 crores, which is a 99.97% haircut. To put that in perspective, creditors will just recover 0.03% of their claims. One key striking example that steps out of this is LIC Housing Finance, which was one of the creditors here, had a claim of 1,322 crores and is only getting 38.09 lakhs, which is a staggering cut, a 99.97% cut directly for LIC Housing. Now, the big question here is how did this get approved by a committee of creditors when the haircut is simply over 99%? Well, the judge went into this in the order, and judge said that a committee of creditors by 80% vote has approved this plan. Now, the objecting creditors is interesting here because the objecting creditors included Axis Bank, Canara Bank, HDFC, RBL and LIC, and the objections were largely on the line of that this large amount, the payout is significantly tiny for this large amount. And then the second big one was that to look into Subhash Chandra's actual assets, because they noted that there was a sharp gap between Chandra's earlier reported wealth and his current disclosed net worth. A 2018 certificate was put that put his wealth at about 40,562 crores versus the current reported, which is about 31.79 crores. So these objections were noted by the judge, but the judge simply went on to say that where a committee of creditors has approved this, then the judge cannot replace his own wisdom with the commercial wisdom of the creditors. Another objection that's key here is that the objecting creditors say that a lot of people who are part of the committee of creditors are actually related parties with Subhash Chandra. That is also has been noted, although no action has been taken on that. In any case, the final verdict is out that only 0.03% of the claim is accepted. For a 22,000 crore insolvency, Subhash Chandra will be paying out 6.5 crores.
Well, absolutely, and thank you so much, Nimit, for highlighting all of those important developments when it comes to this particular case. Let's also move on and talk about something on a very somber note, turning to Nepal now, where a sudden and massive flash flood has devastated the Rasua district near the China border. At least 157 people, if not more, have been killed, while hundreds remain missing, including more than 142 Indian nationals. Sikta Dev joins in with a ground report.
We are at the Trishuli Army base camp right now, and as you can see, the arrangements are here being made for the rescue mission for all the victims who are still stuck on the upper reaches of the mountain where the flash floods had hit. It is around more than 24 hours and the people are still waiting to be rescued, and the help is being managed to the help is being organized. Sorry, cut. यहीं से लो, यहीं से लो, यहीं से ले लो. I'll ask them to join. The army rescue teams are getting prepared. The brief is being given to them. You can see the water arrangements. The water bottles are being sent. There are stretchers. There's medical help which has been arranged. And one helicopter has just taken off. The other chopper is just getting ready. And this rescue mission will continue the whole day through, because we hear that there are many people who are stuck in the upper reaches in those villages where help hasn't reached since yesterday. So the priority right now for the Nepal government and the Nepal army is to reach to those victims who have been waiting for some kind of help and also rescue. We saw that yesterday was a big challenge because of the heavy rains around this area. Today the weather is a little better. It would be easier for this rescue team to reach to the upper mountains where those people are still stuck and actually get a sense of what's happened in the upper reaches of the mountains yesterday.
Alright, then there you go. So that's the ground report also coming in when you talk about the border. But earlier today, you do have Rahul Kanwal, CEO and Editor-in-Chief, and Vishnu Som, Senior Managing Editor at NDTV, spoke to Nepal's Foreign Minister, who tells NDTV that the country is open for business and wants to make it easier for Indian companies to invest and operate in Nepal. He's also highlighted tourism, technology, infrastructure, along with high-value agriculture and herbal products as key sectors for greater India-Nepal cooperation, and talked about the missing Indians as well. Let's go across and listen in to a slice of that conversation.
We came over here, I was actually on the flight, and we were about to take off when news actually came in of this horrific tragedy that took place. I spent more than a month over here in 2015 when the people of Nepal lost so much. 24 hours later, today, could you share some detail about the extent of the tragedy? Are you able to gauge how big it is at this stage?
Thank you. At the outset, let me express my gratitude to NDTV World for hosting the first of its kind dialogue in Kathmandu. And also, I wanted to welcome our friends who have traveled from India to Nepal to participate in this dialogue. As we were discussing about this dialogue, I was hoping that we would be in a much different context and circumstances, but unfortunately, just 24 hours ago, the devastating flash flood we experienced, I sit here with a lot of heavy heart, a lot of pain and sorrow, and in empathy with thousands of Nepali families who we're still not unclear whether the status of the devastation. I mean, we've seen in the videos that has been circulating on the media and social media. What we know is towns after towns have been completely wiped out in a span of a couple hours. Thousands of people are still reported out of contact or missing. As of this morning, 160 people had lost life. That is official data. But we fear more numbers will flow in this afternoon. We know that thousands of families have lost their homes. There's been huge the bridges, the rivers have been swept away. Many of the communities are out of access at this stage. So we're still trying to grasp with the scale and depth of disaster, but what I can say is this is one of the largest and natural disasters we have experienced in most recent memory. And as a government of Nepal, as soon as the news came, our National Disaster Council met, our cabinet met, and made urgent mobilization. But we are still trying to understand the scale of this disaster at this point.
Many foreign nationals, including Indians, are feared missing in this tragedy. Can you give us a sense of how you're cooperating with other countries to get rescue and relief to those who need it the most? And what do you want to tell those watching in India and elsewhere who are very concerned about the status of their loved ones?
Many Indian nationals as well as other nationals, those particularly who were either going to or were returning from Mansarovar Kailas Yatra, they would have passed through that region or were waiting to clear the border area when this flood came yesterday. At this point, estimated about 500 foreign nationals are out of contact. Closer to 300 among them are closer to 300 Indian nationals. Because many of these areas have been out of contact, we do not know the current status. We know that many are in that area alive, but we have not been able to fully establish a contact yet. We absolutely are coordinating with the Indian Embassy here, as well as our other national embassies in Kathmandu. I have also personally been in contact with governments across the world. We've both called, sent messages expressing their solidarity with Nepal, as well as concerned about the safety of their citizens. As we establish contact today, we should be able to share more details. But what I've communicated and would like to communicate this through this forum as well is that as much as we deal with recovery, rescue of our Nepali citizen, government of Nepal is equally committed to safety and security of our friends in India as well as from around the world.
Other than close to 300 Indians among those who remain missing right now, thoughts and prayers go out to everyone in Nepal as well right now. But that's all the time that we have on this edition of the show. Thank you so much for tuning in. Do keep it with NDTV Profit for your profits.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मानता है। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, After Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPAM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Father and son duo, Deepa Jewelers from Hyderabad. It's fantastic to see firstly a family business coming into our markets. You've come in at a great price point, but before all of that, I really want to understand from the both of you, this B2B space has suddenly seen a whole slurry of listings and everybody seems to be wanting to come to the market. What's the reason behind that and what is it for you?
This industry has seen a big shift from
unorganized retail to organized retail in the last few years, and this shift from the typical standalone store sales to the corporate chain store sale has created an ample opportunity for B2B manufacturers and suppliers, because the fast growing corporate chain stores are in need of reliable and organized suppliers. So hence all the organized B2B players are on an expansion mode, and hence we see a big number of IPOs are coming in this industry.
I wanted to understand this a little further. So one of the things you said is you supply to retailers like, say, Kalyan Jewelers, one of the biggest ones. Yeah. Now Kalyan Jewelers expansion then also causes you to expand. So the expansion that these large retailers have been doing over the last few years, has that what brought you to the listing and the need for capital that these companies are seeing? Could you explain that?
Yes. If you could see, if from the last decade the store count of these big giants have increased rapidly, and as the store count increases, their demand for jewelry also increases. So and hence, to always stay competitive in the market and not lose our market share, there is a constant need for us to upgrade ourselves, to upscale our operations in line with the pace of expansion of these giants. And hence IPO is a great platform where we can raise funds to foster our growth story, as well as develop a brand image for ourselves, which helps us to match the pace of expansion of these clients.
Your business, one of the interesting things I found, it's not unique of course, but is there in your business you depend on external artisanals a lot, 40 external artisanals. Yeah. Can you explain that model to us a little bit? And once you're listed, once you have the capital, do you plan to increase that, maybe build an in-house team expansion, or is this the model you'll stick to?
Till the last fiscal year, we were entirely having an outsourced model, wherein we had a network of 40 such contract karigars who held expertise in the manufacturing of the products that we deal in, because manufacturing of jewelry requires experience, skills, and knowledge about the local tastes and customer choices, and hence having a outsource model helped us tap that kind of expertise which was held by these karigars, and it also gave us operational flexibility to expand our operations as and when, how much ever we wanted. But with the rise in prices, with the change in the market conditions, this fiscal year we have set up our in-house manufacturing facility also. So going ahead, we want to have a hybrid model wherein a certain percentage of the products we manufacture it in-house, and a certain percentage we do it outsourced model. That would help us get more and more operational flexibility to upscale our operations in times of season, and also slow down our operations in times of off season. So yes, we aim to have a hybrid model in the.
Good afternoon, you're watching Small Cap Buzzers. Let's go across to our first management on the show. Vibhor Kaushik, Managing Director of Vibhor Steel, is joining us right now. Sir, firstly, to start off with, you have guided your revenues to increase in the range of around 20 to 25%. How much of this is already visible from the current order book, and what needs to be right to achieve the upper end of the guidance of 25%?
Thank you for having me. The turnover increase is because of our new plant that we have put in Odisha. So that plant is now operational, and that's where the growth has been visible. Our other plants are running at optimal level. Jharsuguda, which is in Odisha, has started last year and now is showing a lot of promise. So that's where the turnover is visible. And the turnover is only coming from our product, primarily from steel pipe and the highway guardrail or the crash barrier. The Jharsuguda plant has many other products which have not reflected in this turnover, which is in Q1 turnover. Those will start to show in Q2, Q3, Q4. By the end of the year, the other products will also start to show their potential in that region. So that's where all the turnover will start to see. And we are expecting The result of Q1 is more than what we had expected earlier, and as I said earlier, that this is coming from our products which we have been doing for 20 years. The new products will also start to add to the turnover, and it will also start to add to the EBITDA growth and margin growth.
Okay. Recently you also bought a land in Haryana, I believe around 20 odd crore rupees. Can you just take us through the capital expenditure plan that you have for this? What are you going to set up? By when will that start? From when will the revenue start flowing in from that plant? Any details on that front?
The Haryana unit, the land, we are looking for the land. We have identified a few land parcels, and I think the registration should be done anytime, probably in this month. That in Haryana we will do the infrastructure and the power projects such as the highway guardrails, transmission line towers, and octagon pole and high mast pole. These are the products which we have introduced in Jharsuguda. That's the products that we're going to be taking in Haryana as well. Because right now in India, the demand is as such that we're getting a lot of inquiry from North region as well. So before the demand is here, and we should encash on it now that we have experienced, now that we've seen how the order flow is coming in. So that's why we have decided to put up a plant in Hisar or close to Hisar in order to cater to all these new products that are there. The timeline, we did Jharsuguda also at a very fast pace. We will continue to do that in Hisar, Haryana as well. If it's up to us putting up the plant, we should be able to do it hopefully by the end of this financial year itself. But it has a lot to do with some of the other aspects as well, which are sometimes not in our control, such as getting the power on time and getting some of the government approvals. So we will try to do it within this year. If it's not within this year, then definitely by next financial year it should be running.
Okay, just wanted to check with you, the second galvanizing tank in Jharsuguda, that was supposed to be operational by September. So is that timeline on track?
Yes, we are on track with that. Jharsuguda's second galvanizing tank should be operational in the first week, or maximum by 10th of September. It should be up and running. We have a lot of order flow, and we initially our plan was to introduce this galvanizing tank a little later, because we wanted to see how the market is going to react. Now that we've got the positive response from the market for all the products, it's very important that we put this galvanizing tank. So it should be, I'm happy to announce that it should be operational in September, in the first week of September.
Right. And what could be the maximum revenue potential from this that we could see? I believe right now you're just guiding for utilization of around 24 to 30%. But obviously this is expected to increase even going forward. So what could be the maximum revenue potential here?
The reason why the turnover has been restricted to 30% is because most of the orders are galvanized orders. So due to one galvanizing tank, we're not able to cater to all these orders. For example, the order flow right now at the moment in Jharsuguda is around about 2,000 ton for the pipe, 1,000 ton for highway guardrails, around about 1,500 tons for transmission line tie, and around 250 tons for pole. So in order to do all of that, you need another galvanizing line. Once that another galvanizing line comes in, we should be able to do 2,000 tons per month extra from that galvanizing tank. And that's a good revenue growth. I don't want to put a number to it, but there should be a definite increase. If quarter one has already shown the result, other quarters are going to add up to this.
Okay. And when it comes to monopoles, what is the kind of revenue and margin opportunity you see from monopole certification that was received in Q3?
The monopole is the flagship product. This is one of the products that we have put right on the top. It's a demand of India that we provide, or somebody has to provide these monopoles so that the transmission line powers could be transmitted everywhere. seeing the global situation right now, it is a requirement of our nation. The monopole revenue in terms of all the products that we have, it is right on the top. It's everything starts from after monopole. So I always say that in every meeting as well, that the monopole will give the most, if not the revenue, then the margins are quite healthy. The margins could be anywhere between 10 to 12% in monopole. And there is a lot of demand. We are getting inquiries. We are only waiting for some of the approvals. We should be getting those approvals hopefully in another couple of months.
Okay. And recently, what I could see from exchanges is the promoter, that is itself you, have bought few shares from open market around 5,600. So can we expect such similar activity to go to be done even going forward? Any timelines that you have? By how much do you want to increase your stake in the company? If you could share some details, that would actually help investors a lot.
I think the intrinsic value of the company is much higher than what the share price at the moment is. This is what our thinking is, which is the reason why we started to buy those shares. We don't have any plans of buying a lot more of these shares. As the maximum we can be a 75% stakeholder. So we by law itself we cannot exceed beyond 75%. So we will see about that. But I think the turnaround period should be coming in now in terms of everything, since we've started to see the growth in Jharsuguda. So not a lot that we're going to buy at this point in time, because we think the intrinsic value is higher of the company.
Great. Well, thank you, sir. Thank you for joining us and giving us the way forward for Vibho Steel. Let's also welcome in our fundamental guest, Avinash Gorakshakar, founder and head research, Avinash Mentor Research Services. Avinash, you heard the management. They themselves obviously believe that the intrinsic value is much more for the company, and they're quite optimistic even on the growth plans going forward. 20 to 25% is the guidance that they have given. How are you looking at this counter at current valuations?
No, I think, Somit, my guess is that this year will be a strong year, because a lot of expansion will get converted into incremental revenue. And I think, my sense is that whatever initiatives the management mentioned, like putting up a new galvanizing tank, also, talking about its core products, I don't think, numbers are going to be anything less than 20 to 25% in terms of top line growth. Margins are also expected to be preserved. So I think it could be a good opportunity for investors to look at this stock. Although, the last year, that is for March 26, numbers were not very encouraging. But 27 definitely has started off on a good note. And I would say that taking the next 12 to 15 months, the outlook definitely remains quite positive. And at these levels, I think it's definitely worth, accumulating, but from a 12 to 15 month kind of time frame.
Okay. Well, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
Welcome back. You're watching Small Cap Buzzers. Let's go across to our first small cap stock, that is Oriental Aromatics. The stock has been gaining for the last third consecutive session. Let's get in Varsha to understand what could be the potential reason behind this trend in Oriental.
Well, they came out with their investor presentation yesterday, and we'll talk about the key highlights from it. But about this company is into flavors and fragrance industry. Let's talk about the future strategy that this company has. Well, they're focusing, they are shifting from low margin to high margin and high value added products. They are expanding their specialty chemical portfolio through research and development, and they want to strengthen their backward and forward integration. Now, talking about the fragrance and flavors, which is a hidden growth driver according to management, recent ingredient capex also strengthen the competitiveness, and the backward integration will improve cost position and supply security. Talking about the camphor business, well, there's a good volume over there, but industry is going through a rough patch. Strong volume growth was seen during the quarter. Demand is expected to strengthen from Q2 and Q3 onwards, and the domestic camphor market, if you see, is facing structural overcapacity, and company is been focusing on pharma grade camphor. Onto the specialty aroma chemicals, where production and sale volumes are expected to grow strongly. Large capacity addition across Asia is seeing a pricing pressure, but companies focusing on yield improvement and energy optimization. Lastly, onto the guidance which was given in Q1 FY27 con call, where management is expecting 10 to 15% sales growth over the next few years, and the focus remains on increasing utilization, and no major expansion has been planned over next few years.
Right, thank you Varsha for that. Avinash, did you get time to go through the presentation? Anything that interests you?
No, I think, this year, Somit, should be a better year. If you look at the last financial year, numbers were slightly depressed. So I think clearly this year has started off on a good note. The management is optimistic that, its chemical products, if you exclude camphor, where there's a little bit of oversupply in the market. But I think other, products, especially from the fragrances segment, should do well for the company. And that's the reason, the markets are also very optimistic. So we'll like to wait for the Q2 and Q3 numbers, whether this performance is going to be sustained. But, at these levels, I would suggest it's better to hold and, not rush into and buy the stock, because the stock has already moved up quite significantly in the last 2 to 3 days. So we'll wait for Q2 numbers, but structurally we believe, the financial year 27 should be significantly better as compared to last year. And that is what the market is also betting upon.
Right, moving on to Moschip Tech, the stock has been gaining on the back of strong volumes. If you look at the volumes, they are nearly 20 times its 20-day average. Let's get in Jasmeet with what could be brewing here.
Well, Soumya, thank you for that. As rightly said, quite interesting counter. It operates in a hardcore semiconductor industry of the particular counter, and we have also recently seen Cyient coming and giving out a strong commentary on semiconductor business, as they expect the overall semiconductor market to boom nearly 4x going ahead. So, well, that's a key positive takeaway which it's getting from the Cyient, and also applies to Moschip as well, as the company operates under the semiconductor market. If you look at this particular counter, the overall stock is up 6% during this month, and majority of the gains coming in from today. While over a month, the stock has rallied about 13 odd percent, while over last 1 year, the stock has gained about 33 odd percent. If you look at the Q1, it was not great for the company in terms of the overall on YOY and QOQ basis as well. On YOY basis, the overall revenue declined by about 14 odd percent, while the EBITDA nearly declined by 70 odd percent. So quite weak quarter for the company. In terms of the overall margin, even that saw a downtick to 10.1% versus earlier 12.6%, a downtick about 250 BPS. In terms of the profit, again, that got impacted on the back of that slower revenue movement as well, and the profit fell about 68 odd percent. If you look at the key takeaways from the Q1 and what exactly happened and the management commentary going ahead, the first one is the overall revenue declined on the back of the timing of the turnkey projects during the quarter, and we can expect that to come back in the second quarter. The second one is the overall taping out of the semiconductor as an industry for the company, which is a wait and watch of how that pans out going ahead. Well, the third key aspect is the overall PES side of the business saw a slower revenue growth compared to what was seen in the previous quarter, and that's where the decline. But lastly, the overall delivery capabilities and the engineering strength of the companies still remains strong, but the execution remains a key going ahead. The manager has also given an outlook for the overall semicon industry of how they expect. The industry outlook shows that the global market of semicon has nearly reached 120 billion in the month of May, and that's an uptick of 6 odd percent on YY basis. If you look at the overall outlook for 2027, they expect the semiconductor industry to reach nearly $1.9 trillion, and it's a huge mark we are seeing. So as of now, it's a wait and watch. How does that pan out going ahead?
Right, Jasmeet, your view on this, Avinash?
No, I think, frankly, Swami, this is one of the few players which is into semiconductor and system design services. And I think, this is a space which is a very unique space. Not many companies are there in this vertical. So, in terms of their technical skills, in terms of their positioning, domain expertise, I think the next 2 years look to be quite promising. But I said, as your colleague mentioned, quarter one performance has been quite disappointing. So maybe in the short term, the stock may not, move significantly, I think, but definitely in terms of their order book, scalability, the next couple of years can definitely be good. So a good long-term bet, but you will have to monitor it on a quarter-on-quarter basis because, the markets look at data points and numbers, and the Q1 number has not been all that great. So we like to see whether the Q2 and Q3 and the second half is much better than the first quarter of this financial year.
Right, moving on to the last stock, that is Welspun Investment. Quite a volatile day of trade it has been. At one point of time, the stock was down as much as 15 odd percent, and right now it is up around 2 odd percent in trade. Let's get in Shivam to understand what could be causing this volatility in trade for Welspun.
Well, yes, Welspun Investment is a non-core taking deposit investment company and deals in shares and securities and trading of textile products and commodities. Now, the fall in the stock is due to the Welspun's investments stake sale in the Welspun Corporation, and they have sold around 60 lakh shares at 2,275 rupees per share. Now, the total transaction value of this stake sale is around 1,365 odd crores, and also the post sale the holdings will be reduced to around 7.58 lakh shares. Now, the impact of this stake sale would be lower dividend income, as the company is a core investment company. The revenue mainly depends on the dividend declared and the changes in the stock price of the investee companies. Also, going forward, there will be lower recurring revenue and income visibility is also lower. That's why the stock has fallen so much.
Okay. Anything on this, Avinash? A holding company recently sold stake in Welspun Corp. Do you expect a big dividend to come in here?
No, I think, the past track record, Somit, has not been very encouraging, and we don't have any large empirical evidence of this kind of development. So if at all a large dividend comes in, then the stock could see a good ramp up. And I think, the liquidity in this counter is also pretty less. If you see the capital structure is very small. So my sense is, I think, let us wait for some more clarity, because in these kind of counters, the volume of the liquidity is a major kind of fallout. So I would say that, it's better to hold. Fresh buying, I think I wouldn't suggest to buy at these levels.
Right. Thank you, Avinash. Thank you for joining us and giving us your views on the stocks that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement. Vande Bharatam, Bharatam, Vande Bharatam. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना। स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores. In FY27, do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook?
Hello and welcome to NDTV Profit Ask Profit edition, and yes, this is a show where we get you all the stock related queries which are answered from our fundamental and technical guests. But let's do a small chart check on the markets, how things are panning out, and both Nifty and Nifty Bank we see a downtick is coming in. There was a small recovery attempt, but now again we are at the day's low level and comfortably below that 24,200 mark, and that 23,800 becomes a very, very important support level. Let's look at Nifty Bank, see what's happening there. Is there any recovery attempt being made? No, we are at the day's low. levels as well. Let's look at the advanced decline ratio. Largely the small caps were holding the fort, but seems like the sell-off has intensified, and you can see the breadth actually going towards the bears. Let's pull in the Nifty mid cap and the Nifty small cap index also to show you how things are moving, and after that we'll talk about the overall sectoral indices. Likely in the beginning of the session we had seen that there were a lot of greens involved as well, but right now let's pull out the sectoral map to show you which sectors there is a churn happening, and largely we can see there is a sell-off there. Nifty consumer durables, pharma, healthcare, defense, these are doing well in trade. Interestingly, realty also, interest rate sensitive stocks are doing well, but PSU bank there is a little bit of churn, and profit booking also coming in the metal and the media pack as well. But let's move on to our queries segments, and remember these are the numbers which are flashing on the screen. To look at them and put in your requests as well. When you do that, remember to put in your stock, what is your investment horizon, short term, long term, and what call do you want, and of course the rate also to focus at. But let's start our conversation. We are joined in by Jatin Kedia. He's the VP of Technical Research at Teji Mandi, and Jash Shah, Fundamental Research Analyst at Latin Manhar Lal as well. Good afternoon, gentlemen, to both of you, Jatin and Jash. We'll start with Jatin, and with his interesting query coming in from Ekambrea from Hyderabad, and he's holding 300 shares of PFC at 420 rupees per share, and he wants to ask, should he average at this current prices? Jatin, there is a loss of almost 20,000 rupees from the buying price for Ekambrea, but what are the key takeaways here?
Yeah, so on the charts, we believe that the stock is still in a downtrend. However, there is a support placed at 340, 335. So that will be a good level to average, not at current levels.
Okay, another interesting query coming in, Jash. I want to get you on this. Is Lalita from Bangalore, and the stock name is Zentech. 10 shares bought at around 1859, not so much of a loss, largely flattish. Is this a long-term candidate, Jash?
Yes, I think this is a long-term candidate one should hold, and because the losses are not deep, I think it is comfortable to hold.
Long-term candidate coming in for this segment as well. Also, we have Bhaskar from Vijayawada. He's holding 220 shares of Pine Labs. Let's get that stock as well. A short-term query has come, Jatin. Stock seems to be having a little bit of correction, but overall, post it listing, there was a good momentum coming in, a little bit of profit booking right now. But your views for short-term, is there a trade to be made here? Already there is a holding happening at, the price is not there, but there is a holding of 220 shares.
Yeah, I think on the weekly charts, there has been a trend reversal from down to up. It has formed a higher low at the 155, 157 level, and also surpassed the previous resistance zone of 164. So my sense is that we could see higher levels in the case of Pine Labs towards 188, 195 on the upside. If someone is holding, then continue to hold with a trailing stop loss at 158.
Interesting query coming in from Ashwini from Chennai also, and 100 shares have been purchased for Shriram Finance. The price is 1129 rupees, and there was of course a brokerage call 2 days back, but it's falling. Of course there is a profit booking at play. The gold financing stocks have rallied, but the query is for the long term, and Josh, I want to get you on this. Shriram Finance, would this be a good bet for Ashwini here?
Yeah, I think it is a good bet. Finance, the NBFC lending companies are doing well, and I think you should be in one of these companies. And especially with the festive season coming up, I think the lending book will do very well.
Right, and Jatin, a short-term query coming in for Radico Khaitan. This is Anisha from Hyderabad. Hold or sell at the current levels for Radico Khaitan at 1521. You can give a monthly view as well.
The trailing stop loss at 4400. The overall trend is extremely positive, extremely bullish. Higher top, higher bottom formation is intact on the every time frame, weekly, daily time frame. So continue to hold and ride the uptrend. Keep a trailing stop loss at 4400. On the upside, the target area is 5000, 5100.
And Murli from Hyderabad has come in, and the Titagad, he has 11 shares of 480 rupees, and he's holding for a couple of years. Of course, congratulations to Murli as well. As a good jump coming in, almost you could say 80 to 90% returns here. Josh, want to get in here as well, a long-term perspective, a little bit of profit booking here, or do you think now important news flows have started coming in the railways again?
I think the good news flows have started coming in for the railway sector. You can book profit, but I think the shares are from a lot of years, so I don't think we want to, reset the whole capital gain cycle. But you may want to book a little bit of profit and re-enter at maybe buy at dips, or you just hold and keep it going. Because I'm very positive on the railway sector as a whole, because a lot of orders have been given, the focus has changed. So I think there's a new turn coming into the railway side.
Right. Also, Bhanu from Vijayawada, he's holding 200 shares of Amara Raja Mobility at 1,025 rupees per share. Let's just get that on screen. A slight, you could say in a loss. Hold, average or exit. Jatin, your pick.
Well, my sense is that he should continue to hold. The overall correction has been done, and now the stock is reversing its downtrend. So my sense is that we should see higher levels towards 1060, 1100. From a short to medium term perspective, the crucial support is placed at 865.
Right, and S. Sriram from Vishakhapatnam has also come with his query. He's a long-term investor. So Josh, this question is for you. He has bought Tilak Nagar Industries at 335 rupees per share. Hold or sell at the current levels, and of course there is a good profit also here. So that's the query coming in from Sriram. Josh,
I would go for hold in this stock.
Okay, hold coming in for Tilak Industries. Interesting. Another important query coming in from Anand from Hyderabad. We're getting a lot of queries from Andhra Pradesh and Telangana. Interesting. He's holding Utkarsh Small Finance Bank around 1,000 shares at 14 rupees. Can he add further for long term? Jatin, I want to get you on this, especially on the technicals.
Yeah, so overall on the charts, I can observe that the stock is forming an inverted head and shoulders pattern. The breakout level or the neckline is placed at 16 rupees. So my sense is that he should continue to hold. The overall structure is turning positive. Formed a higher low at 12 rupees and thereafter at 14 rupees. So it's forming a higher low at 12 and 14. So that indicates an uptrend. A breakout above 16 levels could easily take the stock towards 22, 23 on the upside. So suggestion would be to continue to hold.
All right, now we're moving on to our caller. We are joined in by Gautam from Vizag. Good afternoon, Gautam. What is your query?
Yeah, good afternoon. Hello. Actually, I want to buy Ultratech Cement for long-term purpose. Can you tell me the entry level and the target price for long-term purpose? Because I love this show. So I gain knowledge and have suitable profits also. That's why I called to you.
All right, interesting query. Josh, I want to get you on this. If you could just give us a little bit of entry point also, and is it a good time to do that for Ultratech Cement in the long term? We have seen the cement pricing gaining strength, but is it enough for Ultratech Cement for long term? Josh?
So Ultratech Cement has been the stock to watch for any movement in the cement industry. But of course, as soon as the cement prices increase, they would gain momentum. The operating leverage comes into play. So I think we should enter this stock. But mind you, the monsoons are lumpy for cement industry. So you might get a better pricing to enter the stock. But it is definitely a buy and hold scenario over here.
Buy a hold scenario coming in for Ultratech Cement. But Jatin, I want to get you on this. Siva from Hyderabad has requested the interesting entry point, if any, for Tata Motors PV. Of course, there's a lot of, you could say, pressure is there in Tata Group of stocks. But is there any entry to be made? And if yes, what would that be? Tata Motors passenger vehicle.
Yeah, see, the stock is still in a downtrend, and the recent pullback that we saw towards 390, 400 was sold off, where we had the long-term resistance average, 200-day average kicking in. Until and unless the stock surpasses 355, 360 on the upside, I don't see the trend reversing in the short term. So, my suggestion would be to avoid TMPV. A switch to Ashok Leyland would be suggested.
Okay, that's pretty interesting. But Jatin, stay with me. Sumana from Dubai has come with a very interesting pick. Hindustan Copper, the average price is 611 rupees per share. Now it's trading below the buying price. On the technical analysis, 3-month basis, Sumana wants to know what trade can be made here. 3 months for Hindustan Copper.
Yeah, see, overall, if we see the copper, international copper prices, they are rising, the dollar index is falling. So that is a positive sign for the metal index. And we believe that Hindustan Copper, the fall that we have seen is majorly on the back of the OFS news that came in. So my sense is that this dip that we are getting towards 526 or 515 odd level should be considered as a buying opportunity. From a 3-month perspective, I'm expecting the stock to rally towards 600 and 625 on the upside.
Okay, so that's an interesting takeaway. But a WhatsApp query coming in from Kiran Kumar from Hyderabad. HDFC Bank, roughly 156 shares are being held at 776. Slight loss coming in, but just wanted to get Josh, your views in HDFC Bank as well. We don't know the investment horizon period. I'm assuming long term. Your view on that?
I think at this valuation, HDFC Bank is extremely attractive. I think it can give a good bounce over here, but for the longer term, I would say you should exit once you make a little bit of money over here. Like if you can make 10 to 15% returns, you should exit, because just because the valuations are extremely attractive right now.
Prasad from Amravati, Andhra Pradesh has given a very interesting query, that is HCC. He has roughly 10,000 shares. Currently the price is buy price is at 26, and slightly we could say a slight loss is coming in, but today the stock is up 6% also. Good time, Jatin, for a sell or a hold here, or do you think there is more momentum left in the charts?
My sense is that there is still more juice to this up move left towards 28.5 to even 30 levels on the upside. Yes, the stock has rallied quite a bit from around 21 levels to 26 levels in the last 3 to 4 trading sessions. But overall, the trend is reversing from downtrend to uptrend. So my sense is that the next level of resistance only comes at 28 and 30. The crucial support is placed at 23.
Right, a lot of messages coming, and the query is same. It's Lalu Rajiv from Kerala. He's holding Tata Power at 392 rupees. Let's get that on the screen as well. 500 shares. Should he hold, sell, or average? And this is a medium-term investment strategy. I am assuming 6 months to 8 months. So I'm going to take a technical call if it's okay. And Jatin, just wanted to get your view on it. This is coming from Lalu Rajiv.
Yeah, so technically the stock did witness a breakdown in yesterday's trading session, and today it witnessed follow through selling pressure. Now the technical support is coming in at 343 to 335. So not much downside from current levels, but I think he should continue to hold. It is trading very close to its crucial support levels.
Okay, so there is a next query, Venkatesh D from Karnataka, and this is query on Tilak Nagar Industries. Around 500 shares has been bought by him at 495. 6 months is the horizon. Josh, I wanted to get your view on it, especially the way premiumization is playing out. How do you think this stock looks like, Tilak Nagar Industries?
I think the stock, they have been doing things to enable premiumization. They are looking at getting newer brands in the portfolio. So I think it is poised for growth. Whereas the competitors, I don't know if they are investing as much as they are. So I think it is a good pick.
Paramjeet from Himachal has an interesting query, and this is Sedemac Mechatronics. 1500 shares he has bought, and the price is at 2,600 rupees per share. Let me pronounce it right. Sedemac. Yes, that's the company I'm talking about. 2,600. So he is sitting at a profit here. But Jatin, just wanted to get you on this, the long-term view for this counter if you are tracking this.
Yeah, see, overall the trend for the stock is positive, and recently it broke out of a consolidation in the early August. So my sense is that this decline that we are seeing only is the retest of the breakout at 2950, 2940. My sense is that the overall trend is still positive, and decline towards 2950 should be bought into. On the upside, we are expecting levels of 3350 to even 3400 on the upside.
Now we have our caller Sadar or Sudar from Chennai. Good afternoon, Sudar. What's your stock and what's your query?
Sir, my name is Sundar Rajan actually.
Okay.
Yes, okay, my name is Sundar Rajan. I have stock of, I bought a stock of Clean Science 80 numbers. Last month I purchased. But here and there it is going 50 rupees up and down it is going. What is the status and what is the chart is telling? Can I hold this? Can you?
And sir, is it a short-term basis you want to ask or long-term basis? I need some clarity on that.
Short-term basis I am asking, sir.
Okay, Jatin, I want to get you on this. The stock is under consolidation. There is no major loss or a major profit here. What's the technical chart suggesting? Should Sundar be involved or stay put with the stock, or is there any call else?
Yeah, see, overall the stock is consolidating between 840 and 810 since the last 7 to 8 trading sessions. My sense is that it's forming a bullish flag pattern and he should continue to hold. We are expecting a breakout on the upside towards 890 to even 910 on the upside. If the consolidation breaks on the downside, then 805 is the crucial support below which he will have to liquidate.
Okay, that's the key levels to actually look out for. But gentlemen, let's start the rapid fire round, and we'll start with the queries. Dr. Masood from Saudi Arabia, he's holding Bharti Airtel at around 2106. There is a loss. Good time to hold or exit. Jatin.
Continue to hold with the stop loss at 1860.
Okay, Y Prasad from Vijayawada, he has 4,000 shares of Indian Overseas Bank at 54 for a very long time. Heavy loss right now. Good to exit or wait? Josh?
Average.
Average it out for Indian Overseas Bank. That's an important commentary coming in. Godrej Consumer short-term view, 6,000 shares at 910. Any trade to be made here? Jatin?
The overall trend is negative and exit would be the suggestion. No fresh entry suggested.
LIC Housing Finance, good time to buy for the medium term, Jash?
Yes, buy.
Okay, buy coming in from there. Balakrishnan from Chennai, he's asking, can he enter IDBI Bank at the current prices? Jatin, your views?
Current levels, yes, you can enter. Target area is 100. Stop loss area is 87.
Right, and Bajaj Hindustan Sugar, Murli from Hyderabad has 300 shares at 22 rupees per share. Should he hold for 1 year or exit totally? That's the query coming in. Jatin?
Bajaj Hindustan continue to hold. Sugar sector doing well. Crucial support is placed at 19. Resistance is placed at 29.
Okay, that's an interesting take coming in from there. But another interesting stock is your PB Fintech. Important levels here. Good time for any kind of averaging or doing an addition here, Jash?
I would hold. It is already an uptrend, so I would hold right now because the valuations are stretched.
Right. Shankar from Bengaluru has owning 500 shares of NMDC at almost 88 rupees. And he wants to add more. Is it a good trade, Jatin, on these numbers? It's largely flattish or slight loss in the current prices.
Continue to hold. No need to average as of now. Upside target is placed at 96, 98.
Okay, Manmohan from Bengaluru is an interesting stock. Jayaprakash Power Ventures, he's holding 1,000 shares and there is a loss of 2,219 rupees was his buying price. Should he hold still or sell it? Jash?
I don't cover the stock.
Okay, any views coming in, Jatin, for Jayaprakash Power Ventures? Entry price was 19 rupees.
I think he should exit. Overall, the stock is still in a downtrend.
Okay, interesting. Please suggest the entry levels for Syngene
and Bharti Hexacom. This is coming in from Satyan. I just wanted to get your views, Jatin, on this. Syngene International or Bharti Hexacom, either of them, good entry price, if any?
As a disclosure, we have suggested a buy to our clients. On the upside, the resistance area is 430 and the support is placed at 395.
All right, we'll wrap our rapid fire segment also. Thank you very much, gentlemen, Jash, as well as Jatin, for your time in both fundamental and technical calls. And in total, we have solved 85 queries today. So that's the entire show for this. And that's a wrap for NDTV Profit. Keep watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना.
स्पंदन एक पोर्टेबल ECG मशीन है.
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है.
If you need any manufacturing help, do reach out.
And I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. That is Hiral Dadia. We're coming to you live from the NDTV Profit Suzlon studio. And no matter how excited you are to present the show, it doesn't change the fact that the markets currently are not exciting.
Absolutely. I mean, just look at it. We are at the day's lowest levels. Now, we've broken that, psychological support of 24,200 also.
Yeah.
The question is whether we end the session below 24,200 or above that 24,200, because if you're above 24,200, there is a potential of that upside, but below 24,200, there is a potential of further downside risk that comes in as well. Look at the intraday chart, 0.3% low over there. Your bank Nifty is also mirroring similar moves as what you're seeing in terms of Nifty 50 in today's session. And I think the best is to, and this is interesting, but look at from the day's low, that mild recovery that's coming in. So there is a potential, Alex, that we do close above that 24,200 mark yet again.
Yeah, and you can't count it out because you've seen how the CAS is
exactly, and that's the only hope that I have, right? For 24,200.
On expiry day, on the Nifty expiry day, you had a CAS move that pushed the Nifty higher by about 74 points. And then in trade yesterday, you had a CAS move that pushed it down by 74 points. And so we ended with cuts of half.
And today will be the first full expiry with CAS.
Yeah, so because the Sensex also expires today, you'll have the first full expiry of both the Sensex and the Nifty. Of course, the Nifty expiry played out on Tuesday. But let's take a look at the broader markets as well, because that's where you've had a little bit of resilience in the past. Today, that's not, I mean, we're off the high point of the day. We're just trading flat with a negative bias.
Absolutely lackluster.
And completely flat. One of the major factors, and we've been talking about it through the week, and even last week, Hiral, has been the India VIX. And you have the VIX that continues to be under 11 at this point.
Wow.
Yeah, it continues to be under 11 despite the fact that it's up about 3%. And really, this is a factor that indicates what the tone and tenor of the market is, struggling for direction and struggling for the next trigger. So crude coming off from $90 to the barrel.
No good to Indian markets right now.
Nothing.
And I think what's happening is you're seeing a lot of fund allocation that's moving to the primary markets with that whole host of IPOs which are coming in and giving you spectacular returns.
And block
at least
deals.
in terms of listing day, exactly. And huge paper on the cards as well in terms of blocks and bulks that are happening on a daily basis. So that's where the bulk of the action is if you talk about from the HNIs, from investors as well. Let's quickly look at the heat map in terms of Nifty 50 and then we will look at the sectoral as well. Look at that, a Kotak Mahindra Bank.
Second day in a row.
Volumes are pretty strong for this size bank in today's session. In fact, ICICI Bank has played a catch-up because it wasn't in the first top 5 gainers since morning. Titan is there. Adani Enterprises again on the back of the initiation report that Motilal Oswal has come up with. A few of your, Tata Group stocks are in the positive. So Tata Motors, PV, Tech Mahindra, two of them that you're looking at. Adani Ports marginal gains coming in there.
But on the downside, you have one particular stock, and we're going to talk about it in more detail. And this is likely accounting for a bulk of the Nifty's move down, which is HDFC Bank. And it's down 1.8%. Of course, there's that class action suit that has come through. We'll tell you more about that. It relates to an incident or a report that is well documented and covered. So it's not something that is new. The class action is new, and that's having a bearing on the stock. Also, the fact that there is no clarity on who will take the corner office and what the next appointment is going to be. Hindalco losing ground, and so to NTPC, Shriram Finance, Mahindra and Mahindra, Indigo.
Look at Indigo. In spite
surprising.
of crude coming off, you're seeing that counter which continues to trade under pressure. Let's just look at the contributors from what Alex is also pointing out, with the kind of contribution HDFC is actually giving out, to the kind of cuts that we are seeing in terms of markets. I mean, there you go, 43 points one way in terms of HDFC Bank, though you have a ICICI Bank which is trying to balance it out to some extent. Likewise, you're seeing Titan, L&T, Eternal, but on the other side, Hindalco at 10% contribution, Reliance, M&M. So all very interesting names that are contributing.
But once again, you have two of the heaviest names of the market that are proving to be a bit of a drag. And so therefore, let's also just show, before we get to the sectoral, if we can pull up the advanced decline ratio, just to drive home that point, and then we look at the sectoral, there is a pretty wide gap. And yesterday you had advances that were ruling the roost, but today it's very clear that the breadth is not supportive. So let's take a look at the sectoral indices as well. And you will see private banks that are doing okay, up about 0.4%, because apart from HDFC Bank, apart from HDFC Bank, you have ICICI Bank and Kotak Bank that are doing okay. PSU banks, as Hero has pointed out, not doing particularly well. The Bank Nifty is losing about 0.3% or so. Then PSU Bank, by the way, Bank of Maharashtra for one had a pretty good run yesterday. And there were a few stocks in that pack that bounced back pretty well. That's being reversed today.
And look at metals as well. It's Hindalco to some extent which is trying to pull Nifty metal lower. Oil and gas, the pressure continues. Interesting to see a consumer durables and FMCG which is seeing inverse. Consumer durables which is up 1% and 1.2, FMCG down nearly 0.5% in trade. Pharma is playing defensive yet again, so that sector is up 0.5%. Defense, I mean, it's always been a topsy-turvy ride for defense. One day you will see that sector which is seeing some smart moves. The other day that profit booking already starts to come in. And that's the mood that we've seen, I think, over the last couple of trading days, Alex.
Yeah, absolutely. We're joined by Pankaj Pandey this afternoon. Pankaj, thanks as always for taking the time, and pleasure having you. I love the background, a lot of green on the screen there at least. So maybe you're stealing some of the green from our screen. But having said that, I do want to ask you about HDFC Bank, if you can weigh in, right? Because this is something a lot of people are trying to figure out. Of course, that class action lawsuit coming through is not the best news. But what will it take for this bank to move out of the consolidation that it's faced so far?
Yeah, hi, good afternoon, Alex. Thanks for having me. I think, HDFC Bank has been a significant underperformer for quite some time. And I think till the time leadership issue does not get solved, I don't think we are going to see a reversal of this trend. I think number-wise also, if you look at last quarter, they witnessed one of the highest compression in NIMs. And then I think the leadership challenges still sort of continue. So till the time we don't have clarity, this is one of the few stocks which is going to continuously drag Nifty on the lower side.
Okay, what about the other private sector banks that you can speak of? What is the tone? Because we're seeing Kotak, for example, that is doing pretty well. It's a couple of days on the trot that there is significant buying interest and volumes are robust. Is this a sign that it will finally break out the funk?
So compared to, say, when you sort of look at HDFC is one of the cheapest of the lot from a valuation perspective. But yes, we know the reasons why it is not doing so well. I think for Kotak also, the challenge on the leadership side is not so great. Overall sense is that someone from within the bank will sort of take the charge. And last quarter, when you sort of notice, they did not witness any kind of a compression in margin. So I think relatively it's on a better footing, and same is the case with Axis Bank. So I think it is HDFC particularly which is showing that weakness. Otherwise, we would want to believe that private sector banks from here on should do well, because what we have clearly seen since mid of June that the FPIs have turned positive. And the biggest inflow can obviously come to these private sector banks. So which is where we feel that compared to PSU, probably private banks can sort of do well. But I think HDFC Bank still needs some more confidence, especially from the leadership side, to perform.
Okay, so Kotak, HDFC Bank, in fact, as we were talking about HDFC Bank, which is already facing a US class action lawsuit over allegations of disguising interest payments to MSRDC as marketing expenses. Nimit is here with more details. Nimit, good afternoon. If you could help us understand, what are you picking up and what is the kind of implication?
HDFC Bank faces a US class action lawsuit as investor Jwalant Soneji has sued HDFC Bank, its CEO Shashidhar Jagdishan and CFO Srinivasan Vaidyanathan in an action that seeks to create a class action and seeks compensatory damages for an underlying transaction and deposit arrangement that it says was allegedly a bribery scheme that HDFC did with Maharashtra Road Transport Agency, MSRDC. Now, the implications of this class action firstly are that first it needs to achieve class status. A US judge will determine whether this complaint suffices the criteria and the requirements to become a class action. Once it becomes a class action, more investors and more people that say that they were damaged by this misrepresentation and this arrangement can then join this, and then it can become a very serious issue for HDFC Bank. Will then have to then go to a jury trial and then plead its innocence there. But before that, a little bit about the underlying transaction. What the complaint says is that there was a 45 crore transaction that MSRDC did with HDFC Bank. HDFC Bank disguised this as a road safety campaign transaction, and also the fact that they hid this from investors and said that financial controls were there. In fact, they paid interest at a higher rate than what was the normal standard rate to MSRDC. Now, it specifically said that HDFC CEO Shashidhar Jagdishan allegedly participated in discussions and verbally approved the payment arrangements. Important to also note that what this caused is investor loss. Now, the investor loss has been quantified in terms of a percentage drop here. It says that Chairman Atanu Chakrabarti's March resignation was the first alleged warning, and the share plunged, the ADS in fact plunged 7.28% after his resignation. And then after the Indian Express report that first revealed this in May, the ADS plunged another 4.1%, and for this they seek class action status, compensatory damages and a jury trial from HDFC Bank.
Got it, Nimit. Thanks so much for that. All right, so that's the context that you needed to know about why the stock is under pressure in trade today. It's down close to 2%, and for a heavyweight that accounts for a large chunk of the benchmark, you know why then the benchmark is under pressure. But our stock of the day is actually a stock that has been buzzing since this morning. It's not something that usually ranks in the top, so it was interesting to find out why it's buzzing. This is Bombay Burma Trading Company. It's up as much as 13%, and this is after the Supreme Court has given it a relief, with the court removing the liability reference from its earlier order. What is this order about, and what does this relief do for the company? Varsha is joining in to tell you all of that. Varsha, not really a stock that ranks often in the stock of the day category, but it's buzzing today. Why is that?
Yes, absolutely. Before we go to the reason, first let's see some of the technical aspects. If you see, the stock is trading at 5-month high, biggest surge since Jan 25, volumes over 500 times of its 30-day average. Now let's see what's the reason behind this buzz. One is, of course, the Supreme Court relief. So Supreme Court has recalled earlier 4,655 crore lease rent observation, and a big potential liability overhang has been removed for now, and this is a positive development for the company, and hence if you see, the stock is up almost 13% in trade. Now, what was the issue? In a very simple language, I would say, Tamil Nadu government sought Singampatti estate-linked lease rentals, and the SC's May 2026 order mentioned of rupees 4,655 crore amount yet to be recovered from the company. This raised fears amongst investors, considering a massive liability for the company, but company says that it never received any formal demand notice, and hence Supreme Court agreed to it and said that the company was not given a hearing on the claim, and hence court says that the liability was not finally determined. And now why this matters, if you say, the Tamil Nadu lease rent claim has raised liability concerns, and 4,655 crore figure had sparked investor worries. But now that overhang has been removed, and hence we are seeing stock is up almost 13%. But this is not a full closure, I would say. Underlying dispute, if you see, still continues. Tamil Nadu can pursue claims through due process. Only the 4,655 crore observation has been set aside, and hence you're seeing stock is up almost 13 to 14%, a positive development when it comes to Bombay Burma.
So that's Bombay Burma Trading Company. Thank you so much for that. In fact, let's also get in Rajesh Palvia from Axis Securities. Rajesh, before I take your call on expiry day in terms of Nifty 50 and Bank Nifty, a quick technical view on Bombay Burma Trading Company, which is seeing a strong surge in today's session.
Yeah, hi, good afternoon. So very strong, buying action, especially in today's session for Bombay Burma. And looking at the long-term structure, stock was in correction mode, and stock was making low top, lower bottom formation. So still, despite these kind of spike, still stock is now negotiating with its 200-day moving average, which is at around 1630, 1640 zone. If stock able to close above 1640 and hold around those level for next couple of days, then I think we may see some more follow-up buying action, which can take stock further higher to 1700, 1730 kind of zone. But still, those who have bought at lower level, our advice would be to exit around 1730, 40 if it comes in the near-term basis. Though stock has already moved up, one should trail now stop loss around 1565 if you are already on the long side of trade.
Okay, while we're on the subject, what is your view on the benchmark? And the fact is that it's been listless. The range is very narrow once again today. And we've seen a little bit of a pop day before yesterday on account of the gas. Yesterday, the same amount on the downside, right? So it's definitely not easy to predict. What are the charts indicating to you?
For this new series itself, call writers are looking confident at 24,300 to 24,500 strikes, and we are seeing that most of the writing activity has been attracted on these strikes. So 24,300 is likely to act as a steep resistance for near-term perspective at least. On the support side, now support is looking at around 24,000 as well as 24,100. That's the next level where Nifty could try to find some support in the near-term perspective. So till these range are intact, I think we may see some range-bound activity. Only 24,100 to 24,300 could be a very tight range for next couple of days. Either side breakout or breakdown will decide the major direction. But Bank Nifty is trying to hold its strength, as Bank Nifty is comfortably trading about 57,500, and I think if it's able to sustain above these level for next couple of days, I think we may see a Bank Nifty may attempt to give breakout of the major call concentration area of 58,000. That's the challenging level for Bank Nifty also. But if it crosses those level, I think we may see a good amount of rally to unfold in banking stocks, as a lot of accumulation and buying interest we have observed in private sector bank in last couple of days, as well as PSU banking basket is also attracted some buying interest. So Bank Nifty one can look to buy in minor decline. Keep your stop loss around 57,350 to buy any minor decline.
Okay, and what about individual stocks that you're liking at this moment?
So at this moment, two stock idea both on the buy side. First one is Kalyan Jeweler. If we analyze the structure for Kalyan Jeweler on the daily chart, stock managed to give breakout of contracting triangle. And looking at the weekly chart also, almost stock has already registered of last 3-week consolidation range. So we believe that if it's able to hold now 625 level, furthermore upside towards 650, 660 we may see in the Kalyan Jeweler. So on the downside, one should keep a stop loss around 620, upside target 650 to 660. Another stock where we are bullish at this juncture is APL Apollo Tubes. We have observed stock is holding the strength across all time frame, and looking at the near-term, short-term structure, this is the fourth consecutive week where stock is making higher high-low formation. though there is some profit taking from the day's high, but still for short to medium term perspective, stock is still holding the strength. So we believe that till a stock is trading about 2150, one should remain on the long side of trade. Possible upside towards 2240, even 2260.
With regards to where APL Apollo goes. In fact, moving on, you have Bharti Airtel also, which is in focus, and this is because Singtel at the Investor Day actually came out and said that they plan to equalize shareholding with Sunil Bharti Mittal in Bharti Airtel. Soumit Sarkar is with us to tell us more in terms of what this would actually mean as well before he gets us the herd of the street. Soumit, good afternoon. What does this, actually mean for a Bharti Airtel when Singtel is coming out and saying that they'll plan to equalize the shareholding with Sunil Bharti Mittal in Bharti Airtel and the impact?
Well, basically this obviously means that they will look to pare down their stake. Currently, directly and indirectly, they hold closer on 26.8% stake when it comes to Singtel holding stake in Bharti Airtel, while the Mittal family owns around 23.2 odd percent. So there could be a stake sale of around 3.6% that could come in from Singtel's side. Now this is pretty much fairly known, but again the timing of the same is not known. But given the fact that in their investor day they have mentioned that they will be equalizing their stake, which means that there could be at least one tranche that could happen at least in the next couple of months, given the fact that Singtel ends their calendar year in 2026 and post that they will announce a dividend. So in the next couple of months we can expect a block deal coming in from Singtel side. So that is what this clearly indicates. Apart from that, all the other information is pretty much known that there's a share price, the stake difference is around 3.6% and their aim is to equalize the stake. But making the statement at this point of time highlights the fact that there could be a stake sale in the next couple of months, given the fact that they end their financial year in December 2026.
Right, all right, so there could be some pressure with supply coming into the market for Bharti Airtel. Stock is off the high point of the day, certainly, and trading at the low point, in fact, down about 1%. But Soumit, what else is on your radar on account of the chatter that you heard in the dealing rooms in Herd on the Street? What are you picking up?
Well, a host of stocks. Firstly, it's HCC. That stock has been gaining for the last couple of trading sessions. Now, there are strong buy flows on the large HNI desk and dealers are expecting some positive news flow here. Some potential M&A could be on cards related to HCC. So, keep an eye out for this counter. For Cipla, there are buy flows on institutional desk. Dealers do not expect any negative outcome to come in from the recent US FDA inspection that was conducted. So no negative outcome is the reason why we are continuously seeing buy flows coming in for Cipla. For Cyient, the stock has been on a tear for the last couple of trading sessions, but the buzz on the street is that there could be some positive news flow, some form of transaction that could happen here, which could lead to some cash inflow into the company. So keep an eye out for Cyient. It's up for the third consecutive trading session. For Data Patterns and GE Vernova TNT, there's a buzz of a potential order win to come in both the counters. For Apollo Tyres, a big block deal took place in trade today. Now, the dealers are indicating that Warburg Pincus was a likely seller here in trade. So, the bulk and block deal data would be important to track in this case. For Karnataka Bank, there is a buzz of the new CEO announcement to come in very soon. So, keep an eye out for this counter as well. And lastly, when it comes to IGL, there are buy flows on the DI desk at lower levels. Delivery volumes could be on the higher side. So, keep an eye out for IGL as well.
Interesting names there, Soumit. Thank you so much for that. In fact, Pankaj, let me come to you with regards to Bharti Airtel. The story that Soumit actually got for us from Singtel Investor Day, what does that really mean in terms of Bharti Airtel? And two, now tariffs is something which would probably become a concern even if Bharti Airtel has gone ahead and taken a price. There is a separate theory playing out when it comes to Jio as well. What would you do with a Bharti Airtel?
So I think our sense is that telecom essentially is going to be a two-player market, and Bharti Airtel has got better financial metrics. And so this is one of our topic in this overall large cap space. I think company did through about somewhere about 15 to 16,000 crore of free cash flow last quarter and likely to sort of sustain. And any kind of a network slicing and other, it's potentially going to sort of benefit this company. And I think the overall sense is that even Jio might look to sort of increase the prices going forward. So that way, I think telecom structurally looks to be a safe space for any investors to sort of look into. And Bharti Airtel will like the company despite the fact that there is going to be a stake sale, which is a known fact.
With regards to Bharti Airtel, now I just want to address a couple of flashes which were at the bottom of your screen some time ago, and this is with regards to US, which is considering tariffs when it comes to semiconductor chips, as well as they're also looking at laptops. So they're considering expanding the tariffs to servers as well. Tariffs in terms of laptops is something that will be considered. I'm not sure which companies really have a direct impact, but let's just pull up a Dixon Technologies on the screens, because if you talk about Dixon, they manufacture laptops, notebooks, TV, telecom products as well.
But do they sell to the US?
I think there is, they don't sell right now, but there was a potential where they were looking at the US market. So that could be one. There is a direct semiconductor angle that comes in for a Keynes Technologies for that matter. So probably that could be one of the counters that you should be watching out for. And you have a Syrma SGS. It exports electronic assemblies and components. So probably you could see some bit of an impact coming in there as well. Not 100% sure. And Avalon Technologies along with a Cyient DLM. So these are few of the names that one should be watching out for. 100% no. Not sure if they do have an impact, but these could be potentials. In fact, see, all of them are seeing that mild correction, Alex, from Cyient DLM as well, from the day's highest levels, is seen a dip downwards. Dixon has not. Pull up Avalon Technologies once again, because a large share of Avalon Technologies revenues comes in from North America as well, and that is also seeing a mild correction from the day's highest levels as we speak. Again, just pull up a Syrma and the Keynes Technologies. Because Dixon seems to be completely unaffected. But the other two, Syrma also a mild downtick from the day's highs, and a Keynes Technologies also no major reaction coming in there. So potentials that you should be looking at, and probably no one better than Pankaj who could give us a response on this. Pankaj, according to you, with the US considering tariffs in terms of where servers are concerned, laptops are concerned, and semiconductor chips go, who do you think could be the potential companies that could get impacted if something like this actually comes through? Because this is just a story that's coming in from Bloomberg.
So I think he needs to check. But say, for example, if I look at the case of Dixon, out of nearly 49,000 crore kind of a top line last year, I think the IT hardware business was somewhere about 1,400 odd crore, so hardly any in terms of numbers. And that too, whether this segment is getting all this revenue from exports also is a sort of a challenge. So I don't think this is going to have much of an impact. Obviously, you need to sort of see it in more detail, but even I'm slightly puzzled to sort of understand the purpose of it also.
But having said that, if you don't take this into account, Pankaj, what's the current call on the EMS space in some of these names?
So we like the entire space. I think, see, one structural challenge was that if the PLI benefits were to sort of expire, what will happen next? Because all these companies, say companies like Dixon, are making margins of 4 to 5 odd %. Now with the new scheme coming up and till 2031, we would want to believe that the entire space is back in action. And I think overall, more than anything else, the import substitution or the import, the kind of import which we are going to potentially do for semiconductors or even for mobiles can be larger than the oil. So I think given the fact that this is one of the focus areas of the government, I think we would want to believe that the government policy actions are going to be supportive of the growth of this sector. The electronic component itself, overall growth, CAGR expectation is 30 odd % for the next 4-5 years. So we like this entire space, and whatever policy related doubts were there, I think after PM's speech, I think most of the things are sort of addressed.
All right, and news in the M&A space coming through, and Nuvama is finding a lot of takers at this moment. That's heating up, and that's according to sources that have spoken to Nisha Poddar. And banks have apparently entered the fray. she has this report.
That's right. It's a large transaction in the financial services space, and sources do tell NDTV Profit that Nuvama Steel is really hotting up at this point, where bids are expected by the end of this particular week itself. Where remember, PAG, its single largest shareholder with 54% stake, is looking at an exit. Its worth of its stake is close to about 18,000 crore rupees. Now, what we have gathered from sources with direct knowledge is that some of the large banks like Axis Bank, Federal Bank, as well as HSBC are the ones who have also shown interest. Most of the banks we hear are interested in the custodial services business of the company. Now, giving context to this particular bit, remember the custodial services business really forms a bulk of Nuvama's business, and the other smaller part is the wealth business. It is a lucrative part of the business and can be attractive for the banks. We know about the custodial services business of Nuvama also in the context of Jane Street. It is its biggest, one of the biggest clients, and Jane Street had hit regulatory hurdle here in India. So therefore, in this particular transaction, whoever is looking at buying at Nuvama or even the custodial services business will probably need market regulator SEBI's comfort. So that's one important bit to be watched out for. On the other hand, many private equity players, and that has already been reported, CVC, EQT, General Atlantic are some of the ones which have already been in talks for this particular transaction. So two things to be watched out for. First, the custodial services business, whether that will be bifurcated if only large banks are really allowed to buy that out, whether those banks will be interested in the wealth business, and whether private equity players can bid for the entire chunk of both the businesses combined are some of those structures to be watched out for going forward. The bids are expected by the end of this week, and a lot needs to be seen in this large transaction. We reached out to all the participants named in the story. We did not get comment from most of them.
Got it. All right. So that's the word on Nuvama. Pankaj, I want to ask you not necessarily about Nuvama, but a few capital market plays and really the impact of the cash, and whether that's something that you've been considering if you're talking about, say, the exchange BSE, or you're talking about an Angel One. The fact is that volumes have taken a little bit of a knock. Is this something that you're going to have to contend with, in your opinion, through FY27, or does it resolve itself?
So I don't have a very concrete view on CS, but see, between non-lenders, we clearly like the AMC as a space, and I think overall the likes of say HDFC AMC or Nippon Asset Management Company. So these are the names what we like. Within exchanges, I think with gold or precious metals coming in favor, I think MCX looks a lot more interesting to us, despite the fact that the stock has sort of done well. Otherwise, we don't have coverage on most of on broking houses.
Okay, so that's with regards to a few of the broking houses that you're looking at. Rajesh, your view in terms of charts, because if you have to look at exchanges, MCX, BSE, a very good run is what we've seen. Potential of a profit booking coming in there, and likewise, if you have to look at brokerages as well, are you seeing further value at current levels?
I think from that space, it's a mixed kind of behavior we are seeing in brokerage as well as in the exchange related stocks. Motilal Oswal is looking quite interesting, and here we have already witnessed some breakout. And looking at the strength on the near-term, short-term setup, we believe that this stock can extend gain towards 1100 to 1120 also. So this stock is looking promising on a near-term, short-term chart. Nuvama is also, since last couple of days, it's stuck in, tight range, and stock is now negotiating with its 50-day moving average supply area, which is placed at around 1800 zone. Any breakout above 1800 can take its stock further higher, but on the downside, the crucial support area is placed at around 1730, 40. If it's break, then we may see some profit taking to initiate here. But I think overall, this capital market related stocks theme is still holding the ground at long-term charts. So I think those who have a little longer horizon, or they can hold for 6 to 12 month kind of time frame, so they can buy and accumulate in the decline, this is the opportunity to buy and accumulate. Again, Angel One is also corrected, and I think some buying action has been there at lower levels. So here one can also deploy some long trade for positional perspective with stop loss of 280 85 zone, and on the higher side, once stock able to take out about 320, we could see good run up towards 350 360 zone.
Okay, so that's with regards to where an Angel One goes. But stay with us, gentlemen. We'll quickly slip into a short break. On the other side, we'll get to the top buy today and sell tomorrow picks as well, just on NDTV Profit. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना। स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook,
Welcome back. You're watching India Market Close. It is now time to look at an interesting story that has come through from the National Company Law Tribunal. It has approved Subhash Chandra's repayment plan despite claims exceeding 22,000 crore rupees, and the settlement number is very small. Creditors set to recover just about 0.03% of the admitted dues. Nimit has more in this report. Nimit?
Now, an NCLT court, in fact, a special bench here because a third member had to be called, has decided that Subhash Chandra's personal insolvency plan to pay out a 22,007 crore claim is approved, and he only has to pay out 6.5 crores. That's right, that's just 0.03% of the total admitted claim amount. To put this into context, one of the larger creditors here is LIC Housing Finance. Now, LIC Housing Finance had a total claim of 1,322 crores. What has been approved as per this plan is a payout of 38 lakhs. Again, 99.97% haircut from the original claim amount. Now, how this happened is that a committee of creditors sat a couple of years ago and decided, and by 80% majority voted in favor of this resolution plan. Now, the dissenting creditors, which include Axis Bank, which include LIC, also Canara Bank, HDFC Bank and RBL Bank, they say that this amount is too low. They also challenge on the ground that the assenting creditors were actually related parties of Subhash Chandra. They also say that Subhash Chandra's personal wealth has to be looked into. They say that a 2018 certificates puts Chandra's net worth at 40,562 crores versus about 31.79 crores disclosed now. The judge looked into these considerations and said that these objections were to be noted, but the judge said that he cannot replace his judicial wisdom with commercial wisdom that the committee of creditors have provided in this case, and went ahead to approve the 6.5 crore payout for the 20,000 plus crore claim, and in this case that personal insolvency payout has been approved by the NCLT now.
Sure. Thanks, Nimit, for that. Two interesting stories that you've bought for us today, HDFC Bank as well as Z Entertainment. Pankaj, any view when you talk about Z Entertainment? Because, I mean, you're talking about a repayment plan, claims 22,000 odd crores and a major haircut coming in there. What would that actually mean for the company according to you? Any impact?
Don't cover the stock, but we are very selective on media and entertainment space. So what we like is Affle India. I think the entire ecosystem is shifting towards digital advertising. And this company is expected to sort of deliver 20% kind of a top line and about 25% kind of a bottom line. And if I have to name one or two more, PBR, I think, has cut down their debt, and overall, our sense is that with the content pipeline expected to sort of become better. So that looks good, and Saregama also looks interesting to us because I think with overall monetization expected to sort of pick up, given the fact that players like Amazon Music are looking to sort of monetize going forward. So subscription revenues can go up and it will benefit the entire industry, including Saregama, which has about, I think, 30% kind of a market share of the overall music subscription space.
So subscription business is what Pankaj is betting on. Thank you for that. Nagraj Sethi from HDFC Securities also joins in. Nagraj, welcome to the show. Always a pleasure to speak to you. In terms of Nifty 50, if you're closing below that 24,200 mark, what would it actually take us to in terms of levels to watch and your topics at this hour?
Hi, good afternoon. Yes, market has been in a choppy trend. Despite after moving sharply on the from the lower levels a few days back, market has failed to sustain the gains. I think now nearing to the supports again around somewhere around 24,000 levels. I'm expecting one more upside bounce from the lower levels from near 24,000. The currently chart pattern is not that great, and range bound action is likely. And some broader markets are moving up. Some selective stocks are moving up. I have two stocks from the for the long side. First one is Reddington. Chartically, Reddington has been in a consolidation phase in the last couple of sessions. The overall chart pattern medium term is looking very strong. Higher tops and bottoms on the chart is indicating that strength of upside momentum. Currently trading around 359.50, 360. One can place one can look to buy at this point of time. One can for the immediate target of around 380, and one can place a stop loss at 350. Second is Unominda. Unominda has been in a consolidation phase over the last couple of weeks. Looks like forming a bullish black tap pattern on the weekly chart, placed at the edge of breakout, and currently trading around 1275. One can look to buy at CMP. The immediate target would be around 1350 levels. One can place a stop loss at 1240.
Okay, all right. So that's the word on the stocks that Nagaraj is liking right now. But let's head across now to Varsha, because it's time for our special segment, Bull versus Bear. And the contender here is Lupin. Apparently, it is at a crossroads. The bulls see pipeline-led growth, and the bears see pressure on profitability, specifically coming from the US. Varsha is joining in to tell you which argument is stronger. Varsha?
Well, a very good player when it comes to bull versus bear for Lupin, because everyone is betting on US pipeline, but on the other hand, they do have some kind of headwinds when it comes to the US. Now, first is that Lupin is evolving from generic company to respiratory player, and yesterday's Calideco patent win is a victory where is a victory and is a strategic milestone that the company has received. But the existing US profit drivers are peaking now. Replacement pipeline remains uncertain for the company. Now, talking about the patent win, so the patent litigation for Calideco is a key win for the company. 20 to 30 $1 million of sales is the opportunity size that the company is expecting, and even 180 days exclusivity is also a highlighting factor. But the US profit pool, if I were to talk about, is dependent on a single product which contributes almost 35% of US sales. Competition has started and could see the profit fading away. But onto the bull side, the Calideco wins has led to an opportunity of $12 billion US, and so this is an ecosystem where company will be entering into, and a huge upside is expected. But Citi, if you see, is expecting US sales to decline because of exclusivity phase. Now, Lupin is known for exclusivity, but if that fades away, your US pipeline will shrink or your US revenue will shrink, and that's the headwind. Lupin already has 50 first to file applications, 21 are exclusive opportunities, so that's a interesting point and bull case that we have. But the promising drugs, the major promising drugs are not yet filed, and the timelines are uncertain when it comes to the promising drugs or where the investor might be interested in. Lastly, if I were to talk about analysts, so Bernstein has maintained outperform rating with target price of 2,707, upside potential of 24%. But Citi has downgraded to sell with target price of 2,050. So Citi is bearish when it comes to Lupin, but Bernstein is bullish considering the Calideco and the US pipeline that company has.
That's very interesting to watch out for. Thank you, Varsha, for putting this together for our viewers. In fact, let's get in Deven Choksi as well. And we already have Nagaraj. Deven, bhai, welcome to the show. Always a pleasure to speak to you. How are you looking at a Lupin? My colleague just bought us the bull versus bear case scenario. Would you still look at betting on a Lupin, or do you think there are much better plays in terms of the pharma pack as a whole?
Yeah, good afternoon. For sure, I think one is looking at, relatively different space. We continue to like the CDMO and the API space, and that's where probably our larger part of the focus also has been. Having said that, I think the specialty generic companies in form of the advantage that the Sun Pharma would probably have with this acquisition, we feel that it's a relatively, a good choice to go for. Along with the Dr. Reddy's particularly, I think the valuation-wise, Dr. Reddy and Cipla, they have also been, I think, attractive enough. So we prefer that as a better choice compared to the Lupin, at least at this point of time. Maybe some corrective downside in the stock price could be a better opportunity to once again reconsider that stock.
What about the charts though? And good afternoon, Devin Bhai. What about the charts, Nagaraj? How does it look, the pack as a whole? And since Devin Bhai has also spoken about a couple of other large pharmaceutical companies, why don't we throw that into the list as well?
Not that great, Alex. We have seen some significant declines from the high levels, and still the stock continues to slide down. Though placed at the lower levels, there is no sign of any bounce back or a recovery from the lows. More weakness is likely. 2100 is going to be the support for the Lupin. On the other hand, Sun Pharma looks slightly better compared to the Lupin, and it has bounced back from the lower levels. The chart pattern is quite impressive for the Sun Pharma compared to Lupin.
Regards to pharma pack. Now let's look at a Dabur, which has just come out with a statement with regards to the disruption that could have happened in terms of the Nepal operations on the back of the floods. What they've come out and said is that the Nepal arm operations have not been impacted by the floods so far. In fact, the arm is located in Kathmandu, Birganj, and the manufacturing plants of the arm are fully operational as of now. In fact, the operations of only 3 distributors of the Nepal arm may be impacted, and the overall impact, if any, in terms of Nepal floods will be negligible in terms of the business. That's what Dabur has indicated so far. However, if you see in terms of the stock price, that is at the day's lowest levels, and the consumption pack as a whole has been under pressure. Devin, let me come to you in terms of, one, consumption as a story today because there is weakness, and two, on the back of Nepal, a lot of your FMCG companies that could potentially see an impact, though Dabur has come up with a statement that they're not seeing a major impact right now. How are you looking at it?
Well, Hiral, I believe that I think the majority of them probably would have the ability to meet the situation. Let's put, I think, in one word, because sitting here and I think not knowing enough about, I think, how the operations are being impacted. But my viewpoint is, I think the overall such kind of disasters, I think, don't complete the entire story. I think the businesses are going to remain as usual, as I see it. We'll have to wait for some better clarity on the news front. Then probably I think analysis on respective company would be better. But as of now, we believe that I think FMCG operations shouldn't be getting unduly affected, at least at this point of time.
Okay, by the way, it's past that time when the last ticks have come through for the cash market, or rather for the F&O stocks in the cash market, I should say. And the Nifty 50 closed at 24,000, shouldn't say closed, but paused at 24,133, down 74 points or thereabouts. Quite a bit can take place, remember, during that cash window, which kickstarts at 320. And you have the Sensex that's paused at 77,183 or thereabouts. The Nifty Bank down about 0.4%, 57,569 or thereabouts. And a few of the stocks that stand out for the benchmark Nifty 50 and where things have stopped as of now, you have Kotak Mahindra Bank that's ruling the roost, up about 1.8%, followed by Adani Enterprises, Adani Ports, Tech Mahindra. ICICI Bank, strong gains, 1.2% or thereabouts. It's outweighing the losses that HDFC Bank is bringing to the table. That bank is down 1.75%, and selling is intensified for Hindalco, which is now about 3% lower. Let's see where those things settle. But for now, let's turn attention towards power grid equipment, or rather power equipment manufacturers, and the Trump administration tightening curbs on foreign equipment manufacturers, potentially creating export opportunities for Indian transformer and power equipment companies. This specifically has to do with the implications, I think, for Chinese manufacturers and the opportunities for India therein. Varsha is here to tell you more about that. Varsha, is that how it's going to work?
Yes, absolutely. Though they've not mentioned the Chinese equipments, but it's a positive one when it comes to Indian exporters, as US or rather Trump signs order restricting some foreign equipment in US energy grid. Now this order covers transformers, you have inverters, battery energy storage system, generators, turbines and grid control system. US Energy Department to frame implementation rules within 120 days. Now which are the Indian exporters or Indian companies in focus or company who will benefit? You have CG Power, wherein the export inflow, if you see, jumped almost 82% year on year in Q1, won almost 900 crore transformer supply order in 2026. You have GE Vernova, strong US exposure, US account of almost 46% of Q1 order intake and was expecting 1300 crore higher voltage US data center order. You have Hitachi Energy, again an export led play. Export contributed almost 25% of the Q1 revenue and 25 to 26% of the order backlog. Lastly, Transformer and Rectifier secured 150 crore US transformer export order, which is scheduled till mid 2027. So overall, these are all the companies which might benefit considering the Trump order.
Interesting beneficiaries coming in there. Nagaraj, on the charts, are you seeing any further interest? Because the valuations on all of these counters are extremely expensive, and I'll go to Deven on that. But are you seeing any potential upside there?
CG Power looks very good at the lower levels. I think it has broken out the smaller range. And overall chart pattern is also looking positive for the CG Power. I'm expecting more upside in this segment, at least for the near term.
Okay. Deven, by your view on all of these companies, because if you have to look at from a valuation perspective, yes, they're expensive, but how do they stack up versus the opportunity that lies ahead of them?
Well, very interesting. Frankly, I think these companies probably are enjoying one of the best times that they would ever had, I think, in the past. The kind of order books that they are demonstrating today and the inflow or the intake, I think, that they're demonstrating with every successive quarter passing by, both domestic as well as, I think, the other parts of the world in which they are exporting. I believe that I think these companies are showing distinctly high amount of visibility for execution in next 3 to 5 years' time. And given that kind of visibility, I think one would not like to remain any skeptical about, I think, the possibilities. However, you are right, absolutely. Valuations are rising in everything at this point of time. Maybe the market does give corrections on in between, and then that's a time when I think you get a 10-15% dip on the stock price. It's the time to add these stocks into the portfolio. In fact, I think all of them are looking pretty exciting from the prospects that they are holding at this point of time.
Even by speaking of buying on dips, all of the gold loan companies are seeing cuts today, whether it's a Muthoot or a Manappuram, they're down over 4%, 5% or thereabouts. I don't see any major trigger. So therefore, my assumption would be that it's on account of the way that the stocks have gained in the recent past. Do you think that it's a space that you should bet on? It's well discovered. And this is the one pocket of two, I think, that is really, really going fast in terms of credit growth. They also, it's well discovered. So should you get in at these levels?
So Alex, I think in contrast to gold loan companies, the jewelry companies probably, I think one should be seeing a major amount of traction ahead of festive season. On one side, I think most of the jewelry companies, given the possibility of a good festive season, I think are stocking it well. At the same time, I think the old gold and exchange with the new jewelry, that program is working pretty fine with some of the branded jewelry companies as I see it. And that's where probably I think the larger amount of actions are. So in my viewpoint, I think yes, I think the gold loan companies have had a good run. Probably they're taking breather at this point of time because everything seems to be in price for the time being. And that's where probably I think the preference is moving into the jewelry companies, including of Titan at this point of time. And we believe that I think that would be a good quarter. I think the October to December should be a very good quarter for most of the jewelry companies going forward.
Think back to before you had your first phone and you want to watch a movie. Where would you go? You would essentially go somewhere where the smell of popcorn and the experience of going out with your friends or your family was something that you held very close to your heart. that time is pretty far behind us right now, but PVR has got back its mojo seemingly with a lot of new releases. Let's go to NDTV Profit's very own star to find out what he's finding out with PVR and why it's in the spotlight again. Sharad?
Well, Bollywood is one of the favorite pastimes of India, and Alex, very interesting to talk about that.
Yeah, I think we might have a significant news break coming through. Let's cut across to Danish, who's in conversation with the ITC.
Triple bottom line reporting. So we measure performance on not only the economic results, but the creation of environmental capital and social capital. And this has been the DNA of ITC for a long period of time. And very happy to say that today we are the only company in the world to be carbon positive, water positive, solid waste recycling positive for 2 decades or more.
So we are also seeing that the regulator FSCCI and also in Maharashtra we are seeing that they're taking big steps. They're coming after FMCG companies regarding certain things. So how do you look at the overall steps taken by the regulator?
Well, you see, whatever regulations are there, I think is the responsibility of businesses to comply, and we are committed to that. And if there are any deviations, I think is the responsibility of regulator. It's I think his right to raise the issue. So that's fine. And as far as we are concerned, I think ITC is concerned, we are committed to following the law in letter and spirit, and we continue to do so.
So we're also seeing that the sugar prices have gone up. How will it impact your business, at the biscuit business especially? Would ITC reduce the number of, like the amount of sugar that you use, or any other contingency plan that you have?
So look, prices are to be looked at in totality in the basket of things that we buy. So when we look at the in its entirety, and we first look at how we can optimize through internal efficiencies, and if you're not able to completely manage that through internal efficiencies or absorb it, then the last resort for us is on pricing. So there's a multitude of actions we try and do. It's not a straightforward equation.
So very lastly, with the festive season just a few weeks away, what is the outlook in terms of the rural market and also for the hotels business?
Well, I think demand environment is good, and I think in the festivities it will only improve. And hotels also are doing well. There were transitory factors because of the geopolitics in between. There was some disturbance that caused, had some impact on the hotel business in certain geographies that were more indexed to international travel. But now it's back, and I think it's in a fairly good trajectory.
Thank you so much, sir.
Okay, so that's Sanjeev Puri talking to Danish. But more than this, what's interesting right now is the indicative close that we're picking up in terms of Sensex as well, taking the expiry moves into consideration. Let's pull up that one right now. A 290 points cut is what you're seeing just right now. But if you have to look at the indicative close, what I'm picking up from the BSE website right now is a 1 to 1.3% cut, a 858 points cut is what you're seeing in terms of BSE, and that's the indicative close. On BSE BankX also, the indicative close is almost 1.9% lower. So currently, if you're seeing a 300 points cut in terms of BSE BankX, your indicative close is indicating a 1350 points cut, which is 63,000 or 64,000 whereabouts. Extremely volatile right now. And I think I would want to get Sharad, though I'm not able to get the rates on the screens. Sharad on it. Sharad, this is very abnormal right now. 0.4% lower in terms of Sensex, which is a 290 points cut on an average right now that you're seeing. If you can just have Sensex, I'm not talking about Nifty Bank, if you can just have
Sensex
the Sensex
and BankX, yes.
Level there you go. Right, a 290 points cut. But if I'm looking at the indicative close on the BSE website, it's indicating almost a 900 points cut coming in there, which is a percent. And likewise for BSE BankX, a 300 points cut in terms of right now.
Hiral, the idea is that this is the first time we are having the monthly expiry in Sensex and BankX. Volatility is bound to be there, and that's what we are seeing. But there seems to be a little bit of pricing correction, what we are seeing from the website and what the movement is happening. Let's just pull out Nifty and Nifty Bank also. to show you. But remember, the larger volumes are still being played there itself, even if you compare the turnovers also. But a big dip is coming in. And look at the differences which is coming in. Now it is slowly coming in a range as well. But stock specific, let's have a look for both Nifty FNO gainers and the losers amongst the cash adjustments. What's happening here? If you could fire those stocks.
You still have some more time for those levels to come in. But the reason why we wanted to have this conversation is with regards to specifically Sensex as well as BSE BankX. In fact, Nagraj Sethi is still with us, if I'm not mistaken. Nagraj, any additions that you want to give your basis what you're seeing? A 290 points cut in the cash market, but if you have to look at the indicative close, that is showing you a major difference.
Yeah, that's what last two sessions we have seen some downtick in the CAS. Even if you look at the Nifty, around 40, 50 points downtick has come in the last 1 minute. And looks like the market breadth remains weak for the market. And I think some more decline is likely for the indices, at least for the short term.
Yeah, by the way, you're pointing out the Nifty 50 has in fact closed with cuts of about 117 points. Pull that up. And just before the cash session started, we were closed out at about 70 points lower. So the difference is actually about 40 points or thereabouts for the Nifty 50, not so much for the Bank Nifty, just about 59 points or thereabouts. The Sensex has come through now. So pull up the chart for the Sensex. It is not a downtick of as much as 1,300 points as the indicative close was opening. And I think, you know what, the other aspect is maybe that indicative close is getting influenced by the fact that there isn't as much volume in the Sensex as there might have been with the Nifty 50, even those volumes.
But it's double, 290 points versus a 620 points
it's closed, is what you're saying. 500 points or thereabouts lower, 539 points or thereabouts lower for the Sensex at this point. And about 0.7%. So there is a difference. Let's head across. And by the way, on that note, let me thank both Nagraj Shetty as well as Deven Choksi for joining us. I guess, gentlemen, it's going to take us as well as the market a little while to parse this data and to understand how this is functioning. And all we can do is watch it on a daily basis. Thanks so much for taking the time. Sharad, I'll come to you to find out what components of these indices have moved the most and what has really moved the needle.
Well, Alex, you are right. Sensex, seems to be a little bit of volume issues, and the rollovers are also not as high as Nifty. That's what is initially prima facie looking, and that is why there is a big variation coming in when it compared with Nifty as well as Sensex. But looking at the gainers itself, Apollo Hospitals, Tata Consumer and Nestle make it to the list where the action is happening. But let's look at the stocks where the dip might have been there. I'm assuming that there might be a banking name, but it's largely Grasim and Geo Financial Services. That's where the drag is coming in. And I'd just like to point out the action, 24,100 and 24,200 call put. That is where the open interest action is very high. If you could show that on the screen, then we can give you the entire clarity of how things are moving in the option segment. But I guess we will take some time for us. But yes, Sensex has given us a big surprise, Alex, I must say.
Yeah, okay. So we're going to try and pull that up, what you were just talking about. But in the meanwhile, let's close things out and take a look at things, right? So for the Nifty 50, you have cuts of about 0.5% or so, 117 points or thereabouts, holding above the 24,000 mark, having broken below 24,100. And we spoke about at the start of this show, where we spoke about the possibility that we've broken below 24,200, so the move lower is quite possible for the Sensex.
Likewise, Bank Nifty as well. Just look at that 57,500.
Pointing in opposite directions, but the Sensex down about 0.7%, and quite a bit of that crack coming through during the cash session as well. The Nifty Bank ending, as you were pointing out, with cuts of about 0.5%, and the market breadth not the best.
Instead of taking the Nifty 50 components, I want to look at the Sensex components in terms of today's session. If we have that, or even in terms of individual names. Okay, let's look at Nifty 50 components and see what's happened, because that will somewhere mirror what you're looking at as well. Let's just quickly get that heat map in terms of Nifty 50 on the screens, because your broader markets, again, pretty much where we were. But there you go. The reds have actually increased from where we started off, Alex. And look at a Hindalco, HDFC, M&M. I mean, the same names.
Yeah, they've not
in
moved.
terms, absolutely no major moves coming in there. They are stable, but the number in terms of the reds has increased. What's holding up is a Kotak. Adani Enterprises has moved up slightly. Ports has also moved up slightly on the upside. Tech Mahindra Supply, ICICI Bank pretty much as it is right now. So just look at the sectoral heat map, and then we look at the advanced decline ratio as well, or whereabouts. There you go, Alex. I mean, 1% on the PSU Bank Index.
Yeah, absolutely. Well, more or less where we started this show at. The pharma index is up about 0.8%, so to
Look at consumer durables. That's actually given up some bit of gains as well. It was up over 1%. Now you're ending with gains of around 0.7%.
Yeah, absolutely. So the long and short of it is we've had one full month of trading in the derivative space with cash, and it's been an eventful close today as well for the benchmark Sensex. Let's see how the next expiry pans out. In the meanwhile, it's a wrap on this edition of India Market Close from Hiral and myself and the team that put the show together. Thank you so much for watching. Stay tuned. This is NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to NDTV Profit. You're tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains nearly flat at $78,000 levels. SEC sends digital asset custody rule to White House. Shinhan Financial partners with Visa to test stablecoin issuance. And lastly, Bernstein forecasts Bitcoin hitting $150,000 by mid-27. You may have noticed some interesting developments coming out of the global banking sector recently. Now, with banks across the markets increasingly exploring blockchain and digital assets as adoption gathers pace. Now, take South Korea, where the banking giant Shinhan Financial has partnered with Visa to explore digital asset applications, while on the other hand, Japan is looking to put roughly $8 trillion worth of government bond market on the blockchain. In the US, 39 state banking associations are coming together to build a nationwide bank-run blockchain network. So much news, right? So the banks are also exploring digital cash and blockchain-based settlement systems. Now this shows that interest is going beyond individual digital assets to the underlying infrastructure of the financial markets. But the question is, so why are the banks moving in this direction? The major banks are increasingly exploring how digital assets can become a part of your traditional finance, which could actually bring greater legitimacy to the market, which is already raising the regulatory expectations and also increasing the competition for independent crypto projects. Now, for investors, this creates new use cases across institutions, business, and even retail markets, while bringing the digital assets closer to mainstream financial activity and giving a blockchain a larger role within the financial system. Now, at the same time, greater institutional participation will bring stricter governance and stronger compliance requirements, with investor protection remaining a key priority as banks and regulators become more involved in this space. Now, we have seen a similar progression with the asset classes such as direct equities and mutual funds, where institutional participation and financial infra helped build wider acceptance. Crypto is now seeing greater institutional support through regulatory development and growing ETF flows, of course, but some believe this could bring traditional finance and decentralized finance much closer, with investors potentially gaining access to tokenized real-world assets such as bond funds and real estate, through established financial institutions. For crypto investors, bank-led adoption points to a more mature market with broader institutional participation and new use cases, bringing tougher competition for independent crypto projects and a tighter regulatory oversight. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores. In FY27, do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that over the next few minutes is going to get you a snapshot, not just in terms of the trading day, but also news and updates from within the country and across the globe. First things first, let's take a look at the markets in terms of what they were up to, and the Lal Street ended the day on quite a weak note with both the benchmarks very close to the day's lowest points. So when you talk about Nifty, that looks closer to 24,000. And Sensex about a 500 odd point decline that you saw coming in. So selling pressure really decisively weighing on benchmarks. And most sectors ended in the red with PSU banks and metals leading the losses. Pharma and energy on the other hand held up quite better, showing some bit of resilience. And on the flip side, let's also talk about something like an HDFC Bank down about 1.5% at the day's lowest, at the day's close as well. And when you talk about the news coming in, the US class action lawsuit is what you're looking at over an alleged interest payment scheme involving MSRDC. The complaint also claims that the company also routed a payment through marketing expenses to secure large deposits from the Maharashtra Road Agency. Now, this particular lawsuit is naming HDFC's CEO, but also the CFO, alleging that senior officials approved this particular arrangement. Also alleges that the bank failed to disclose the matter to investors, while the accounting treatment may have distorted financial reporting. The plaintiff is seeking class action status, damages, and a jury trial. Let's move on and talk about transformer stocks that are in focus after US President Trump also signed an executive order restricting certain foreign-made equipment from the US electricity grid. The move is citing national security risks and targets what Washington sees as vulnerabilities from foreign power systems. The development is boosting Indian transformer makers, the likes of CG Power, GE Vernova, Hitachi Energy as well, some of those counters that were buzzing away in trade, as you can see on your screens as well. And the order is also reflecting a little bit of that growing US concern over Chinese tech, potentially creating more opportunities for alternative suppliers. Let's also move on and talk about Tata Power that faced quite a setback in Singapore, and that's something that you can see reflected in the stock price as well, as you can see on your screens. So the court really rejected its challenge to an arbitration award in favor of Kleros Capital. Kleros had alleged that Tata Power used its confidential information and excluded it from a project. The award also involves a principal damages of close to $490 million, and add to that annual interest accruing since November 2020. So that's the entire figure that you're looking at. Tata Power is saying that it's going to be appealing the decision within the next 28 days, keeping the legal dispute very much open. Let's also move on and talk about ICICI Prudential AMC shares that came under pressure after a large block deal involving around 2% of the company's equity. Promoter Prudential Corporation Holdings is reportedly the seller in this particular transaction. Stock fell nearly 5% in early trade as well. Towards the end of the closing session, about a 1% close coming in. Let's also move on and talk about Imagica World Entertainment shares hitting the upper circuit, and as you can see on your screens, about a 20% odd gain coming in, a fresh 52-week high at that, and extending their winning streak to 5 sessions as well. So the stock has really gained more than a quarter over the last 5 trading days, fueled by positive investor sentiment, and the rally is really coming in as the company expands its leisure and entertainment portfolio, including the upcoming Hello Park in Hyderabad as well, and it is also investing in Shanku's Water Park, adding to its growth plans, also boosting market confidence, as can be reflected on the screen. Let's also move on and get you some business news now. Meta's $18 billion settlement with nearly 50 US states is opening a new front when it comes to the global fight over social media and child safety. So the deal is going to be limiting how teenagers use Facebook and Instagram, including a default 2-hour daily limit for under 18-year-olds. And the move is also drawing attention, by the way, from governments worldwide. So that includes the likes of Australia, where an under 16 social media ban is facing weak enforcement. Studies are suggesting that around 80% of Australian minors still remain on social media despite some of those restrictions. When you talk about India and other Asian countries as well, they're also seeking tougher safeguards for children online. Let's move on and talk about Nvidia, that has delivered another strong quarter coming in, so beating Wall Street estimates really as demand for AI infrastructure continues to surge. And second quarter revenues jumped about 106% on a year-on-year basis to $96.2 billion, ahead of expectations. Adjusted earnings also came in above the forecast, and the data center revenue also hit $89 billion, topping estimates at $85.7 billion thereabout. And if these numbers have you rubbing your eyes, wondering if they're correct right now, talk about the guidance as well. $108 billion in the third quarter for the revenue is what they're also penciling in. And when you talk about the CEO's commentary, he's saying that AI infrastructure build-out is now at full steam, also expects the revenue to grow about 70% in the next quarter. Let's also move on and talk about some international news. Nepal is racing to rescue survivors after a massive flash flood swept through the Rasuwa district near the Tibet border, and more than 160 people unfortunately have been killed, while over 400 are still missing, including more than 140 Indians, while that figure could be much higher as well. And that's something the foreign minister of Nepal has also indicated. The flood has also surged through the Bote Koshi River, washing away villages, vehicles and infrastructure alike. The Nepal army has deployed helicopters and disaster response teams for rescue and operations. Police and armed forces are also working across the worst hit areas as the search operations continue, and our thoughts and prayers go out to those in Nepal. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Hello and welcome to NDTV Profit, and now we are joined in by Carl Ruthman, the CEO of Sanlam Investments, and that happens to be South Africa's largest asset manager player. Good afternoon, sir. It's always a pleasure to have you with us. Wanted to understand how this logic or this strategic play comes with Shriram Group. I'm sure you have exposure in insurance as well as asset management. So how does this move going ahead?
So thank you very much for having me on the show. So Sanlam invested into Shriram Finance more than 20 years ago. And for us, that was a very successful relationship. The business grew together with us as a shareholder in there. And obviously that gave us the opportunity to understand the Indian market significantly better. And on the back of that relationship, we wanted to increase our penetration in the Indian market, the Indian economy, in life insurance, general insurance, then specifically the area that I'm involved in asset and wealth management. So going forward, India is a large economy, it's a growing economy. We understand emerging markets. We're one of the largest asset managers in South Africa. So we think there's a lot of potential for us to partner with Shriram and build a strong business in India.
And Carl, looking at the current stake, what you have in the setup, going ahead, will you be increasing the stake, or what is it plan here?
So in the wealth management and asset management space, we into Shriram Capital Markets. Our strategy is to remain with our existing shareholding. So Shriram is a very important partner for us. We do think we need their penetration, their brand, their distribution reach, together with our investment expertise to build the business. So we wouldn't at the interim look to increase our shareholding, rather work with them. But what we would do is we continue to invest capital. So as we need to grow these businesses and as these businesses need more capital, we would continue to increase our capital in our investment in the businesses together with Shriram.
Carl, we know about the insurance. A lot of MNCs are interested in India's insurance, as RDI has increased almost 100% ownership. But I want to understand regarding the wealth management space. There's a splurge of wealth coming in India. How do you see this?
So it's quite interesting. So India, if you sit outside of India, so India is one of the fastest growing economies in the world. India is your savings, for development of financial systems, number of people that are saving and starting investing is incredible successful. So obviously with a growing economy, with the population growth, with sophistication, you are going to see more and more wealth managers playing in India. But we think with Sanlam, with our expertise, the fact that we that we do have lots of clients that invest offshore, our expertise in terms of putting products together, portfolio construction, I think we'll be quite competitive. We will help Shriram Wealth with that business. But I think you probably will see many more wealth managers coming in. I think you're going to have a very big domestic market, then you're going to have an offshore market, and I think there's going to be various wealth managers that play to various strengths depending on what their background
Right,
is.
so there has been a rise of family offices, UHNIs in this segment, and the demand is there from the wealth industry as well. It's just not, the usual products in debt or equity, maybe more products, globally, which is available, or exposure in new geographies. So how do you cater to these demands?
So the first thing is that when as individuals become more affluent and high net worth individuals, I think the first important thing is what does your structures look like? So what are your investment vehicles? Where do you generate money in India, in the Indian economy? How do you take money out of India? What structures do you take it into? What does your family affairs look like? So I think how you go about is that most people in emerging markets are looking for more diversification. So India specifically, you've got such a strong growing market in India. You've had great stock exchange growth except for the last 2 to 3 years. So I think the discussion in India would be more how do you complement offshore allocations and offshore assets with what you already have in India and get a little bit more diversification. So for most individuals, it's all about diversification. Different products, developed markets versus emerging markets, and also different geographies.
But just to summarize our conversation, with Shriram Group, already we know wealth management, insurance, you have a tie-up. Are you looking at any other vertical also? Because there is a lot of, global exchange of ideas and ownership happening with this group. Anything else here?
No, for currently, in terms of our shareholding, we're very comfortable here, but our big focus is to actually bring that international expertise and bring that international research, type of quality of conversations, quality of product, to bring that to our Shriram partners, to complement a very strong local offering with a very, very good international offering. So that's pretty much what we would like to do, and then make sure that these businesses grow into strong market share that actually becomes relevant in the Indian market, and for us as a South African company, becomes a very strong growing business within the Indian market.
Carl, I just want to take your views on how do you view the Indian wealth managers compared to the global wealth manager as well. Is it everything right, or is there something missing?
I think Indian wealth managers have got a very good focus on the Indian market. I think the Indian market, the investment horizon is a little bit shorter. So I think because you're such a vibrant economy, people are looking for very quick returns and very high, and you're used to very high returns. So I think the wealth managers in India is very much focused on a short term and high returns. Globally, wealth management takes a little bit of a longer term view. So it's a little bit more about diversification. It's a little bit more about certainty of income and taking volatility out, where the local market, a lot of volatility, high return. So that's the difference basically between the two. But I do think as the Indian market develops and people get more used to, hopefully, I think the two worlds become closer together.
And speaking of which, Indian markets haven't performed that well when you have developed economies or even emerging markets this year as well. Interestingly, somebody shared with me that India with world is at its worst levels. Just wanted to understand in the emerging markets right now, do you think India has turned reasonable?
So in emerging markets, India remains one of the strongest economies. So what's happened with India is, as I said, because your P in India is roughly about 20. Other emerging markets like China is 9 PE, South Africa is like a 8.9 PE. So your PE, so it's quite an expensive market, but with your huge growth in India, I think if energy prices come down, if oil comes a little bit down, we see India as one of the fastest growing economies. So I think you've got huge growth. If the valuations come down a little bit, I think you can still expect very, very strong returns.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
A massive flash flood in Nepal has killed at least 160 people, with over 142 Indians among those reported missing. The Bhote Koshi River surged suddenly, washing away villages and project sites. The Nepal Army has deployed helicopters and rescue teams as relief operations continue. D Street ends on a weak note, with the Nifty 50 closing near 24,000. The Sensex slips 500 points as selling pressure weighs on benchmarks. Commerce Minister Piyush Goyal speaks exclusively to NDTV Profit, saying Japan has reiterated its interest in India with a focus on quality investments and a 10 trillion yen investment target over 5 years. The NCLT approves Z founder Subhash Chandra's repayment plan, with creditors set to recover just 0.03% of admitted claims worth over 22,000 crores. HDFC Bank under pressure after a US class action lawsuit over allegations that it disguised interest payments to MSRDC as marketing expenses comes through. The complaint names the bank the senior executives alleging regulatory and disclosure violations. Sources say that the government is exploring a possible IRCTC bomber lorry merger, a move that could help IRCTC expand its presence in the air ticketing business. Apple has confirmed its September 9 launch event, and this one marks a major turning point. It will be the first event under incoming CEO John Ternus, with the iPhone 18 Pro lineup expected to take center stage. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Nimit Dikshit. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Now first, let's look at the markets. D Street ends on a weak note, with the Nifty 50 closing near 24,000. The Sensex also slipped 500 points as selling pressure weighs on the benchmarks. My colleague Jasmeet, who does this every day, joins us for the update from the market today. Jasmeet, what do you have for us?
Well, Nimit, thank you for that. As rightly said, we are seeing a weak day for markets today. Like, markets have been down for a second consecutive day in a row. Talking about the cash part of the overall market, we do note that the Nifty saw downtick about 42 points during the cash session, while the overall Nifty Bank nearly tumbled 60 points. In terms of the overall market, while Nifty 50 ends in red and closes 0.5% down. the market did start on a positive foot, but by the end of the day, the Nifty lost nearly 0.5%. In terms of top losers, we have stocks like Hindalco and HDFC both losing about 2.2% in today's trade. If we look at the broader market, while even those end in red, but those outperformed the benchmark. While Nifty Midcap 150 ends in red, but it snaps its 5 days of gaining streak, and today it's down about 0.1%. In terms of the top losers in Nifty Midcap 150, we have stocks like Container Corp and ICICI Prudential AMC, both losing about 4%. While you look at the Nifty Small Cap 250, while even that ends in red, in terms of the top losing stocks in Small Cap 250, we have stocks like Ramco Cement and Manappuram Finance, both losing the most, about 5%. If you look at the key sectoral trend in today's day, majority of the sectors are closed in red. We are seeing more red than green in today's market, barring Nifty Pharma. In terms of the top gaining sector, we have Nifty Pharma gaining about 0.8%, and in terms of the top gaining stock in Nifty Pharma, we have stocks like Wockhardt and Zydus Life gaining over 3%. If you look at the top losing sector, we have Nifty PSU Bank, which lost nearly 1% in today's trade. And in terms of top losing stocks in Nifty PSU, we have stocks like UCO and Union Bank both losing about 2%. While if you look at the key trends, while Nifty Pharma gains for the third session in a row, while Nifty Auto, Nifty FMCG, Nifty IT decline for the second session in a row. While lastly, Nifty Financial Services and Nifty Financial Bank snaps its 2 days of gaining streak and end in red in today's trade.
Thanks, Jasmeet. Yeah, so the market broadly in red there. Nifty Pharma is one of the winners, and Nifty PSU is, of course, one of the losers in the red there. Moving on from the markets, the NCLT has approved Z. Subhash Chandra's repayment plan in an insolvency proceeding, despite claims exceeding 22,000 crores of rupees with creditors. Now, what this story is that Subhash Chandra is simply going to pay 6.5 crores for claims worth 22,006 crores. This is just a 0.03% payment of the total claim amount. This is a personal insolvency claim. Now, this was a special bench. There was a third member. Usually, it's a two-member bench. A third member, Nilesh Sharma, broke the deadlock between the two members here. One of the key the creditors here was LIC Housing Finance. Now, LIC Housing Finance called the plan as unviable, and so many others did as well, including HDFC and Axis, because they said that the whole project gave a very minor buyout to the final creditors, and Subhash Chandra could pay only a very small amount at the end of it. They also said that you need to look into Subhash Chandra's actual accounts, because it's come down from 2018, where it was about 40,000 odd crore, to very few double-digit crores now when it's currently shown. So his net worth has dropped, and that needs to be looked into. The NCLT said that all this is fair and the objections were noted, but they said that the wisdom of the committee of creditors is sacrosanct in insolvency proceedings, and then the wisdom of that security creditors, they have said 80% have approved this plan. Then the plan was then approved by the NCLT. We'll wait and see if there's an appeal in this case. Now, moving from there to HDFC Bank. HDFC Bank under pressure as it faces a US class action lawsuit over allegations of disguising interest payments to MSRDC. Now, we all know about this transaction. This is something that's been in the news for 2-3 months now. Let's not go into it's an alleged transaction now. We've not dealt with it, and we've spoken about it enough. Let's talk about what this lawsuit particularly says. This lawsuit is filed by a US investor of HDFC Bank who says that, in his allegation says that the bank did not properly disclose this transaction with MSRDC and only called it a marketing expense rather than disclosing it correctly. And they said that when Atanu Chakravarti resigned, the stock, the HDFC ADS in the US fell about 7%, and then fell another 4% when the Indian Express report came out in May. This loss of stock caused investor loss, and this investor loss was directly attributable to the non-disclosure or misleading disclosure as alleged in the lawsuit. Now remember, this is not a class action in itself. This is a lawsuit asking to be made a class action. Once this class action, once a judge hears the complaint, they will decide whether this is a class action or not, and if it is given class action status, in that case, then a jury will listen to this case. So that's on HDFC. Now let's move on from HDFC. We've done those two Ang chats because those were my stories earlier, but we'll move on to my colleague Nisha, who's talking about Novoma. Now the race to buy Novama is heating up. Sources suggest that banks have also entered the fray. Nisha Podar gets the exclusive details.
That's right, it's a large transaction in the financial services space, and sources do tell NDTV Profit that Novama Steel is really hotting up at this point, where bids are expected by the end of this particular week itself. Where remember, PAG, its single largest shareholder with 54% stake, is looking at an exit. Its worth of its stake is close to about 18,000 crore rupees. Now, what we have gathered from sources with direct knowledge is that some of the large banks like Axis Bank, Federal Bank, as well as HSBC are the ones who have also shown interest. Most of the banks we hear are interested in the custodial services business of the company. Now, giving context to this particular bit, remember the custodial services business really forms a bulk of Novama's business, and the other smaller part is the wealth business. It is a lucrative part of the business and can be attractive for the banks. We know about the custodial services business of Novama also in the context of Jane Street. It is its biggest, one of the biggest clients, and Jane Street had hit regulatory hurdle here in India. So therefore, in this particular transaction, whoever is looking at buying at Novama or even the custodial services business will probably need market regulator SEBI's comfort. So that's one important bit to be watched out for. On the other hand, many private equity players, and that has already been reported, CVC, EQT, General Atlantic are some of the ones which have already been in talks for this particular transaction. So two things to be watched out for. First, the custodial services business, whether that will be bifurcated if only large banks are really allowed to buy that out, whether those banks will be interested in the wealth business, and whether private equity players can bid for the entire chunk of both the businesses combined are some of those structures to be watched out for going forward. The bids are expected by the end of this week, and a lot needs to be seen in this large transaction. We reached out to all the participants named in the story. We did not get comment from most of them.
And that was an exclusive from Nisha. Thank you. And we'll watch out for those bids that could come later in the week. Thank you for that, Nisha. Moving on to an IPO that could be coming up by a Singapore-held company called Sembcorp Green Infra in the renewable sector. Now, Sembcorp Green Infra, which is finally held by Temasek, has filed its draft papers with SEBI for a 3,750 crore IPO, marking the renewable energy company's second attempt at the listing. Now, remember, it tried in 2018 as well, and then for various reasons that didn't come through. So now they're trying again. The company is the India Renewables arm of Temasek-backed Sembcorp Industries. The IPO will entirely be a fresh issue with no offer for sale. Sembcorp Green may also consider a pre-IPO placement as per its DRHP of up to 750 crores. Now, of the proceeds, how this money is going to be used is that 3,000 crores, which is a large chunk and a majority chunk of this proceeds, will be used to repay part of the company's debt. Now let's finish with that IPO and let's move to Rishabh, who's again in Japan. He's been in Japan covering Piyush Goyal's trip on day 3 now, and on the sidelines of his Japan visit, Commerce Minister Piyush Goyal spoke exclusively to NDTV Profit, highlighting Japan's renewed interest in investing in India. Goyal said the two countries aim to achieve the 10 trillion investment target over the next 5 years itself. Let's listen into the snippet of this exclusive conversation that Rishabh has had with Minister Goyal.
Talk to us about, sir, we have the $70 billion target, private investment target, $10 billion already in. What will it take? What's the timeline that we can expect for the rest to be completed?
When there was the India-Japan summit last year in 2025, Japan, on the back of the success story of the first tranche of 5 trillion yen, which Japan had invested in less than 5 or 6 years in India, had expressed the desire to invest 10 trillion yen, which is about 70 billion US dollars, in India over the next decade. I'm happy to report to you that they have reiterated their interest. JBIC, the Japan Bank for International Cooperation, is at the core of managing this investment and encouraging both public and private sector to invest in India. Already in the first 10 months, nearly 10 billion US dollars have come in, largely from the private sector, clearly demonstrating that even this second tranche, the 10 trillion yen, may not take 10 years, but may come in about 5.5 years.
Very interesting, sir. One matter of concern that has been highlighted by both sides is the trade deficit between both the countries, and that is something that we're looking to bridge as well. What are some policy tweaks that we're looking at from the Japanese side as well, in terms of maybe lighter import regulations that we're expecting from them, or higher quality standards from our side? What are we exactly looking at?
I think our focus will be on better and higher quality in India. Because no country will change their regulations for another country. They are the same in Japan and apply to the world, just like our BIS regulations apply in India and all over the world. Our food regulations apply in India and all over the world for foodstuffs to be sold in India. I believe with the greater interest that Japanese industry is showing to come and invest in India and manufacture in India, we will be able to upgrade our own mindset towards quality, thinking towards quality. More and more companies are now producing world-class products which will meet Japanese standards also, and will naturally give us an opportunity to expand exports. At the same time, there are certain products where Japan has supremacy and which we'll continue to need in large quantity because of our own growing aspirations in high-tech sector, semiconductors, shipbuilding and the like. And I think we would like to expand this relationship bilaterally, both in investments, which will create huge jobs in India, through trade bilaterally, both import and export, through the greater number of people who can come and work in Japan, which also adds to economic prosperity in India. They have asked us to train 300,000 Indian personnel, technical, management, caregivers, nurses, whom they will train in Japan or in India and give jobs in Japan. So there is a vast array of potential with this country.
Thank you so much.
Thank you.
Thanks for getting us that, Rishabh. And one very important point that Minister Goyal made there was about achieving and striving and imagining quality. I think that's key there, and a key takeaway between what we can get from Japan and for the rest of the world as well. Now, that were two exclusives for you in a row, but we're not done just yet. On to another exclusive. Sources say that the government is exploring a possible IRCTC bomber lorry merger. Now, my colleague Shrimi gets us this story for you. Shrimi, what are you gathering from your sources?
Absolutely an interesting development on the PSU restructuring front. The government is exploring the possibility of merging IRCTC with Balmer Lorry, a Category 1 Mini Ratna PSU under the Petroleum Ministry. Now, sources tells that the proposal being discussed between Railways, Oil and Finance Ministry recently on the feasibility of merger between these two entities. Now, why Balmer? What we also learning that one, it's a historic PSU with businesses across manufacturing and services. While it has strong presence in areas, especially in oil packaging, but it also handles air tickets booking for almost all PSU, which making it an important part of its business and almost contribute around 25% of revenue. Now, from IRCTC perspective, this could be significant because the railway PSU has been looking to expand and strengthen its air ticketing businesses, and hence it has made a proposal recently which is now under examination. What we also learning that the concerned ministry is looking into whether Balmer can be better capitalized and allowed to focus more sharply on its core businesses, or merger could be a better option. So at this stage, this is more of an examination and, checking the feasibility rather than a final decision is what indication so far we are getting. But the bigger picture also is that government appears to be looking at whether combining complementary PSU businesses can create greater scale up the business and help these companies utilize their assets in a better way. And you will see that coming in a lot of other sectors, especially railways, in the coming days.
Thanks, Shrini, for that. And as you said, we could see that in a lot of other sectors, an important cue there, and I'm sure we'll watch out for that as well. Staying with the government here for a bit. Now, India is stepping up its push for hydrogen-powered mobility, with Road Transport Minister Nitin Gadkari calling for more research to make hydrogen cost-effective. Addressing a CII event, Nitin Gadkari says more hydrogen filling stations are needed and 10 routes have been identified across different regions. Let's hear what Mr. Gadkari had to say.
So what first large-scale hydrogen truck trial we have started. Budgetary allocation for trials rupees 500 crores. Sanctioned trials by 5 consortiums on 10 routes and 27 vehicles. Tata Motors, Ashok Leyland, Volvo, Anart, BPCL, IOCL, HPCL, NTPC, Reliance have participated. 9 hydrogen filling stations will be set up. The technical specification finalized by my ministry, and filling stations, compression, storage and transportation are important areas. Now what is the problem? The transport of hydrogen is a problem. It is a dark area where we need more research, more development, and we have to make it cost effective.
Moving on from the road minister to the education minister, another CII event in fact, private school fees remain a growing concern for parents, with many questioning the steep charges levied by schools. We asked Education Minister Prahlad Joshi about the issue, and he said school education, although primarily is a state responsibility and states including Maharashtra are of course taking steps on the matter, he added that fee concerns are regularly discussed in education meetings with appropriate action being taken. This is what the minister had to say, and this is the newly appointed education minister.
प्राइमरी और जो स्कूल एजुकेशन है वो स्टेट गवर्नमेंट में आता है. स्टेट गवर्नमेंट अलग-अलग स्टेट गवर्नमेंट इंक्लूडिंग महाराष्ट्र स्टेट गवर्नमेंट प्रयास कर रहे हैं, और इसके बारे में हमने स्टेट को भी, जब भी एजुकेशन मिनिस्टर्स का मीटिंग, सेक्रेटरी का मीटिंग होता है, इसके बारे में जो भी उचित कार्यवाही है उधर के संबंधित पे काम करने के लिए लगातार ये प्रोसेस है, ये प्रोसेस काम चलता रहता है.
Well, that was on education and the price of private education. But moving now to Nepal, where a sudden and massive flash flood has devastated the Rasua district near the China border. Meanwhile, the NDRF says there is no adverse impact in Bihar and Uttar Pradesh so far, but a close vigil is being maintained with 20 teams deployed across both states. For the latest on the ground, let's go across to Sitka Dio. Sitka, what do you have for us?
The army rescue teams are getting prepared. The brief is being given to them. You can see the water arrangements, the water bottles are being sent. There are stretchers, there's medical help which has been arranged, and one helicopter has just taken off. The other chopper is just getting ready, and this rescue mission will continue the whole day through, because we hear that there are many people who are stuck in the upper reaches in those villages where help hasn't reached since yesterday. So the priority right now for the Nepal government and the Nepal army is to reach to those victims who have been waiting for some kind of help and also rescue. We saw that yesterday was a big challenge because of the heavy rains around this area. Today the weather is a little better. It would be easier for this rescue team to reach to the upper mountains where those people are still stuck and actually get a sense of what's happened in the upper reaches of the mountains yesterday.
Thanks for that, Sitka, and keep doing the good work that you're doing there. According to the Ministry of External Affairs, though, the death toll from Nepal's devastating floods has risen to 270, while 288 Indian nationals remain unaccounted for. Among them, 73 are working at the Trishuli 1 power project. 21 Indians from Tamil Nadu travelling for the Kailash Mansarovar Yatra have been rescued. Also, External Affairs Minister S. Jaishankar has held a high-level meeting to assess the situation. Let's listen in to the latest from the Ministry of External Affairs.
As per information currently available, there are 288 Indian nationals who remain uncontactable. These include 73 Indian nationals who are working on Trishuli 1 power project. Our embassy in Kathmandu is in touch with the project head to get more details. Two separate groups of 37 and 49 nationals from Tamil Nadu, Indian nationals from Tamil Nadu, who travelled for Kailash Mansarovar Yatra through Samrat and Fly Everest Travels. These are two separate travel agents. There are a group of 32 nationals from Indian nationals from West Bengal who travelled with the help of Samrat Travels in Timure, which is in Rasua district where this particular disaster has happened. Then a group of 61 Indian nationals from different states who travelled through Richa tours, and then a group of 33 Indian nationals from Kerala.
Well, that's from the MEA on the Nepal issue. Moving on, earlier today and earlier in this show itself, one of my stories we discussed was about Subhash Chandra, who's got his claim, who has to pay out only 0.03% of the creditor claim. Now, one of those creditors was HDFC Bank. And remember, as I said earlier, HDFC was a dissenting creditor. Now, HDFC in a statement has said that the total admitted claim in this entire personal insolvency was only 3.2% of the total stated amount. Now, the bank said it inherited this facility previously provided by HDFC Limited. Now, of course, HDFC Bank was one of the 19% of creditors that opposed the settlement. Remember, it was passed by 80% and they had by majority approved the resolution which was now upheld. The bank, very importantly, is exploring filing an appeal at the NCLAT to this order. And well, that's all the time we have here for us on Profit 360. We took you across the country. We of course gave you the latest on Nepal and a lot of exclusives, including that key one with Piyush Goyal that Rishabh has done from Tokyo. Remember to watch that on our YouTube channel as well. And of course, stay tuned to NDTV Profit for more news and updates.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement.
To Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Arunesh Chawla, the DPAM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, interesting mid caps, and also the stocks for your profit. But let's understand which company we are getting today. It's an interesting one. Try to guess it. It's a Bengaluru-based rural financial platform, or to say, of course, an NBFC MFI company as well. Earlier, the company has rebranded itself. Stock is up 25% from March lows, and they're targeting 50,000 crore AUM by the end of calendar year 2028. Also, one more hint, the group lending contribution is roughly 79 to 80% of the total AUM. So let's understand which company we are talking about. And yes, there is a flavor of rural, there is a flavor of Grameen, and the company is in that business. So the company's name is Credit Access Grameen. But why are we calling this company? What are the key reasons for it? Is there that microfinance stress, or is that over now? Erratic monsoon coming in, any impact expected in the second quarter, especially on the borrowers? Will it impact the books? Next question is the company outlook for FY27. What are the key parameters which one should be tracking? Also, the credit cost normalization, will that continue in the second quarter or not? Another important question we'll ask the management is the loan portfolio growth guidance. Is it strong or is there any hiccup? Disbursements growth, will this be slower or has it bottomed out as well? So there are a lot of moving factors when we judge a company like this, and the NIM guidance and the margin profile also. We'll also give you the ROAs and the ROEs and the return ratios so that you can judge the company on yourself as well, and the scale up of the retail portfolio. What engine is moving the company and where's the strategy like? So these are the key questions we'll be asking Credit Access Grameen. But let's understand the business first, what it means, and do not worry, this is an easy sector to track, and I'll explain you all the important parameters as well. Just stay put with me. It's a rural focused inclusive financial platform. It's from Bengaluru. Also, let's look at the key reasons about the company. This provides services to low middle income households, and the product profile, this includes group business, housing, two-wheeler loans. It's like an entire suite, to be honest. They're present across 457 districts in 16 states, roughly 2,300 branches as well. But before you track an NBFC company or a housing finance company or a rural financing platform, whatever name you like, this is something which is very much important. GNPAs, lower the better. NNPAs, the story is the same. It's called net interest NPA as well. Net interest income we spoke about. Return ratios is important as well. They should be higher, the better. NIMs, very much important to track for any company in the BFSI space. GL is group lending, and RF means retail finance. So these are the short forms, so do not worry while we talk and have this conversation. Q1 performance was good. AUM grew between 16% up on a year-on-year basis, topping that 30,000 crore mark. And the disbursements, that increased by only 12%, around 6,107 crore rupees. Also, let's look at the other key parameters. Healthy new borrower addition was there, almost 2.5 lakh, 35% were new to credit. And the credit cost, interestingly, that declined also. So that is a good feature for the Q1 numbers. But going ahead, how the AUM mix lies. This is the group lending GL. Another one is RF, which is 21%. Group lending still has the highest segment. Company is trying to focus to increase this statement from the retail side as well. So that is where the movement is happening, and it's much better to have that product profile as well. Now, what are the FY27 targets? 20 to 25% AUM growth is coming in. NIMs will be there between that 12.8 to 13.2%. Also, they're sustaining a 20% plus medium term AUM CAGR. And if you look at it, the credit costs are at 3 to 4%, and ROE stands at roughly 16 to 20%. Also, the FY27 targets, the 50,000 crore AUM is not for FY25 but for calendar year 28. So these are the numbers, you should be marking it down. But let's wonder, what are the key factors which is working for Credit Access Grameen? Strong Q1 numbers, operational update was good, especially the asset quality and the ROA numbers. FIs are slowly increasing stake in the company. We'll try to understand that. Valuations are cheaper than their 5-year average levels. Remember, FY25 was a painful year for the entire microfinance sector. Analysts remain bullish. Also, apart from this, there is a strong distribution plans and growth as well. So it looks pretty interesting right now for where Credit Access Grameen stands. But things which may not work for the company, macro disruption risk, that is not in anybody's hand. Retail loans are also having over leverages the product profile in which they operate. Weaknesses in rural income, especially the concern on erratic monsoon. We need to see, it's a developing story. Liquidity risk from bank, especially it becomes a raw material for them. And lastly, the risk of rising credit costs. Is there any hike coming in from RBI? What happens then? What's the transmission like? So a lot of moving factors, and this is the entire picture for Credit Access Grameen. But let's understand the KYC ratings for Credit Access Grameen, and especially I would like to tweak the ratings whenever we judge an NBFC company. So do not worry, balance sheet cash flows won't be here, but we'll have some other parameters. This includes the operational parameter, asset liquidity or the asset quality, and the return ratios as well. Of course, we'll have the usual ones, the shareholding, street cred and valuations. We'll try to compare over the last 5 years what has happened, what were the peak levels, what are the average levels, and the analyst take, are they bullish on this counter or not. But all these details will come one by one chronologically. First one, income statement. Largely 3 year CAGR has been pretty strong if we talk about net interest income and the operational profit, but the profit levels has not been very strong. It's been a very mixed set of numbers coming in. Let's just see how the numbers have panned out for the Q1 also. YOY basis, there is a good move happening. Remember, some adjustments are also at play here. So the numbers are pretty decent in Q1, and I had mentioned you that the base was also on the lower side. So net, it's a neutral rating when we are having a look at the income statement. But let's try to understand the operational parameters also, what stands here. There is yields, there is borrowing costs, there is spreads. So FY25 was a good year, but a little bit of normalization coming in FY26 as well. FY25 was a weaker year because of the microfinance stress, and now the company is improving. The spreads and NIMs have also started going up as well. And if you look at it, the AUM and disbursement, that has done well as well. Almost 26,000 odd crore rupees. That has come to almost 30,000 crore. In Q1, that number has shot up as well. So overall, the operational parameters look strong. So we spoke about the income statement, we spoke about operational parameters, but let's try to understand what the asset quality is all about, what's happening here. GNPA numbers, you must be wondering why this is so big. There has been accelerated write-offs during this period, the credit costs were up and the entire sector was in a stress. And that stress, the number came, but now it's coming down. That is why, just to keep things in a balanced manner, I'm going to give this a neutral rating. Apart from gross NPAs, we talk about return on assets, and that has been, on the slightly on the lower side, and a mixed kind of, returns profile is coming in, a little bit of pressure, but overall the momentum is getting strong and it's likely to come back to its normalized numbers, especially for FY27. So that's our view coming in when it comes to the return ratios. Also, apart from return ratios, the usual ones, the FIs are slowly adding up their stake. It was around 11% in March 25. That has seen a slight move, almost 2% acquisition coming in, and over here also we're seeing some buys happening. So the interest amongst FIs seems very strong. So I've given a thumbs up for this. But apart from the shareholding, let's look at the street cred, how much money the stock has actually made if you are the shareholder of Credit Access Grameen. From March lows, a good trade maybe, positionally 25% up returns has come in. This year itself, from the tops it's down 12%, but it's a even Stevens returns, last 5 years of 115%, has not been a big multi-bagger, but yes, the stock has doubled, and slightly that's what is required for a stable counter. For a stable counter, I'm going to give this a stable view as well, but the valuations are cheap. Currently, it's trading at almost a 12-month forward price to book of just 2.2 times, and you compare that with the 5-year average, it is still cheaper. That average is 2.6 times, and that peak which was there when there was the euphoria in the industry and there are a lot of cycles to it, it was at 3.7 times. So the valuations are very much attractive. So I'm going to give this a thumbs up as well. Let's talk about lastly the analyst take. Almost 18 analysts are tracking this counter. 12-month target price giving a good 20 to 30% return potential, and all the analysts except one has a buy rating. 95% of the analysts are very bullish in this counter. Because of that, I'm also going to give this a very strong thumbs up as well. But let's do the revision of the KYC ratings for Credit Access Grameen. Where does the company stand? Yes, there is some improvement happening over the last 2 quarters in the numbers, but FY25 was painful for them. And now we are seeing the up move, especially in the operational parameters. We need more time to see what these numbers pan out. But let's move on and understand what's happening here. Shareholding and street cred, largely the FIs have started buying, and that is why I have given this a strong thumbs up, and the valuations are way cheaper when you compare to the long-term averages, and the analyst take, the community is very bullish. So net, let me give you the total picture for Credit Access Grameen. It comes to 6 out of it. It's largely on the higher side of the average numbers we speak about. But our conversation continues with the management. We'll be joined in by Ganesh Narayanan, the MD and CEO of Credit Access Grameen. He has almost 3 decades of experience in the BFSI industry. He did join the company in 2020 as the Chief Business Officer, and interestingly, he held leadership position roles in ICICI Bank, SMFG as well as Yes Bank. Now we are joined in by Ganesh Narayanan. He is the MD and CEO at Credit Access Grameen. Good afternoon, Ganesh sir. It's always a pleasure to have you with us at NDTV Profit. And a lot of industry changes are also happening. But yes, for the last 2 quarters, there is a good turnaround or bottoming out from the stress which the industry was going in FY25. But sir, it seems like some stress again back because of erratic monsoon. Any kind of impact we can expect on the borrowers? How is the industry looking like right now?
Very good morning, Sharath. Thank you for having me on this show. With respect to the developing implications on El Nino,
right?
Predominantly, microfinance sector does not lend to large farmers, right? So most of our customers would be households with multiple income streams. Generally, since we operate in rural, a typical household will look like 1 or 2 acres of agricultural land, and they'll also have some amount of ancillary income. So each household has at least 2 or 3 income streams. Current situation is that I think the El Nino situation is kind of improved from the earlier assumptions. The shortfall is assumed to be around 10 to 12% point of time. Historically, we've seen many El Nino situations. It has not impacted us meaningfully in any form. However, this is something that we are watching closely, and we don't see this impacting us significantly. All historical El Nino situations, the segment, especially microfinance customers, have been extremely resilient. They switch to crops which are less time consuming or less water absorbing crops, number one. Number two, generally they produce for own consumption or for their livestock. And in case of such situations of high drought or lower shortfall, even government schemes kick in to support these customers. Customers have also seen they move into construction labor temporarily in case agri labor is not available. Broadly, they've been resilient on all historical scenarios. This year, like I said, we are watching the situation very closely. However, we don't see any major impact to our profitability numbers or credit cost guidance because of the current El Nino situation.
Right. And speaking of that, Ganesh, the guidance for the industry as well as for your company for FY27, how does it, go ahead? Is there any chance of an upgrade, or you'll just keep, your guidance as it is?
See, I think guidance right now, with respect to growth, we've given a growth target of 20 to 25%. I think we'll be range bound with that. With respect to credit cost, we've given a guidance of 3 to 4%. Currently, we are little lower than the lower end of the credit cost we've given, right? But we've only done Q1. We'll have to watch for a few more quarters, and we also have 2 situations which are currently developing, including our West Asia crisis as well as the El Nino situation. And we believe that we should be at this point of time at the lower end of the credit cost guidance that we've given. But growth, I think we will be able to publish the growth range that we've indicated to the markets.
So the growth number stays as it is, but I just wanted to understand a little bit more. Are there any trends which can suggest this credit cost is normalizing in second quarter? Because I think we are halfway through here.
Yeah. See, currently the credit cost is holding really good within our expected range, right? And like I said, today, El Nino is a developing situation. If at all there is an impact on credit cost, our current pricing has enough cushion to absorb if there is an incremental credit cost that comes in, and hence profitability does not seem to be impacted this year because of elevated credit costs, if at all it happens. But both Q1 and Q2, the collection trends have been very strong, and it is slightly below our expected range at this point of time. In the sense, the credit cost is slightly below the expected budgeted numbers for this year. And we hope it will remain in that range that we've indicated.
Fair enough. The loan portfolio growth guidance also. Which segments do you think more green shoots are coming right now?
Right. So this is a very interesting phenomenon which you highlighted earlier also, that from a pure play microfinance institution, we are now transitioning towards a diversified financial services platform in the financial inclusion space. So this is clubbed with both our research, our visibility on household credit, as well as the regulatory room that has been created over a period of time, which allows us to do 40% non-microfinance loans. So what we expect in the near term is that we'll continue to grow microfinance. We lead in today at least 5 states out of the 16 states we operate from a portfolio perspective. So microfinance will continue to grow on a gross level at around 16 to 18%. But since we are also accelerating our retail finance growth, every year we believe around 6 to 8% of our customers will graduate into retail finance, because of which you will see that the microfinance growth rate is in the range of around 10 to 12%. But overall, as a company, we will grow 20% plus, higher growth coming from retail finance because of the graduation of customers into retail finance. So this is how we are transitioning.
But sir, I want to know a little bit more details about it. How will you be scaling up your retail portfolio? What's the strategy here?
Right. See, broadly, our approach has been to follow our customer, right? So far in our history, because of regulatory restrictions, we were not allowed to do too much of non-microfinance. Now, like I said, because the regulation allows 60-40, what is happening is that we are seeing that over a period of time, microfinance customers, good profile customers, move up to retail finance and start borrowing individual finance. So our current thought process is to minimize our customers from moving away from us into somebody else as long as possible. So going forward, we will acquire customers in microfinance and carefully handpick certain profile of customers who have the ability to graduate to retail finance through an unsecured business loan, and beyond a certain ticket size, they will move into secured business loans. So once their business needs are met and they start earning more, there is also an aspiration for these customers towards other things like home, vehicle, etc. These are also something that we are currently working on today. So the growth story going forward will be from two engines. One is microfinance, one is retail, but predominantly focused on our own customers who come into microfinance with little or no credit history, and we're graduating and going out to other NBFCs. Going forward, you will see a large portion of our graduating customers stay with us longer. So that will kick in a lot of efficiencies in how the company operates.
So basically in a platform, the product life cycle or the customer life cycle, as and when their progression happens in life, there is some more offerings to it. Is that clear, right?
Yes.
And
yes.
also,
so that is how it will be. It will
right.
be. Yeah, sorry.
And sir,
that's how it will be. It will give you two advantages.
Sure.
Sorry, 1 minute. So it will give us two advantages. One is that you're retaining your customers longer, and second, your lifetime value of the customer significantly goes up because the retail finance products are of a very different ticket size compared to the microfinance loans.
Fair enough. And what will be the disbursements growth guidance? Will it be on the slower side or has that bottomed out now?
No, so the disbursement should be strong. So last year we did around 24,000 and odd crores of disbursement. I think this year we will close the year with roughly around 28,000 crores plus of disbursement. So disbursement growth will be strong.
And sir, the final question, what's the NIM guidance and the margin profile looking like going forward?
Right. So we've given a NIM guidance of 12.8 to 13.2. Currently we are at around 14.4%. The NIM is slightly high now because we exited the last quarter with a higher credit cost. And as the credit cost continues to hold good over a period of time, we will start passing back the benefit to the customers. And hence the NIM should moderate anywhere between 12.8 to 13.2% as we guided. Right. So that is where we are. So the NIMs are quite strong. We have the ability to reprice for anything that moves, including cost of funds as well as credit cost. And with this NIM range, our returns will be well protected in the range that we've guided. So we will be on. See, in the last 10 years, we've given a cross-cycle ROE of around 3.5%. And we are currently working towards moving this to an average of around 4%, both with the diversification strategy as well as diversification in the liability mix also. So we've been able to hold our cost of borrowing quite strong, one of the lowest in the industry. Our OPEX is quite under control, and you're also increasing different type of products to our customers. So all the engines are performing in the direction that we want to perform.
Yes.
See a strong, consistent.
Fair enough. Ganesh sir, we are running slightly out of time, but we had a great conversation with you. And of course, we wish you best of luck for the future for your company, and hopefully more positive news comes for the industry as well. It's always a pleasure to talk with you. So that's the management of credit Axis Grameen I would like to talk about. And yes, the stress in the industry is not fully over yet, but the company is showing green shoots. We saw that in Q1, and the guidance portion also, largely the growth numbers are strong. Little bit of stress in the credit cost, but it's just one quarter. We need to wait and watch how things pan out, and the valuations are also slightly on the cheaper side as well. So interesting story, right? For all these stories, just for your profit, stay tuned to KYC and keep watching NDTV Profit.
Chawla, the DPOM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement. हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been a while since we spoke about multi-asset funds. This is a category, as you know, in the hybrid mutual fund space, and it invests in multiple asset classes. That includes equity, fixed income usually, and also commodities in the form of gold and potentially also silver. Now, the reason I want to talk about this now is that gold has seen quite the rally in the recent past, that is over the last couple of weeks or so. And that has to do with certain things that are changing in the global markets also. Specifically, the dollar has lost a little bit of value, and that's pushed gold prices higher. We'll talk about how multi-asset funds have been behaving, because actually in the run-up to today, a lot of people had reduced, a lot of fund managers had reduced their allocation to gold. Has that allocation gone up? And what should you bear in mind when you're deciding to invest in this category? I've got Prableen Bajpai, the founder and managing partner at FinFix Research and Analytics, joining in today. Prableen, thanks so much for taking the time. It's been a while. What do you make of the multi-asset fund category? Because it's grown pretty large and a lot of people have been funneling money into it.
Absolutely, Alex. I think great category to be in the last 2 years. We've seen a rise in the AUM. It now stands at roughly 2 lakh crores. Last year, it was about 1.35 lakh crores. So it's quite a substantial jump in the AUM. If you look at the number of schemes which are there in this category, there's roughly 36 schemes. And interestingly, 24 out of them actually have a lifespan of less than 3 years. So a lot of newer launches which were there. Only 6 schemes are there which have a track record of more than 7 years. 8 schemes are 5 years old, and only 12 schemes are there which have clocked the 3-year period. So overall, I think a category which has seen a lot of movement, a lot of interest, and a lot of launches, definitely. And also, I think one of the best categories to have been invested in during this rough time period, which we've seen in the Indian markets, because the last 23, 24 months has been particularly, I think, a very stretched period, which Indian investors were not used to. We've been used to quick sharp falls and quick recoveries, which hasn't happened, Alex. So great category, definitely overall to hold in the portfolio.
Yeah, but the thing is, Prableen, that as we've mentioned in the past, and I think we should run through it very quickly, fund managers in the space take a pretty different reading of how to manage this multi-asset category, right? Some choose to include REITs and InvITs, some choose to have only gold, some fund managers, and I think that is ICICI Pru, it chooses to have derivatives in the commodity category as opposed to buying ETFs. So how do you understand how this category is managed?
Definitely, there is a lot of variation in how the schemes are managed, Alex, across different fund houses. Everybody has their own style. But what the mandate suggests is that we need to be invested in at least 3 different asset classes at all times with a 10% allocation. So that's usually equity, 10% debt, fixed income, and of course commodities, which primarily has been gold, and of course lately silver also has been added. Other than that, we do see foreign equity as well as REITs and InvITs, which has been included, and a lot of fund houses which actually do the gold and silver do the derivatives in gold and silver as well, Alex, to manage and hedge. Some of the fund houses do take allocations to hedged equity also, that is the arbitrage. Some of them keep it as pure equity play, which is the unhedged equity. And even the taxation variation is there, depending on whether they are maintaining the 35% in domestic equity or going up to 65. The taxation also varies. Of course, beyond 2 years, it's similar, 12.5% taxation. But if you're holding 65% equity, then it becomes eligible for equity after 1 year, otherwise 2 years. So overall, yes, it's quite a mixed space in terms of what, where, which assets. And it's interesting when we look at the subdivision across these assets across fund houses.
Now, when you talk about performance of some of these schemes, Prableen, a lot of them don't have a very long track record, right? Some of them are pretty old. But as you pointed out, there's been quite a lot of interest in this category over the last 2 years in particular. So how do you judge the performance?
So I think, Alex, I've shortlisted actually a couple of schemes, and that's broadly based on 4-5 parameters. Number one, I feel that a category such as hybrid is ideally meant to protect the downside. So if, as opposed to the broader markets, and I can take Nifty 50 as the, to see how markets have moved, that's the best benchmark that we have. And I think in such times, if your scheme is able to reduce the downside and able to give you protection, I think that's number one, how you choose. Second is how does the scheme perform when markets are actually in the upward movement cycle? So it should not be that you're getting downside protection, but when markets are delivering decent returns, the scheme lags. So again, upward movement becomes important. To some extent, the AUM is always tells us that there is investor confidence, although a scheme like ICICI has been so old and, alone actually holds a very, very dominant portion of the assets under management. But definitely look at the AUM. If it's not too thin, that can be a bit of concern that maybe lesser people are investing. Other than that, the fund house pedigree. And I think positioning of the different assets, Alex, that's very important. At this point, how are they positioned in Indian equity? How are they positioned in foreign equity, gold and silver? Because that is what will dictate the returns in the times to come. So I think all of these factors cumulatively help us, but downside protection, I think, remains one of the major parameters while deciding.
And you've looked at the 3-year, 5-year performance of a few schemes. Can you tell me about what you found out?
So if you're looking at, let's judge on the basis of 5 years, Alex, I have shortlisted 4 schemes, which is Quant, ICICI, Nippon, and SBI. And if we just look quickly, at each one of them, let's pick Quant. Quant, interestingly, was holding last year about 10% in commodities, but that was majorly silver. And now it's again holding about 10% in commodities, but that's primarily gold. So that change is quite visible. Its net equity allocation has gone up by roughly 16%. So that also shows that the scheme has reduced the other allocations and moved up into equity, which I think is the right move at this point, given that Indian markets valuation wise definitely look more attractive. Interestingly, even in the market cap segment. So, for example, it had a decent amount of large cap earlier, some mid caps and small caps, but the incremental allocation within Quant, Alex, has come in the large cap space, which is looking better than the other market caps at this point. So, this definitely reflects that, it is a dynamic scheme. In terms of its downside protection, if we look at the year to the January to March fall, which we saw, Nifty had fallen by roughly 14.5%. And during this time period, Alex, Quant was able to contain the losses as only negative 3.3%. So, which is roughly an 11% alpha, which was quite good. Even during the Russia-Ukraine war, a similar fall of 16% was witnessed by Nifty 50, and the scheme had fallen by roughly 4.9%. So, it's positioned itself more in gold, lesser in silver at this point. That's Quant. Next, we can talk about ICICI. ICICI, again, the largest category, fund in the category, Alex, and it's holding no silver since January of this year. So silver is totally gone from the portfolio. It was holding roughly 3% last year around this time. And gold allocation, which was only at 6% last year, has gone up to 10%. So that change is visible. And its cash and debt has also gone down by about 10%, and increase in its equity allocation as well. So that's the positioning of ICICI, which is the largest fund in the category at this point. Then comes SBI. SBI again, it underwent a lot of change, Alex, in its structuring in 2022-23. It's managed by Mr. Dinesh Balachandran, and in its own allocations, what it's doing, it's definitely reduced a bit of silver, but it is holding silver at around 3% still. Gold has gone up by a little since the beginning of this year. It's at 6.42%. Its net equity, it does hold arbitrage a bit. Its net equity has gone up to 47% from roughly 41% last year. So the net equity is gone up, and SBI is one of the fund houses, Alex, which definitely maintains a decent proportion in large, mid, and small, all the three equally. So, but the large cap allocation has again gone up over here. So that's about SBI.
And finally, Nippon, right?
Nippon, yes. SBI again, Alex, did quite a good job with its downside protection. And of course, next is Nippon. Nippon holds foreign equity as well, but like most of the schemes, it's also not been able to increase its allocation. It's holding, it has this categorization of where they classify stocks into A, B, C, and D. So they have also mentioned that, what proportion they're not going to hold in category C stocks, which are slightly higher in terms of risk. Overall, it's again one of the dynamic funds to hold. And it's got its allocation at changes again.